To unpack here, this tariff letter to Brazil was the 22nd letter the president sent to a trading partner this week, but this one was strikingly different from the others. The 50% tariff, for one, is the steepest that we've seen threatened so far against any trading partner. The president says he's also directing his U.S. trade representative to open a Section 301 investigation into unfair trade practices, specifically around digital trade. That could lead to additional tariffs down the road. But most notably, Brazil was not until now facing a reciprocal tariff from this White House. The U.S. runs a rare trade surplus with Brazil, so there is no deficit to fix here. Instead, the president said in the letter that these tariffs are explicitly for political reasons, due in part, as you mentioned, to Brazil's treatment of Bolsonaro, which Trump called a witch hunt. And he also blamed what he called insidious attacks on free elections and the free speech rights of Americans. And the other thing to keep in mind with this one, guys, is just how close Brazil has been getting with China. Beijing has been investing heavily in Brazil as it looked to de-risk away from the U.S. It's now Brazil's largest trading partner. You can see here about 28% of Brazil's exports go to China, some 94 billion every year, versus just about 12% of exports going to the U.S. So that relationship not explicitly referenced in the letter, but we do know it's something the Trump administration has taken issue with.
Well, then you have to question how this improves the relationship. And in fact, President Da Silva, I know, is threatening reciprocal tariffs. Does that matter? And which industries does that hit, Megan?
He's holding firm. He promised to put the same level of tariffs in place that the U.S. does put in place. So if the U.S. goes with 50%, he's saying Brazil would go with 50% as well. It's not a huge amount of trade for the U.S. About 1.3% of all U.S. imports come from Brazil, but there are specific industries. Think about coffee, think about some produce, think about some oil, gas, metals as well that could be impacted there. But you're right to ask the question of, does this ultimately, or could it ultimately drive Brazil even closer to China? And it could, because Brazil has to have somebody buy their level of goods. We're still buying 12% of them. So if the U.S. stops buying it, China has the space there to just pick up the slack and buy even more.
They have no leverage. 1% is not going to scare anyone at this point. I thought it was interesting. How many reasons do we have for tariffs at this point? Have you calculated all of them yet, Megan? This is a new one, and I'm not saying I disagree with it, because
but as a motivation for a tariff.
I'm not saying. I think that you can use whatever means necessary if we've got bad actors around the globe. If it's fentanyl, that's one thing. If it's bringing back, manufacturing, that's another thing. If it's global,
whose definition of a bad actor? For instance, if China said we're going to withhold magnets because we don't like the way you're treating James Comey, would that be justified?
That's fine. They can do whatever they want. The countries can do it. You have a doubt who's wearing a white hat around the planet? I don't.
I mean, it's every
company.
They are, but I don't. America first. I don't have any problem thinking that we're trying to do the right thing. That's, maybe that's jingoistic or whatever, but I'm not going to worry about whether China's going to not like what we ask. Maybe the Uyghurs are worried about James Comey. What, Megan?
What I was going to say, what's so interesting about this one, I haven't counted all of the reasons, the different reasons for tariffs, but this is explicitly using them for political goals rather than economic ones. It's not the very first time. I'll flag that, remember in versus Colombia back in February, he wanted Colombia to accept more U.S. deportees and threaten tariffs there. They never went into place. This is the most similar to that because it is explicitly political. You could add fentanyl in there too, although at least that one's about the movement of goods. But that's key because it really gets to the legal justification here. Remember, these tariffs are supposed to be in place because the president says trade deficits pose a national emergency. If we're getting away from trade deficits, we're getting away from that legal justification, and these are much more likely to be challenged in court. That's if they do take effect. Maybe this is more about negotiations. We'll have to see.
The executive, in the past, there's a wide latitude for what the president himself or herself can do with tariffs. Right. I know that the argument was made that, well, wait a second, fentanyl's an emergency, so you're doing all these different, and even whether the trade deficit suddenly has become an emergency, but they still get wide latitude, probably, in the courts. Don't you think?
They do. Yeah, and we'll see though if you know what's going on in Brazil and domestic politics there. If courts agree that that's a national emergency for the U.S., that might be the argument that they make. Or maybe in the Section 301 they find other unfair trade practices that are then more legally durable.
The other thing is
other than a national emergency, there's a lot of other.
We have a trade surplus with Brazil.
Right.
Last year. I mean, they're not taking advantage of that. That's not the reason
that they're saying.
Right.
Megan, thank you very much for weighing in this morning. Appreciate
We have
that.
a trade surplus with the UK too, or something. And we did a deal with the UK. That's not the reason.
No. Yeah. No,
That's the point. That's a lot of reasons. A lot of reasons. Tariffs that we're told. Coming up, the S&P up about 25% from its April low. I think strategists, Ryan Dietrich told us what a great month July usually is. He's going to tell us why he thinks the summer rally will continue later. Delta Airlines set to report. We're going to bring you the numbers and an exclusive interview with CEO Ed Bastian. Squawk Box will be right back.
Elon Musk's XAI unveiled the latest version of its AI chatbot, Grok, last night. Musk posted on X moments ago that Grok would be coming to Tesla vehicles very soon, next week at the latest. which should be interesting because not all the bugs are worked out. There's some news about Grok running rampant on X and trying to be pulled back in with anti-Semitism and the likes. But right now, Tesla shares up 0.85% on the pre-trade. We'll watch that.
Lead story. Our friend, and
Linda
former colleague,
Yaccarino, he's gone. 2 years. She lasted 2 years.
I want to know what
That's about a year longer than I thought she would.
I want to know the story behind the story, though, which will come out, I'm sure. Our next guest is optimistic the summer rally has room to run. Joining us now, Ryan Dietrich, Carson Group Chief Market Strategist. How would you characterize the way you analyze the stock market? You use fundamentals, technicals, a combination of both, and then you have a gut feeling for what's going to happen? What's most important?
That's probably right. There is a combo there. First off, thanks for having me in person. It's always fun to be in New York, so thank you. Combination. I'm an old school market technician. End of the day, you kind of what's the message of the market?
Momentum.
Yeah, momentum, relative strength, sentiment. I know I was on with you April 9th that morning when things were really dour. I said maybe we're near a low. But obviously, that was a low looking back. And one thing, Joe, today's 3 months off that, right? 3 months ago was the lows. So you look at history, up 25% the last 3 months. So you say to yourself, what does that mean? 5 times in history, we've been up 25% or more in a 3-month period like we're going to be today. Off the 75 lows, off the 82 lows, off of the 2009 lows, 2020 lows, and then 1999 was in there. You look at those 5 times, guys, the stock market did really well 6 months, a year later. I know 99 was kind of late in the cycle, but the reality is this much strength, this quickly, history would say that's a ball under the water, you let it go. There's still momentum, and that's the key word, I think.
And would you say 10 straight Julys? The last 10 years, July has been positive.
The S&P has been higher 10 straight Julys, which is a little trivia. It's actually the second best month on average. November is up more, but nonetheless, July's up 10 in a row. One more could tie the all-time record. And when you look at kind of all the stuff you've been talking about, the earnings start up soon, maybe we get better inflation data. We think this summer rally can continue. We're probably going to have a higher July. Yes, then you have August and September, maybe well-deserved break. But the reality is this is a broad-based global bull market and one that we don't think is slowing down anytime soon.
Better inflation data.
Yeah, and I know a lot of guests come on talking about tariffs, believe me, and trust me, but then let's peel back that onion for a second. Why, as every guest probably mentioned for 2 years now, shelter has been very stubborn, rent's been stubborn in the last 2 months, that's starting to crack. So maybe you get higher inflation because of tariffs, but the shelter parts may be improving and maybe they offset each other.
Energy.
Mm-hmm. Yeah,
energy
could be
offset.
Nice. Mm-hmm. Yeah.
As well. Okay, so we came back 25%, but we were down we were down over 20, right?
Right.
So we're even. Is it a year where we're going to be up double digits?
Mm-hmm. We think so. Today the Carson Group is releasing our mid-year outlook, and we think the S&P.
That's today.
Today. How about that? Isn't that neat the way that worked?
And you're here like telling people, or you didn't come just to come up front?
No, it just kind of randomly worked out that way. But we're here, and we came into this year saying a 12 to 15% total return this year. We never lowered it. A lot of people lowered it and raised it. We've stayed with that the whole time, so we're still there. And we do think there's still some gains coming. And again, what happened this year? We know the rest of the globe led. The U.S. lagged. We think the U.S. is going to take back the baton and probably do a little better. One more for the golfers out there. The sweet spot when you swing and hit it perfectly. That's great. When the S&P is up between 5 and 10% at the middle of the year, like right now, so in this sweet spot, not up a ton, but not doing poorly. The rest of the year is higher 13 out of 15 times with better than average return. So we're in that sweet spot where, again, things are always worries, but things are good.
How do you factor in right now investor sentiment?
Yeah.
ETF inflows are kind of neutral.
Yeah, I think it's the best way to put it, kind of neutral. Yes, there are certain pockets of optimism, but when you look at the big institutions, hedge funds, they have really missed this rally. They're still net short overall. There's some pockets of optimism. We're not seeing huge flows. We know the VIX, but then you've got the little complacency in options market a little bit. But I'll tell you, when I travel the country and get to present and talk to people, I never get the question, hey, how high is this going to go? How good are things? We're just not seeing that. So big picture, I don't think we're anywhere near a major peak because of market sentiment.
So where were you at the beginning of the year on the S&P?
Yeah, well, we said between 12 and 15%.
So what's that come out
to?
Right.
That's a very good question. It's another 5 or 6% away from here, 7% away from here.
Right, because we're 62, 63 right now on the S&P. We did what you were saying. We had someone that we know was at 5,600. And then raised the target to 6,300. So that's like, okay, I was completely wrong. And now the market's at 62, 63. How about 6,300? I'll give it a number exactly where it is right now, which gives you absolutely no help with what to do with your money.
Exactly. Unfortunately, we saw a lot of people panic in April because of the 10% drop after Liberation Day. Yes, that wasn't fun, but I know a lot of people pointed this out. Credit markets hung in there, right? Junk bonds, high yield actually didn't do as poorly as you would have thought if the end of the world was coming.
Ryan, we said,
And
you
that
know,
was good.
the market entered the year after 3 straight big years.
Right.
22 or 23 times earnings. There are a lot of reasons to think that maybe a nice pause that refreshes would be good. Who knew that something so, horrifying to most people, that a trade war, tariffs, I mean, hair on fire all across financial news media, that gave us the excuse to flush out the weak hands, and here we are again. So that was it?
Exactly. We're up 20% 2 years in a row. Historically, the first quarter of a post-election year is really weak. The first quarter after a 20% gain isn't all that strong.
Are you sure that this trade war couldn't get out of hand? And Trump this time is saying, and he's taken all the criticism with the taco trade and all that stuff.
Right.
So maybe, and now the market's back, so he's got more wiggle room for what he wants to do. That could embolden him to really start a trade war. Are you sure a bigger sell-off isn't coming?
Well, of course, we're never sure, but no, we're pretty comfortable that that's not the case because the market's telling us, right? And what's leading?
Bond market might be.
Well, the credit markets aren't. Look at the credit markets, though. Credit markets are still really comfortable.
They're great.
The industrial's leading, financials leading, tech leading.
Right.
Those are the cyclicals. So that's what's telling us. And we're going to follow that.
The hand wringers panicked at 4.5 or 4.6 on the 10-year.
But the dollar, Joe.
The dollar has been overvalued.
That's
the
the
dollar.
thing that they can point to.
Other people argue the dollar's been overvalued for the past 3 years and hit levels in 23. People said this is unsustainable. Does anyone know the correct value, the best value for the dollar? I don't know what it is. Versus,
Plus it's relative.
you know
to
the
100
best global average temperature. What's the best one for us? Lower. Here. Ryan, thank you. Cincinnati.
Flew up to Cincinnati.
Where's your office?
Today. Well, we're based in Omaha.
You are, but you're from
based in
Cincinnati,
Omaha, but Cincinnati. So fly home tomorrow, having fun in your city, and it's always great to be here in person. I love
Great
it.
to have
Smart investors in Omaha.
You got a house in Cincinnati?
Sure do.
Where?
Anderson, east side of town.
Of course.
The nice.
I think you're saying next
the
guy.
spot. Is that the other side of the track?
I'm from Pete Rose, that area,
The west side.
west side.
Yeah, that's right.
Yeah.
I heard the west side is the best side.
Deplorable. Terrible. The west is best. You're all right.
Coming up, Linda Yaccarino, we were just talking about her. The CEO of X is now the ex-CEO of X. Details after the break. Later, Senator Rand Paul joins us to talk about President Trump's tariffs and the impact of the mega bill on the deficit squawk box. We'll be right back.
Washboardjims.com.
Linda Yaccarino is stepping down as CEO of Elon Musk's X, formerly known as Twitter. She didn't say why she's leaving, but a source told NBC News her exit had been in the works for more than a week. A week is pretty short.
It's a week.
Yeah.
Yeah, this was expected. It's been.
Yaccarino previously headed the global advertising business at our parent company, NBC Universal, before Musk hired her away in May of 2023. Musk posted in response to her departure, "Thank you for your contributions." Short, sweet, succinct, as a post on X is supposed to be.
She said something about a lot of the advertisers have come back and I've accomplished a lot of what I wanted to do. But then they immediately, I think I saw it somewhere, maybe it was drugs. I don't know why I still look at drugs, but I do just to see, because there's sometimes, but they're just, but someone I did say that she's had some reputational damage. They said that she was a very well thought of media advertising executive at NBC. Took a shot at this. Only 2 years, and I'm sure but you know what? Knowing her, she's so talented. She'll land on her feet, and I would not. You know, they like to look at the FMD.
I think this is good for her reputation. I think this had to do more with the merger with XAI.
Exactly.
So once you're subsumed into a much larger, fast-growing, everyone loves X and AI right now in terms of where they're going to put capital. Basically X became, or what was Twitter, became a lot less important. So I think the merger had a lot to do with it, coupled with the fact that she was 2 years banging her head against the wall. And she did successfully bring advertisers back. I don't think they're quite where they were before the acquisition by Musk, but they made a lot of headway, especially given that he would say something or do something that she would then have to clean up.
Exactly, from the very beginning.
Completely at odds with what she was trying to accomplish. So if you're trying to woo them back, and then he's like, and nobody cares, they'll get lost.
Yeah,
which
is a nice way of saying what he actually said.
That was before
I just don't want to be canceled, so that's why. But I think what's interesting is if you are able to deal with that kind of a founder in that kind of a situation. I mean, not that he founded X, but that's his baby. Yeah, he owns it. It's his. If you're able to navigate Elon Musk in that environment, who doesn't want you to come in and clean and tackle a big challenge? Any company that's in a big challenge would be lucky to have her.
She got overruled with this new person as well, the new finance chief
that Musk brought in,
and was hired, was supported by Musk and replaced Yaccarino's person, previous head of that.
It's all about AI now. It's all about AI.
Right.
It's gone way beyond advertising.
But it looks like the writing might have been on the wall longer than a week.
Yeah, absolutely. Meanwhile, Delta Airlines just reporting, and Bill LeBeau joins us now with the numbers. Bill.
Robert, take a look at shares of Delta, the company reporting Q2 results that are better than expected. Though remember, the estimates have come down quite a bit over the last several weeks. For the quarter, Delta earned $2.10 adjusted. That's better than the estimate of $2.05. Revenue coming in at $15.51 billion, a little better than the estimate of $15.48 billion. The metrics in the second quarter, year over year, listen to the comparison here. Revenue per seat mile down 3% compared to Q2 of 24. Cost per seat mile up 2.7% compared to the second quarter of last year. Q2 pre-tax margin of 11.6%. It was 13% last year. And free cash flow of $733 million. That compares to $1.24 billion in Q2 of last year. Here's where you see the difference in the business for Delta and the challenge really for all of the airlines in the second quarter, and it'll be the same challenge in the third quarter. Premium revenue, people are still paying up for the higher class classification seating for those tickets. Premium revenue up 5% in the second quarter of 2025, excuse me. Main cabin revenue down 5% compared to Q2 of last year. It's clear. The mass market is where you see the softness in pricing and the softness in demand. Full year guidance and Q3 guidance. Let's start first with Q3. EPS of $1.25 to $1.75. The street's at $1.31. Revenue expected to be 0, basically flat to up 4%, versus the street expecting an increase of 1.4% with a Q3 operating margin guide of 9 to 11%. The street right now is expecting 9.1%. And then there's the full year guidance. Remember, they pulled it after the first quarter, because of the uncertainty of the trade wars and a lot of what was happening in terms of the policies from the Trump administration and what might happen with the economy. Now they've reinstated it, coming in at 525 to 625 for the full year. The Street's at 539. I should point out, guys, they gave guidance in January of at least 735. So this is dramatically lower than where they were expecting the full year earnings to be back in January. Free cash flow remains for the full year an estimate of bringing in $3 to $4 billion. Don't forget, we're going to be talking with Ed Bastian, CEO of Delta. That's coming up a little after 7 o'clock. Guys, one thing I should point out, there is no specific mention about capacity for the third quarter and the second half of this year. So we'll talk with Ed about that. It's clear there's probably going to be some capacity coming out after the summer. The company has said that all along. How much? We'll talk with Ed about that, and we'll also talk about the pricing that is out in the market right now. Guys, we'll send it back to you.
Yeah, Phil, just one question. You know, this tale of two economies that we're seeing in the consumer economy, especially in travel. You mentioned the front of the bus here, the premium seats, that revenue up 5%,
Yes.
the main cabin down 5%. I would assume that Delta makes most of its margin from those premium seats. Can they continue to make up for that decline in main cabin?
Well, certainly that will help. And obviously they also have other revenue sources. Look, the remuneration they get from Amex and people using their American Express card for Delta purchases. I don't have the exact number in front of me, but it was a strong quarter once again. That has always been a revenue driver for Delta. Yeah, I think that there is an element of the premium cabin, if you will, or the premium experience people are willing to pay for. That certainly will help offset some of the weakness in the main cabin. But this is the question for the industry right now. Capacity is going to have to come out in some fashion. And it's not simply to say, well, it'll come off with the lower priced carriers. They're going to bring back the seats that are out there. I think everybody's going to probably be bringing in capacity in the third quarter after the summer months, after the big surge in travel that we usually see. That's where we're likely to see the reduction in capacity. And again, we'll talk with Ed about that in about a half hour.
All right, Phil, we're going to look forward to that. Meanwhile, coming up, a new read on the consumer from the Bank of America Institute. But first, as we head to break, here's a look at yesterday's S&P 500 winners and the losers.
happy with it.
Good morning and welcome back to Squawk Box, live from the NASDAQ market site in Times Square. There's the futures this morning, giving back a little of yesterday's gains. Nothing too significant yet, and we've got a couple of hours still, 3 hours almost, till the opening bell.
Shares of WK Kellogg are soaring following a Wall Street Journal report that says the chocolate maker Ferrero is close to a roughly $3 billion deal to buy the cereal company. WK Kellogg makes cereals like Fruit Loops, Special K, Frosted Flakes, all the good stuff. It was spun off into a standalone company in 2023, and while Kellanova kept the snack brand portfolio, including Pringles and Cheez-Its. The family-owned Ferrero Rocher is the Italian candy maker behind its namesake. It's the circular hazelnut chocolates as well as Nutella. That's one of my favorites. And candy brands that include Butterfinger, Baby Ruth. They also own Tic Tacs. The Journal says the deal could be finalized as soon as this week. The Ferrero family is really interesting. They're the richest family in Italy. Gianni Ferrero is the executive chairman and the head of the family. And they've been just buying, they're the fourth largest candy maker in the world now. And as a private family, just buying every candy brand in the world. And they started in hazelnuts after World War II, and now there's a hazelnut shortage. So they're spending a lot of money out on the West Coast in California helping farmers to develop better ways of making more hazelnuts, so they can bring it to the...
What candy is?
Nutella.
Nutella is hazelnut.
And Ferrero Rocher, the little nut balls.
Yeah, nut balls. Jesus. I love Butterfinger and Baby Ruth.
Is that your go-to? I'm a Reese's guy.
I like Reese's. Okay. I like most candy. But I was thinking about the cereal business. Everything's gonna be
RFK Jr.
Everything's gonna be canned.
RFK
like Fruit
Jr.
Loops. It's like, which one of these do I like?
And Lucky Charms. What happens to Lucky Charms?
You're not lucky anymore if you don't have the green shamrock. You know, did you see that article the other day? Was who's really pushing back? And I don't know how you do it without M&Ms. What
green?
Where do you get it?
Where do you get it?
What is a natural?
Maybe they'll get algae. Maybe they'll
red
use
dye
algae.
is the one that is of most concern.
Probably, I'm still alive. But what is?
voting.
We're getting ready to unveil America's top state for business coming up in the 8 o'clock hour. Scott Cohn is in the mystery state. A recap of his diabolical hints. If it comes out Illinois, which people were saying yesterday, I'm gonna leave the set. Okay, because I guess this thing took place in Chicago. Or if you found a way to give Illinois the best state for business, I'm out of here. It looks like you're in Florida or Georgia now, and I would take either one of those. I'll take either one of those in an interview with either one of those governors. Cone.
I grew up in Illinois. I'm from Chicago, and I can tell you
Good place to be
that
from.
Illinois has a wide
Chicago's
variety
great.
of different landscapes and. Yeah. But I'm not going to give it. That's it. There's been a lot of interesting guesses,
What's
and
the
we're going to
sting?
keep it a mystery just a little
What's
bit
the
longer.
sting? What's
We're
the
gonna-
sting? What is the sting? What does that mean?
You'll find out, Joe. You'll find out, and it'll make perfect sense in the 8 o'clock hour when we explain our hits. So the plan is this. In the 7 o'clock hour, we will start our countdown with the runners-up, states 5, 4, 3, and 2. And those are pretty interesting this year. And then in the 8 o'clock hour, yes, we will explain what I was talking about with the hints, which I'll recap in a moment. We will tell you the top state for business. We will interview this state's governor. And you'll be able to see where your state ranks at topstates.cnbc.com. Now, the diabolical hints. The sting, as Joe mentioned, the sting. Moneymaker. Root. Hey babe. And our final diabolical hint for this morning. H-O-T-T-O-G-O, which I'm not going to sing. H-O-T-T-O-G-O.
But
What
we
does
wish you
that
would.
mean? So give you a little bit of time to mull this over. And again, lots of interesting stuff coming up this morning as we finally reveal America's top states for business.
I mean, I was just in Sea Island, my favorite place, and Georgia I love. That looks so much like some of the country down there, low country.
It looked like, to me, that looked like a Chattahoochee River yesterday. And he was on that.
Yeah.
Where, is that in?
That's in Georgia.
In North? Yeah, I'm down at
I lived in Atlanta and spent some time
The Chattahoochee.
on the Chattahoochee. So
We think Georgia.
Georgia. And Brian Kemp. That would be a good interview, Scott.
All right, we're going to see
We
you
get
in
nothing. We get nothing from him. Look at
He's getting a wrap.
Did your IFB go out? What happens when we ask you things? It's like
What? I hear you. I hear you.
it's ours.
But that's it. All you get is the hints. That's all you get.
It doesn't matter now. You can tell us now. It's the day you're doing it. It doesn't.
All right. I'll tell you at 8 o'clock.
Okay, thank you so much.
Didn't
Coming
it run
up,
down?
it's a surefire bet. The gambling industry is expanding, but not without some controversy. Contessa's going to explain next. And then in the next hour, Delta shares jumping on the quarterly results. The other major airlines also rising on the back of that. Delta CEO Ed Bastian's going to join us live with Phil LeBeau at 7:10 Eastern Time. Stay tuned for that.
worse than sweats.
In a world with no sure bets, it seems safe to say that the interest in gambling will keep growing. Contessa, the sweepstakes is back. What is that?
Well, look, we are watching the growth in the gambling landscape just morph and change around the United States. It's happening at a dramatic pace with ways to wager that go way beyond a sports book or a slot machine. For instance, you have, Joe, these sweepstakes gaming where players use virtual coins, but they can also buy in with real money to play what looks like casino games and place wagers on sports. More than a dozen states have issued cease and desist letters, and most importantly, state legislatures are taking action. 6 of them have now banned sweeps. 11 have proposed legislation to ban them, with California just this week passing a bill out of committee to ban the games. And California Attorney General Rob Bonta has just issued an opinion calling daily fantasy sports illegal gambling. The governor says he disagrees, and California Congressman Ro Khanna told me this week, this is a boneheaded move by Bonta to ban fantasy. Quote, who doesn't have a fantasy team? I just don't get it. It's mind-numbingly dumb politics given the degree young men are ditching Democrats. That's kind of an aside. Then you've got Prize Picks, Underdog, FanDuel, DraftKings, which all have daily fantasy in California. They point out to me that this is a non-binding opinion, so game on, at least for now. They're going to keep offering them. And this one really could be a game changer. The predictions markets, which is buying and selling contracts on the outcome of events. Crypto.com, Robinhood, and especially Kalshi, which is spearheading these efforts, are pushing to offer trades on sports on the predictions platform. Now, predictions are regulated by the Commodity Futures Trading Commission, the CFTC. Kalshi insists these sport wagers are legal in every state because, one, they say it's not gambling, it's predictions. And the federal agency trumps states' rights to regulate gambling. We're now waiting on decisions from federal judges in New Jersey, in Nevada, in Maryland about whether these sports trades are allowed. 34 state attorneys general have joined an amicus brief which joins the state of New Jersey trying to prevent Kalshi from operating in that state. The American Gaming Association insists this is a clear attempt to skirt state gambling laws without robust rules. Consumers get hurt, integrity in sports suffers, and the public loses confidence in both the games and the markets surrounding them. And by the way, both the NBA and the MLB have joined in this and said, we don't want predictions. We think it hurts sports integrity. But the CFTC is currently operating without a chair. Brian Contens, who's on the board of Kalshi, has been nominated, but not yet confirmed to head up that agency. And Donald Trump Jr. is a Kalshi advisor. Don't forget, I was talking earlier this week about the provision in the OBBB that would only allow gamblers to deduct 90% of their losses, 90% of their winnings. So you could actually be in a situation where you haven't made a profit, but you owe taxes anyway. And there's questions about whether this is going to force gamblers to offshore, allure them to offshore books. I actually think it benefits Kalshi and others who offer these wagers because their losses would be treated just like your stock trades. Profits and losses would be,
because it's not a gambling loss technically. What is it? What is it? It's an
investment loss. Yeah, exactly. So I think that it's possible that without legislative remedy that it boosts Kalshi. Dina Titus, the representative from Nevada, and Ro Khanna have co-sponsored a bill to get those gambling losses back to 100%. It's called the Fair Bet Act.
It's so semantic, though. It's all betting, right? Whether it's gambling, predictions, it's all the same thing.
And what the gambling industry is arguing, what 60 tribes have come together to argue is that there is a reason why the regulatory process of getting licensed to offer gambling is so onerous. It's because you want to protect people. You want to make sure that they know their customers.
Yeah, we're still beyond that.
A lot of the sweepstakes platforms, they have age, how old are you? Oh, you're not 21? Well, then you can't play. Or you're not 18, you can't play. And then you go back and say a different age from the same computer, and then you can get on the platform. Yeah. So there's questions about this. But let's talk about the prediction market, because this is really the tip of the iceberg. Wall Street Journal's Gunjan Banerjee is also a CNBC contributor and joins me now. I'm looking right now on Kalshi's homepage, Gunjan, and the trending topics, because predictions are more than just about sports, which is not a settled issue, but how high will Bitcoin get this month? 33% say 120 or above. We're getting closer. The New York City mayoral race. In what way do you think predictions and the rise of the predictions markets might give investors another data point to consider?
Thanks, Contessa. You know, after the election, everyone was wondering, were prediction markets a one-hit wonder? Because election bets really are these platforms' cash cows. But what we've seen is that these markets have really expanded and they are just so widespread. You can bet on everything from the temperature to Bitcoin. I was taking a look at Interactive Brokers platform last night, and you know, one of the most popular contracts is, will Zoran Mamdani, the Democratic Socialist candidate for mayor, will he take the seat in the mayoral election? Where will technology stocks go with Nvidia's rise towards 4 trillion? Will the Federal Reserve decrease interest rates this year? So these have become a barometer for investors and Americans to gauge everything from, you know, the economy to award shows.
And I've heard it mentioned that this could be a hedge for a lot of REITs. There's even an idea that you might go in and put money down on, will a hurricane hit the west coast of Florida, yes or no, as a kind of insurance that might be more affordable than going and getting insurance on your mansion, you know, out on Sanibel Island or something along those lines. By the way, on Polymarket, which is a global predictions market, but is not available to U.S. consumers, topping this global predictions market, the New York City mayor's race. What will the Fed do in July? And will there be a ceasefire with Hamas by July 15th? Okay, so that's Polymarket. There's a lot of interesting ways to go about this. In your opinion, when you see this, do you think that, one, you'll see more entrants into the field? Right now, it's really dominated by Polymarket overseas. Kalshi has made a lot of headlines because of its efforts to get the election betting in and to get the sports trades in.
Well, you know, the Wall Street Journal reported that Kalshi now has a $2 billion valuation and is making a push to attach itself to more and more brokerages. Like, right, we've seen these contracts, prediction contracts on Interactive Brokers. We've seen them on Robinhood. So I think we could see more brokerages launch these contracts in an effort to keep up. And let's not forget, you also have professional traders involved in these markets. You know, I reported last year that Susquehanna International Group, one of the biggest market makers on the planet, they've been trading on Kalshi. So I think you could also see more professional traders in the mix. And they might use these contracts to hedge. Though I will say, in my interviews with individual investors, a lot of them are using them to speculate, to gamble in financial markets rather than hedge.
Yeah, and I think on Kalshi, Susquehanna is actually the market maker. Like they have a partnership with Kalshi.
Yeah, and Gunjan, that's my next point. I mean, you've done a great job at the Journal covering the retail investor. And, you know, I'm sort of old school where to me investing is about valuation, is about earnings. And millennials and Gen Z, it really is this sort of borderline between meme stocks and gambling and betting. How do you see all of these things coming together? And do you think it's healthy for financial markets when you have these generations coming up? They will be the investors of tomorrow, looking at how they invest in a very different way.
So I was in Vegas over the past weekend, surrounded by slots, roulettes, the World Series of Poker, you name it. And it got me thinking a lot about this. And when I came home, I realized the casino is right here. It's right on our phones.
Stop. What happens in Vegas stays in Vegas, Gunjan.
I mean, the one thing about Vegas is that you can maybe go make a gamble on blackjack in New Jersey on your phone, or sports in almost 40 states now. What you can't do is you cannot replace the in-person experience and the energy that happens. And this is why we've seen a boost in the earnings in regional casinos, is because as people maybe think that it's out of reach to go to Las Vegas, they go to their regional casino to go see a concert, to go have a night out and whatever. And those places, and that's one of the things that especially tribes are very concerned about, because these predictions markets are in all states. If you're Hard Rock, owned by the Seminole tribe in Florida, and you have the monopoly, and all of a sudden the predictions markets are in Florida and giving people a way to wager in Florida without the state regulatory process or taking away what the tribes consider their exclusive right to offer gambling, that's a real competitive, potentially existential threat.
That's right, Contessa. I do want to point out, though, that Robinhood, the brokerage, their stock is up more than 100% this year. And that tells you a lot about how much risk people want to take in markets. Young people, young men especially, they are going to the options market more than ever before. Volumes are on track to smash another record high. They're piling into leveraged ETFs. There's more than $100 billion sitting in leveraged equity ETFs. That's one of the highest levels going back to 1993 in Morningstar data. And they're turning to prediction markets. So I think, yes, you can't replicate that in-person experience, but young men also want to gamble on their phones. And they're looking to do so in financial markets more than ever before. And in my reporting, I've seen that line really get incredibly blurry the past few years.
Gunjan, thank you so much for joining in that conversation. Really appreciate it.
Gotta go. I was gonna ask you something. Are you gonna do a story on like guys missing shots on purpose? This latest scandal.
Oh, the MLB. What they call spot betting. Spot betting.
Just pitch or
the player props have become problematic. They were especially problematic
That's what I mean.
for the
It seems so
NBA.
easy
Right?
to-
Yeah, it's concerning. But are they going to stop having player props? I don't think so. It's too lucrative for the sports books as part of the parlays.
I mentioned Pete Rose earlier, but just in passing. I mean, gambling in sports.
He was ahead of his time.
It's 7 a.m. on the East Coast, and you're watching Squawk Box on CNBC. I'm Joe Kerner, along with Contessa Brewer and Robert Frank. Becky and Andrew are off today.
So
We know that. Thank you. Analysts,
teachers,
that's why you guys and gals are here. Analysts at Lightshed Partners say Apple should consider, I don't like this story, replacing longtime CEO Tim Cook in favor of a more product-focused CEO, since his lack of products has been so bad for the company and the stock over the last 5 years. You're Steve Kovac.
Yeah, hi.
You're here. Which Lightshed person? Not Greenfield?
Walter Pychek.
Pychek.
Yeah, and so look,
Don't call him Walt either.
But he doesn't like that. I didn't know that. Actually. I call him Walter. But look, my reaction was kind of the same as yours. Like, yes, we've been talking over and over again. Apple's had a really crummy 6 months, right? There was the AI
great 6 years, crummy 6 months.
Exactly, and so we've been and look at the tenure of Cook's as CEO since 2011. Stock's up 1,400%. $2 trillion in iPhones sold, as Pychek actually mentions in his note. We go on and on and on, how he just kind of took the ball from Steve Jobs, carried it, and ran away with it. First $1 trillion company, first $2 trillion company, first $3 trillion company. Yesterday, okay, NVIDIA got to $4 trillion first, fine, fair enough. And a lot of this, what we're seeing in the weakness in stock is tariffs, right? I mean, and that is something out of his control. And like, my challenge to Walter would be
worry about tariffs and
concern about tariffs, but that you cannot deny that is part of the stock. They are the most exposed. I will also say, Tim Cook, sure, you can argue that at the beginning of this presidency, he thought the same playbook would work as it did last time. Clearly did not. Clearly Trump has a different approach to tariffs than he did in the first time, and he's less susceptible to this overtures from Tim Cook. That's totally fair to say. We get it. But I can't think of anyone else who is more capable of handling these geopolitical things. Look how he handles China. Look how he straddles all these geopolitical tensions.
He's a great operator.
He's a great operator.
He's a great operator.
The best
but
operator.
Isn't it fair to say what was the last great product that
AirPods.
Apple came out with?
But I mean,
isn't that fair?
No, that is very fair. But I mean, that's also been a criticism we've been hearing for so long. No one else has created a product
make
that's
it invalid because we've yet to see.
I'm sitting here with two iPhones. You're sitting here with what are you missing?
I'm not saying you want a flying car.
No, I'm comparing.
We don't have any yet. You want
and that's fair too.
You want a better TV? They're 90 inches.
You're comparing it when you had sort of a once in generation genius generating
you want
products.
You want better
so you look
AirPods?
at but you look at what what they generated over a certain period of time, from the Macintosh to the AirPods to the, all these things they come, and then it's basically monetizing what Steve Jobs created.
And that is totally fair. And also in this call for him to potentially step down, there's also this idea that the only part that's growing is services. And to your point, that is another brilliant thing that Tim Cook has orchestrated and put together over the last decade or so is, okay, we have 1.234 billion iPhones in the world. How do we squeeze as much revenue as we can out of that? And it works.
And you're seeing that now replicated with other companies that were known for their hardware, but then it turned out that services were
that's where the margins are, and that's why the margins have skyrocketed at Apple. I mean, that business is going bananas in a good way. The services business, it is the iPhone.
Big things on your head.
Now they had things.
How about AI? They had Siri.
So let's talk about AI. We should talk about that because that is a big thrust here. Tariffs weren't mentioned, and again, I think Cook is the best to manage that whole situation. Better than anyone else on his bench that we've talked about as potential successors. The AI front, that is an embarrassing mess. I've been covering this company since 2010. I haven't seen them really make a flub in that way. I think they have one more chance to get it right. And it's reportedly Cook has reorganized those teams that were supposed to get that new version of Siri out there and potentially even partner or license other technology that's better than what they've been able to build in-house. They've done that with Google for search. That's worked out very successfully for them. So they have another chance next year to get it right. No one is running out there ditching their iPhone for Samsung because it has some Google Gemini AI stuff.
You can't get a decent without 3 folds. How do you get a decent fold?
Without 3 folds,
with only two folds.
I mean,
it's like origami at that point.
Yeah, exactly.
4.
I want a crane.
Think about how 4 would be a game changer.
But those aren't big sellers. Those folding phones.
No,
and so we're talking about AI, and it is true. A year ago, we were sitting here, and AI was supposed to drive a super cycle of iPhones. Did not happen. We have no idea what could be a catalyst for that. That's on them to figure out. But 6 months of a crummy Apple headlines, I don't know if that's enough to call for his job. Potentially, maybe. I mean, I'm sure maybe 6 more months. They did.
So
yeah, it's an interesting conversation, but I think he might be alone on this one.
Yeah, I think you might be right.
Yeah.
There's nothing left to invent, Robert. You know that.
Well, that's what they always say until
the metaverse
comes along.
No,
and
that's
happens.
happening.
I'm curious to see what kind of hardware AI comes up with.
You want
Open AI.
How about your glasses? You'd love to be clicking.
Well, they have those. I don't
want the meta.
Those might be the meta glasses.
They might be. Let me turn it off.
Yeah.
There we go. Okay, it's off now. Steve, thank you so much. Coming up, shares of the major airlines jumping this morning after that Delta quarterly results report we just got. CEO Ed Bastian's going to join us live right after the quick break. Squawk Box coming right.
starts now.
Welcome back. Well, the Bank of America Institute has released the consumer checkpoint for the month of July. Data showing that debit and credit card spending increased 0.2% in June. Joining us for a closer look is Liz Everett-Chrisberg, the head of the Bank of America Institute. Liz, great to see you again.
Great to be here.
When we last saw you last month, you were talking about May being the first overall decline in consumer spending that we had seen in over a year. What did you see this time?
So we did see the consumer rebound in June, but on a seasonally adjusted basis, that rebound didn't offset the declines that we'd seen earlier in the quarter. So what I would say, what we would say is if you were taking the temperature of the consumer right now, they're cooling, but they are not collapsing, right? You're seeing households kind of make some decisions, manage their budget, some softness in certain areas, but overall, you can continue to say that we're still seeing some resilience.
And what I always love about this data is it's 69 million accounts, business and personal, and I always love the way you break it down by age group and generation, but also income. So let's talk about the income groups. You know, we were talking earlier about, with Phil about the airlines seeing the front of cabin, the wealthier still holding up with premium seats, but the back of the plane starting to fall off. What are you seeing in terms of this tale of two economies?
So it's interesting. I was listening to that before, and that aligns with what we're seeing. So the pullback really is predominantly with the lower income households. Higher income household spending actually accelerated 1.2% this month. And if we break it down even further, looking at services spending, interestingly, this month, services spending was down just a little bit, just down 0.1. But really, this is the first time we've seen, that's the third consecutive month that services has been down. That's the first time that's happened in a long time.
And what part of services? So is it travel? Is it restaurants?
It's discretionary, and in particular travel. So non-discretionary services, insurance, utilities, rent, those are taking a higher contribution. So households are pulling back on the discretionary travel in particular, but it's not a universal experience. So going back to what you were asking before in terms of by income group, we break down and we looked at it by spend per transaction in travel, number of transactions per month and number of households who are transacting. And what we saw was that there are some households that are pulling back completely from travel. So that's what's driving the downturn. Interestingly, that's not the same pattern across other categories of discretionary services. So if you look at restaurants, in restaurants we did see fewer households going out to eat, but the ones that were spending more per transaction and going out more often.
Well, they had to spend more because the prices have gone up.
Well, that's definitely part of it. But they're also going out more often. So again, there's this dichotomy between the spending of the higher income and the spending of lower income households. And where that makes sense, one of the other pieces of our data is looking at the after-tax wage growth, how much money people are actually bringing in. And what we saw there is higher income households accelerated again this month, third month in a row, just shy of 3% growth. Lower income households decelerated. They're still making more money, bringing home more money, but it's only up 1.6% as opposed to 1.8. So that, I think, is what's really driving the consumption.
And we've got to wrap it. I'm curious what you're seeing on credit card delinquencies, the credit card growth, particularly by generations. A lot of focus on millennials and Gen Z. Are they overusing? Are they underusing credit cards? What are you seeing there?
So I think on the generations, one of the things we're seeing is that the younger generations, in particular the generations the individuals who are just coming out of school, who's, they're hitting a more challenging labor market. But overall, in general, again, resilient is the word.
Great, Liz, thanks for joining us. Great to see you.
Great, thank you.
It's so weird. That was the word of the day for Frank today. Resiliency. Obviously don't watch Frank at 5 if you're not watching Squawk Box.
No, I'm up by then. I just have to take a break.
I always watch Frank because he's got a great name.
He does. It's confusing when I see Frank on the run, but I think resiliency was the word of the day today. It's unbelievable. Delta Airlines shares are surging after earnings. Let's get to fill a bow with a special guest, Delta Airlines CEO Ed Bastian. Hey Phil, hey Ed.
Hey Joe. Ed, thank you very much. We just had the numbers we reported about a half hour ago. You beat the street for Q2, albeit expectations have been lowered. But more importantly, you give guidance for the full year, 525 to 625. The street's at 539. But this is down substantially from what you guys expected in January of at least 735. What's changed in the last 6 months that you're looking at full year now coming in lower than where you were expecting things to be in January?
Given the level of turbulence that we have seen, whether there's geopolitical conflicts going on in multiple regions around the world, you have the impact that we've seen from the tariff battles and all the global trade wars that are being waged. There's been a big pullback over the start of the year, starting to wane a little bit, but in terms of overall corporate confidence and consumer confidence.
Let's start with the consumer. Main cabin is down 5%.
Main cabin is down 5%, and that's where you have your most price-sensitive customers. The industry is doing, I think, everything we can do. Remember, we got hit with this in the early part of the year. We weren't really in position to address it, given that we had our peak booking and our peak summer season coming up. But what you'll see post mid-August is you'll see industry capacity, particularly in the main cabin domestically, coming down significantly. Delta's doing that. I think all the other airlines are doing to some level that. We actually expect to see domestic seats in the main cabin negative starting in August.
For the industry.
For the industry and Delta.
So how much capacity, you don't say it in your report, but how much capacity, and I know this will come up on the analyst call, are you expecting to bring out in the second half of this year? Is it 2%? Is it 3%?
Well, again, on the domestic front, we're looking to be flat to down, and the growth will be on international, and the growth will also be in premium.
Internationally, Europe has been red hot over the last couple of years. But you've got a weak dollar right now that makes traveling to Europe more expensive. The headlines out of Europe when it comes to tourism are not the best. Are you noticing any impact in terms of people saying, I'm going to hold off on booking a trip over there?
We're seeing a modest impact. I wouldn't say a significant impact. It still will be a very, very good summer. We grew capacity yet again this summer, as several other airlines have as well. Again, I think the sensitivity is again more in the main cabin, in the price-sensitive parts of the airplane. The premium cabins continue to do very, very well. We're seeing a little bit of reduction of inbound coming from Europe into the U.S., but that's only 20% of our mix. So to the extent we have some reductions, we can offset that with more Americans going in. And just as you mentioned, the currency making it more expensive for Americans to go. Actually, when those inbounds come in, they're more valuable to us as well. So overall, it's going to be a really strong summer for us in the transatlantic. The thing to me that's actually even more interesting is you look, once you get past the peak into the fall, those bookings, while it's early, look really strong and really positive. And I think people are looking at, I'm going to avoid going to Europe at the height of the height when all of the, whether it's weather or all the tourism activities are going on. There's a lot more flexibility people have. You have different generations of people traveling, whether it's boomers or other people that didn't get the chance that are still trying to get caught up to where they'd like to be in their life. And so I think you're going to see a seasonal shift in patterns for international. So international is still our future. It's still where we're going. But on balance, we're very happy with where we sit there.
We were in Paris and we talked with Sean Duffy, the Secretary of Transportation. And since the bill has passed, he's going to get at least, I think, $13.5 billion, $13.5 billion to begin work on air traffic control.
Yep.
And we were with you in Washington when he announced plans for a complete overhaul. He needs a lot more than that $12.5 billion. Do you think he gets it?
He needs to get it. And we all need to continue to stay very focused in ensuring he gets it. And I think the legislators have indicated that they will, and they're willing to provide it. I think there's a question of how much you can give on the front end. $12 billion is a lot of money to get started with, but I think once they start showing progress, it's going to be much easier to go back a second time and start to put the bigger picture together to see what the real need is going to be.
Robert Frank has a question for you. Ed, Robert, go ahead.
Ed, good to see you. So I want to ask you about one of your subsidiaries, basically Wheels Up, which of course Delta gained control of back in 2023 as that company was going through some struggles. You know, they had a money-losing year last year. They were losing about $100 million in the first quarter. What do you see as the path forward for that business? And as a Delta shareholder, why should we continue to own it?
Well, thanks, Robert. We stepped into the situation. It was in pretty dire shape when we and a couple of our investors went in and acquired the asset. We said at the time it's going to take a number of years before we get the operations turned around, get it stabilized. We're doing that. We've got about 20 Delta leaders over at Wheels Up in various parts of the business. We're seeing some meaningful improvements. We're seeing penetration into corporate segments which is one of the main things that we brought to the airline on the commercial side. And ultimately, this will be the first time you're going to have a commercial airline having a private option available at scale, embedded within our premium cabin. Premium, and I heard you talking earlier, the two economies we're seeing. Premium is the growth aspect. Well, Wheels Up is the ultimate premium for air travel, and that's what we're building towards.
Quickly, Ed, we're up against a deadline here, but corporate travel. You mentioned that it's changed since the beginning of the year. What's the outlook right now?
Well, I'm optimistic as we look forward. There's two quick things here. One, you've got a lot more clarity today than we had 6 months ago when the administration came into office. You have the Reconciliation Act passed. You have clarity and certainty around tax policy. You're seeing these trade deals getting negotiated. You're starting to get some indication and some sense for where they're all going to land and end. We didn't have any of that just as early as 90 days ago when we were giving guidance, is why we pulled the full year. The second thing that we have is we have a lot more industry, we call it consolidation, but rationalization happening on the capacity, the seats we were talking about earlier. That's going to firm up pricing. So we have the industry working hard on supply because the bottom half of our industry is continuing to lose a lot of money. Not Delta, but the low fare carriers are losing a lot of money. They've got to fix that. And you have, at the macro level, you have a lot more confidence and clarity going into the future. So I think we're inflecting into a pretty good point, and I think the second half of the year could get us back on track to where we started the year originally.
Ed Bastian, CEO of Delta, thank you. On a day where they beat on the top and the bottom line, albeit on lower expectations. Guys, we'll send it back to you.
All right, thank you very much for that, Phil. Great interview. Coming up, where's Scott Cohn? He's counting down the top states for business, and we're going to get that in just a few minutes. Squawk Box, live from NASDAQ MarketSite in Times Square, and we return in just a moment. All right, today is the big day. We reveal America's top states for business. It's our 19th year. CNBC's Scott Cohn is in the mystery top state, but is not yet going to reveal where it is. So first, I want to know what the runners-up are, Scott.
We will tell you that. Yeah, up until now, Contessa, if you had guessed where I am, America's top state for business, you theoretically had a 1 in 50 chance of being correct. So we're about to narrow that down just a little bit. A reminder of how we do this. There are 10 categories of competitiveness, 135 metrics for a total of 2,500 possible points. And the states with the most points are America's top states for business. So, for 2025, let the countdown begin.
State number 5, Ohio, the Buckeye State, makes our top 5 for the first time with America's best infrastructure and the second lowest cost of doing business. 142 million people live within a day's drive from Ohio. No state offers better access, but not enough skilled workers are coming to Ohio. That hurts in the workforce category. Number 4, Virginia, the Old Dominion. Our top state from last year is still a business powerhouse, tops for education and second for infrastructure. But all that business might is still no match for the mighty budget cuts coming from across the Potomac, not to mention the tariffs, dropping Virginia to 14th for economy. State number 3, Florida, the Sunshine State, with America's top economy for the 3rd year in a row and the second best workforce as people flock there. Florida has made some headway in its insurance crisis, but it's still expensive, America's 3rd highest cost of living. Our top states runner-up, Texas, the Lone Star State, with America's top workforce, the 2nd best economy, technology and innovation, and access to capital. But with high crime, poor health care, and a lack of basic legal protections, Texas ranks 49th for quality of life.
And of course, our thoughts with the people of Texas. We spent a lot of time there over the years in America's top states for business. So the plan next hour, we will reveal where I am, America's top state for business. We will speak with this state's governor, and then you'll be able to see where your state ranks. Read all about our study at topstates.cnbc.com. Guys?
You know, Scott, I was really interested in your coverage this year, how much you're focusing on the issue of insurance costs and insurance coverage. I thought, you just pointed out in Florida, the legislature has come together and tried to solve some of the big systematic problems for insurance in Florida, but it hasn't solved the problem yet. And not all of it is climate related. Talk to me a little bit about how you're factoring that in when you look at the cost of doing business in these states.
Yeah, so you're right, and I know that you know this territory very well, Contessa. Insurance costs are up. Florida has their increases have leveled off. A lot of what they've done involved tort reform and curbing lawsuits against insurance companies, and that seems to be bringing some insurance companies back. But Florida still has the highest homeowners insurance rates in the nation. So we factor that homeowners insurance into cost of living. We also factor commercial insurance into the cost of doing business because there's a crisis there as well. It is a big deal. I live in California, and I experienced some of this firsthand as well. It really does impact the whole proposition of home ownership. It affects business costs, and it affects where companies are deciding to locate as they try and attract the best possible workforce.
And you were seeing that in Texas, in Louisiana, in New York, New Jersey, Illinois as well. Scott, thank you so much. We're very excited for next hour when we finally get to the big reveal. 2025's top state for business.
Coming up next, tariffs, the Fed, and earnings. We'll get into the markets and the economy with Rockefeller Capital Management CEO Greg Fleming. Squawk Box coming right back.
answer innovation.
Well, let's talk about markets, all of them, tariffs, the Fed, and much more with Greg Fleming, President and CEO of Rockefeller Capital Management. Rockefeller. Yeah, that'd be a lot of money there at this point. Right, Greg?
It's also an incredible name.
No, broad shoulders, though. You got a lot of responsibility.
Yes.
Former president of Morgan Stanley Wealth Management. You were huge at Merrill and played a big role in maybe salvaging what was left of Merrill in 2008. Now it's flourishing again. So
yes.
You've had
a great deal for Bank of America. Looking back,
great deal for Bank of America. You have a storied career and probably know how to analyze this stuff as well as anyone. Are you?
Thank you.
You feeling good?
Yes, I'm feeling generally good. I think what the American economy has shown in the last 3 or 4 months, the word I'm using is resilience. There's still a tremendous amount of resilience across the economy. There has been a lot of uncertainty, and there remains some uncertainty. Some of that has settled, and markets have reacted to that. But I think the economy is still hanging in there.
There's tailwinds. There's a headwind, but if you were doing a Ben Franklin close, you know how to do that? Pros and cons, you add them up and decide how to make a decision. Ben Franklin was pretty smart.
Very smart.
Very smart.
Many great quotations he had.
Yes. He did. So now even with the bill that was just passed, companies know tax rates are not going up. They know they can do 100% expensing of equipment.
That's a big thing.
I can give you a lot more if you want.
Yeah.
There's deregulation. There's
AI. You and I have talked about AI.
AI.
You heard about Grok last night.
Well, I don't. Grok. I can't get the real story on Grok.
The 44% on that test that they built,
right.
Which was more than they were even anticipating.
So, how the tariffs right now? August 1st, we'll see. I don't know, but do the tariff uncertainty, does that on the Ben Franklin close, does that get worth 10 other things, or why has it been so front and center?
Well, you gave a good list, Joe, of things that have been settled. So better or worse, tailwinds. The bill, the budget is settled. It's behind us. There are positives and negatives in it, but it's settled and it's behind us, and there's certainty there. On the tariff side, there's certainly more certainty than there was in April. We've pulled back a whole bunch of uncertainty into the equation now. But businesses are also, I think, a little calmer about what that's going to bring. You've had several months of tariff revenue of 25 billion, 30 billion. So you're seeing the pricing effect start to work its way through. I don't think it's really yet impacted consumer behavior in a big way, and we still have to worry about the inflationary effect.
Do we?
Well, it's and it may be that along the value chain, different entities eat different pieces, and the consumer only gets so much at the end.
Lodging collapse, all the inflation in that part of, you got energy prices. I can get under $3 on gas,
and those are all huge positives. I do think the Fed will
for inflation.
And I think because of that, but even with those positives, the Fed is going to wait, and I think they should, because the thing that they need to avoid most, they don't want to start to deal with an economy that's hanging in there, cutting rates. And then have inflation come later. They need to avoid that word stagflation, which you and I have to go a long way back to worry about stagflation. So for them, the most important thing is to make sure when they start to move on an economy that's got tailwinds, and you just laid out a whole bunch of them, but some weakness, when they start to move on that, they want to make sure that they're not going to 3-6 months later start to see inflation with more momentum than anybody anticipates now, even though your points are fair.
Well,
so far, the data says it's not there.
Now, the market could sell off at any time. I'm not saying that that's not possible. But at this point, both the bond market and the stock market are saying that these headwinds do not outweigh the tailwind.
I think that's true. And I also think that those markets are looking at some of the things that are unique to this time in history. I mean, AI is going to have a major impact on every business in every industry over the next 5 or 10 years. Does it boost productivity? They've got, I think, when they look at the deficit reduction that they're anticipating moving forward, Besson said this when he came into office, a lot of it was going to be over higher growth driven by AI and the productivity that AI could bring. That might happen. We'll see. that's still in front of us too.
And you guys specialize in the high net worth investor. And in the beginning of the year, we saw high net worth investors and family offices take money a little bit out of, or certainly not putting more money into private equity. They're moving out of sort of alternatives and into publicly traded stocks. There were certainly buyers in early April. What are you seeing right now in terms of where the wealthy are allocating?
Well, you're right, Robert. And retail did, more broadly retail, and then high net worth and family offices has stepped in along the way here in the weakness in the public markets. And that's part of what's caused the market to rally. I think that high net worth, ultra high net worth family offices, they continue to be, with us, we work on a long-term plan and they stay with it. And they've done that. And one of the things that, that I've been saying for a while, there was going to be some adjustment here. The American market was up over 50% in the last 2 years. The last time that happened was 1998 and 1999. U.S. Market capitalization was 70% of world market capitalization at the end of last year. So no matter what happened this year, tariffs, there's a new administration that comes in, there was going to be some pivot from that. There are other places in the world that investments should be made. So there was going to be some adjustment. It doesn't mean that American exceptionalism is over. It just went pretty far at 70%.
So it's not like they're bailing out of the U.S. market. They were just adding a little bit to sort of rebalance, maybe adding a little bit of Europe, maybe adding a little bit of Asia.
100%. I think that's more accurate than the notion that family offices, high net worth, or even retail investors more broadly are bailing out of the U.S. market. The evidence just isn't there.
Bond market? Wouldn't you see something there? Isn't that a good canary in the coal mine?
Has always been through your career and mine, the bond market. And I think that, look, having said that, Joe, the one thing that you and I have spent a lot of time talking about over the last couple of years here is the deficits are still too high as a percentage of GDP, particularly in an almost full employment economy. And it would have been nice to see more done on the spending side.
How hard is that to do, though?
Very hard.
Look at the demagoguing of the whole Medicaid cuts. I mean, you can't. Grandma's going off the cliff again in a wheelchair.
Neither party has been able to or willing to come.
But if we're at 17% revenue of GDP and we're at 25 or 24% spending,
those are the numbers exactly.
We know what we need to do.
Well, and interesting.
But we can't do it.
But in this whole, and Joe, in this whole budget process, there's been a lot of focus on extending the tax rates. But in reality, the issue, as you just said, is spending as a percentage of GDP. And remember, the numbers that I've used in the post-1945 world, revenues as a percentage of GDP for that entire time through now were 17%,
right,
and spending was 19%.
Right.
In the last 5 years, revenues as a percentage of GDP are 17% again. So it's not like we're not collecting the same level of taxes as a percentage of GDP. And spending has been 25, 6, 7%. So nobody's put the spending genie back in the bottle, and that is the issue with the budget.
For the Fed to be right, you just have to assume that the inflation part of the stagflation is more worrisome than the stag part, because I'd like to be out ahead of the stag part, and they're not. And I worry that they're not. If tariffs are going to cost, sorry interrupting you, but if tariffs are going to cost something, if it's uncertainty and corporations can't plan and consumers, are worried, none of those things cause inflation. All those things cause a slowdown.
Look, that's what you just laid out is a very logical argument, and this is a very tricky balancing that they're doing. If I were them, though, I would wait and make sure that you don't end up with both problems.
Right, but they still got the Volcker, every Volcker, and they still got look how they got burned with inflation a couple of years ago.
They did. Remember that was transitory inflation?
Now the muscle memory is inflation.
Joe, they were way off on that. The notion of transitory inflation.
Remember? Again, the same way.
They could be, and the data may come back and say that they should have been faster and more aggressive on the weakness side, because inflation doesn't materialize.
It would help our debt service too, Greg.
It would. There's no question. But we also haven't seen tariffs of this level really ever.
No, but we still haven't seen them.
We haven't seen them on the pricing side. You're right. We haven't seen it yet. But because we haven't seen it, and it's a new experiment, I'd let the experiment play itself out a little bit more if I was in their shoes, which I think they're doing. And look, I've been as hard on them as you have at different points in time. The transitory inflation they totally missed, and then they were running to catch up. So here, I do think waiting and making sure that you're not going to have both problems, that
Right.
word stagflation is the pragmatic
The
course.
one other thing, Greg, that I think gets left, there is a lot of revenue coming in from the tariffs, and people say, well, it's a tax. Okay, I admit that, it's a tax, but these are the same people that wanted to raise the corporate tax anyway.
Yeah.
So if you're getting a tax through tariffs, which some of it they're eating, some of it they're not.
Yeah, the taxes on different parties along the way, too.
Maybe
It could be on
I think
producers, companies, and consumers.
But I guess the argument is it's a regressive
Yeah.
tax, is what the argument is. But I mean, people want to tax corporations. They're raising hundreds of billions of dollars.
Because one can afford it and one can't. That's the argument.
But the corporations are eating most of it.
But
right?
they
don't
have-
pass along all of it because they're scared. Trump's saying, do not pass it along
Yeah.
to consumers.
But Joe, they have baked it in. I think they've got $3 trillion in tariff revenue over the next 10 years. So they're assuming it settles at about $300 billion
That's
a
not
year.
in the CBO numbers, though, because they can't be
But I think it's
included.
in the Trump plan numbers. I think.
Oh, yeah.
So 300 billion a year is where they think it's going to settle. That's how much they think they're going to take in, which suggests that the average tariff will end up, somewhere between
20, yeah.
maybe mid-teens.
Yeah.
Yeah. If you're going to collect 300 billion, it's got to be there.
It's a great university, too, Rockefeller.
It is. And there have been, I think, 28 Nobel Prizes in science
My
and
teacher,
medicine.
really was my idol all through grad school, David Baltimore, Rockefeller. And he was president of Rockefeller University, I think. for a
Yes, he
while.
was. Yes.
About that, yeah. Won the Nobel Prize when he was 37.
That family has done so
A real
much.
Nobel Prize, not an Obama.
It's a great family, the Rockefeller family.
What they've done in the arts, in medicine, in science, in national parks, in this country and around the world, they started a hospital in Beijing over a century ago.
Yeah.
That's still there today. That's part of Peking University today,
Yeah.
and it's one of the finest hospitals in China today. Started by the Rockefeller family.
And they handed you the reins.
Yes.
That's gratifying.
I treat that very
You do.
carefully.
Greg, we've known each other a long time. Good to have you.
Thanks so much, Joe. Great to
Squawk Box will be right back.
changes in President Trump's big, beautiful bill could lead to a boom in private jet sales. Squawk Box. We'll be right back.
And make it count.
The new tax law gives a big boost for private jets, allowing buyers to write off the entire purchase price immediately. Robert?
Joe was mentioning this earlier. It is known as bonus depreciation. It allows companies to write off 100% of the purchase price of all capital equipment, and that does include private jets that are used for business. Now, the new budget law brings back bonus depreciation that was originally passed in 2017, but it started to phase out. So here's what it means. The full purchase price of a private jet can be written off on your taxes in the year in which it was purchased. Now, prior to 2017, you had to write it off over several years. Now, the jet has to be used for qualified business activities. That doesn't mean that you can fly to Nantucket every weekend and count it as a business expense. It is for both new and pre-owned planes, so that's a big benefit. And even better, it's retroactive to January of this year. So even if you bought a plane, let's say a couple months ago, you can still write it off. If you bought a $10 million Gulfstream, for instance, you can deduct the entire $10 million from your taxable income. Joe, now's the chance to get your own plane. The private jet industry has been slowing a little bit after the peak demand of COVID. Brokers say they expect a spike in demand from this change starting in September. For more on how the tax bill impacts the wealthy and exactly how it works for private jets, you can sign up to my Inside Wealth newsletter. Just out now. In fact, 10 minutes ago is a brand new fresh issue. Yeah. It's like a fresh Krispy Kreme donut just out. at cnbc.com/insidewealth, cnbc.com/insidewealth.
And what if you do go to Nantucket on the weekends and it is for
You
business?
can't count it as a business expense.
But what
And
if
the
it's for
IRS,
business? What
under
if
the
you're doing
Biden
business?
What if
administration,
you're playing golf with other business people?
well, then you have to account for it, and there's a lot of gray areas like that. That said, well, I was in Nantucket because there was a golf tournament for clients.
What about this move toward everybody flying in a more exclusive? We heard Ed Bastian saying that
Yeah.
earlier, right? And I just was reading a story about how there's private plane shares, like some WhatsApp list where you can go on and.
So right during and after COVID, there was a massive influx of new people flying private. Some of it was health reasons. Some of it just figured, look, you only live once. Some of that has come out of the industry, and so we saw people who bought planes in 20 and 21 now selling them again because it costs more than they expected to operate and own and maintain and have pilots and all that stuff. But this, when we saw this in 2017 first pass, it led to a huge spike in sales, and they expect that's what will happen again.
Uber for private planes, I like it.
I don't need a Gulfstream. If I had
Cessna.
Citation 10, 50,000 feet, 600 miles an hour. That's all I would need. But you need a crew.
Yeah, well, that's why a lot of people have gone. That's why NetJets is doing so well.
That's what I mean. But you can't do it. There's no tax advantage for people with NetJets.
There is.
You can do
Absolutely.
this. You can.
Yeah, absolutely.
So it can be a part of a.
You're buying a piece, equity share of a capital equipment.
For Wheels Up too.
Well, Wheels Up is a little bit different. That's a membership model.
It's membership, not fractional.
So you're not an owner, whereas NetJets, you're truly part owner. You're buying part of a plane, so that's
because
so that they're going to benefit.
Turboprops are much cheaper.
Yeah, I say private jet. It can be aircraft.
But
turboprops. It can be a King Air. You can get a King Air.
No, I know you could, but then it's when you're not using it.
And you got to get pilots and the maintenance and the parts, and that's why it's much better to charter through your new WhatsApp group that was on the Wall Street Journal today.
When you charter, you're still probably spending 10 times what it costs to fly commercial.
Well, I mean, maybe not 10 times. What people say, well, that flight costs a lot, but you can fit six or eight people in the plane. So you divide it up, and oftentimes it's not 10 times. Maybe it's 2 or 3. Yeah. But again, for the convenience and the time savings.
Money doesn't grow on trees, I don't think yet, does it? Still doesn't do that. Yet. I still don't think it does that. See, they're telling me, let's go, and it's 7:58, and it says, I'm going to read that it's 8 a.m.
You should do it your own way.
I try. It's 8 a.m. on the East Coast. You're watching Squawk Box on. It's really not, but I'm Joe Kernan, along with Contessa Brewer and Robert Frank will be. Believe me, time is going to pass. Among today's top stories, we are watching mining stocks. Somebody is. I actually wasn't. After President Trump announced a 50% tariff on copper imports to the U.S., the levies will take effect on August 1st. Meanwhile, Tesla is going to expand its robotaxi service to the San Francisco Bay Area in a month or two, according to Elon Musk. The company is also planning to expand its test service in Austin, Texas, to a larger area this weekend. And Delta reporting quarterly results that beat on both the top and bottom lines. Here's CEO Ed Bastian earlier on Squawk Box.
On the domestic front, we're looking to be flat to down, and the growth will be on international, and the growth will also be in premium.
Shares of Delta rising this morning. Wow, up 7 points now, up almost 14%. Well, as you know, President Trump signed his big, beautiful bill into law nearly a week ago. Senator Rand Paul was one of 3 Republican senators that voted against it. Joining us now is Senator Paul, and it's great to have you back on, Senator. We talk about all these things. We talk about, last time we had a little back and forth about whether the president should help Israel and Iran. I want to ask you about that in a little while, but you made the point that a lot of that bill you were totally in support of, in terms of extending the tax cuts and everything else. Were you in support of the what we were just talking about, the 100% depreciation as well?
Maybe one of the most important parts of the bill. I mean, you can target something you don't like or looks extravagant like a plane, but what about a bulldozer? What about a dump truck? There's a lot of capital expenditures that immediately expensing them is great for the economy. It allows people to more quickly get another dump truck or another bulldozer. So no, this is probably one of the most pro-growth, positive aspects of the tax bill. I supported it in 2017. It was going to go away. I'm glad it's remaining, and I'm glad it's permanent.
because there's so many things you like, and I've been watching you for a long time. Everybody has been watching Senator Rand Paul for a long time. If there's something in there that you're just philosophically against, you're not gonna bend. You're not gonna, they can whip you all they want, and you can get calls, and you're just not gonna move. What was it in this bill that was just a no-go, no matter what?
They talked to me through the night, and you saw me come out of a closeted room with blood dripping out of one ear. They almost had me. They almost had me. But no, the biggest deal for me was that it added about $500 to $600 billion in new spending. That the projections, even the rosiest of projections, will that it be in the first 5 years, it will add about $500 billion to the debt. And really next year, the most important and the most predictable, it adds about $270 billion to the debt. In addition, they raised the debt ceiling $5 trillion. This has never been done. This is historically the largest increase in the debt ceiling. And people will argue, well, it's got to go up, it's got to go up. But when you raise it $5 trillion, you sort of set the limit so high that it goes onto the back burner. And people say, oh, well, whatever, we'll talk about it in 2 years. And I really think the opposite. But when they negotiated with me, people say, oh, he'll never bend, he'll never compromise. I told them that morning, and there was a negotiation. It was either give the senator from Alaska more carve-outs and more freebies, expensing lunches for whale captains, all the kind of stuff they stuck in the bill, or they would have had to do a shorter debt ceiling. And I told them I'd do 3 months of debt ceiling, about $500 billion, which is a big compromise from my point of view. But then they'd have to vote again. They said, oh, we don't want to vote all the time. And I said, well, that's exactly what you need. You need a shorter leash because you haven't shown that you're responsible with money. You actually need to have a short leash where we discuss this every 3 months, and the American people can say, well, how well are they doing now? Have they improved their behavior? Are they getting better with money, or are they getting worse?
Senator Paul, I'm just curious, when people come out and when lawmakers come out and are pushing for more responsible approach to the people's money, to the finances of the nation, and then they turn around and they put special projects in for their districts, is it real? Is that something that it's because it matters so much? Is it just politics? I'm always confused by how, on one hand, you can say, I want to balance the budget, I want to tackle the deficit, and then go and put in your own specialty projects for your district.
So one of the disappointing things was, special tax expensings for Alaskan whale captains, but also what was put into there was a reform on food stamps. And if you have a fraud rate greater than 6%, your state would have to pay more of your share of food stamps. And it applies to everyone now except for Alaska. The fraud rate in Alaska, 60%. But Alaska is now exempt from any kind of rules to try to reform the system to make their fraud rate less. So that's what kind of happened. And it was a negotiation back and forth between them wanting to come to what I was asking for, which wasn't anything special for one state or one person. What I was asking for is more attention to be paid to the debt and to the debt ceiling. Right. And what other people wanted were special carve-outs.
They had to get you or Murkowski. They had to get you or Murkowski.
What could they have given you? What could they have given you for your state that could have coaxed you into voting for this bill?
Well, that's what I told them. I wasn't looking for welfare or carve-outs for my state or particular people. I'm concerned about the general welfare of the country. And so all I asked was that we shorten the debt ceiling to 3 months. And it would have been a big reduction. They wanted to increase it $5 trillion. I said we can increase it $500 billion. But then in September, when we discuss the next big, beautiful omnibus, that spending bill, we would also discuss whether to raise the debt ceiling. And I think it's equivalent to your teenager. If your teenager runs up the credit card $2,000 and they're at their limit, do you give them a $10,000 limit, or do you say, no, you got to keep paying down your limit, and we're going to give you a certain amount of money, but we're not going to give you a $10,000 limit? Congress is worse than reckless teenagers.
Would you have sunk the bill if they didn't get Murkowski and you knew your no would have sunk the bill? Would you still you would have done it still?
My no would never have sunk the bill, and the reason it wouldn't is they were negotiating with me. If my vote were going to be the deciding vote, they would have negotiated. They were negotiating. Well, they were negotiating that morning. The vice president was very, very close to going with me versus the subsidies for Alaska. They eventually chose the subsidies for Alaska. which shows you something, that subsidies for Alaska and more money out there was actually easier for them than having to vote on the debt ceiling again in 3 months.
For Republicans, this was as good as it was going to get for, having the House, the Senate, and the executive branch. And we're still going to be, 17% revenue, 24% spending, and because the margins were so narrow, though. But if you don't want to, if you want to govern, sometimes you just gotta, I don't know, hold your nose or something. That's what we're seeing, isn't it?
Well, the president has great political capital and political persuasive ability. If he wanted to, he could have used that to actually have a better bill. They started out with a bill that had $500 billion in new spending. That immediately made a bill top-heavy and very difficult to not add to the debt. So it's not just a reduction in taxes. For me, it's much more that they started out with a spending bill: $150 billion for the military, $150 billion for the border, $70 billion in ag subsidies, and in the end, $50 billion for hospital subsidies. And there's more scattered in there, but the overall spending is somewhere between $500 and $600 billion. That's real. The estimates on cost savings in the outlying years is an estimate and a guess. A lot of times doesn't happen. The spending will happen. And so that's why we know, under the rosiest projections, that the deficit will get worse over the next couple of years.
Well, maybe there'll be another reconciliation bill or so. Will that happen? Is it possible to go back and look line by line like Ron Johnson wants to do and try? Yeah.
If you have to be an incredible optimist to believe that Congress will grow a spine between last month and next month. And so I'm all for it. Look, I'm voting for the rescission package. I will work with them if they want a second reconciliation package that we can do by simple majority. But are the people who were looking for carve-outs in Alaska going to suddenly all of a sudden become fiscally conservative? Are the people who want all of the different, they were afraid to end any of the Obamacare subsidies? Look on Medicaid. One simple thing could have saved almost $1 trillion, and that's simply to say that Medicaid should go back to the traditional mix. The states pay half, the federal government pays half. Under Obamacare, the federal government just paid everything, and so everybody expanded their Medicaid population because it was free, but it's not free. This is what's driving the debt, as the federal government picks up the tab for everything. If we put the split back to half state, half federal, we'd have a much better chance.
So, Senator, we were talking about Iran and whether the president should actually enter the fray on behalf of Israel, and they did. I don't know if we know everything yet. I don't know whether it's months. I don't know whether it's years. I don't know whether it's obliterated. I don't know where some of the enriched uranium is. But at this point, would you go back and say, I was wrong, maybe it was something good, we got a ceasefire between Iran and Israel, and maybe a chance for some real change in the Middle East? I mean, do you think you were too strident and isolationist about doing things this time, or you still think it was the wrong move?
I think the only people up here who are truly isolationists are the people who don't want to trade with the rest of the world. We'll actually be facing a bill next week that Graham will put forward that will try to stop trade with most of the world if they trade with Russia. That's isolationism, and I think that's a better characterization of it. With regard to the bombing in Iran, I would say two things. One, the Constitution says that if you're going to bomb another country, the president needs to come to Congress and ask for permission. That's in the Constitution. It's explicit. All the federal papers say that. Let me finish the answer. Let me finish the answer.
All right. Go ahead.
You know, you ask a question. You want to do an interview, or you want to do a monologue?
What you said last. Okay.
Look, you want to do a monologue? Get a nighttime program. All right.
You senators are so good at this. This is Elizabeth Warren's tack too.
Well, no. I mean, you want to interrupt, you can't have an interview. Okay. All right. You want an interview? Let's be civil about this. There were two reasons. One, the Constitution, and then the second is the strategic one. And I am open-minded on that. So far, it looks like strategically Iran has not made the sprint towards the bomb. We don't know everything, but we'll know more as time goes on. If in 6 months we realize that they've made a sprint and they announce they have a nuclear weapon, it will be seen as a strategic failure. If in 6 months they're negotiating and they want to give up their nuclear program, I'm more than willing to admit that strategically the president was right. On the Constitution, though, the Constitution doesn't change unless you want to amend it to get rid of the war-making power.
There's a lot of, I mean, how many times did President Obama violate the Constitution in terms of, I don't know, how many times did he use drones or bombs or whatever? Presidents do have a wide leeway on it.
isn't there something your mom would tell you when you were a kid? Two wrongs don't make a right. Just because other people break the Constitution doesn't mean, oh, well, the Constitution no longer means anything. That's a problem we have. That's why tariffs now are raised by the president, not by Congress.
But you couldn't have done it in secrecy. If you told anyone in Congress that it wouldn't have worked.
Well, they announced, we announced for weeks and weeks that we were deliberating over a bunker buster. So there was no secret to this. They could have easily come to Congress, and they probably would have gotten it, actually. They could have said, we're declaring war. It may well be a limited war, but we're going to bomb preemptively, mind you. Iran hasn't attacked us. We're going to preemptively attack another country. And then we would have had the debate, and he probably would have won permission to do it. And then he would have obeyed the Constitution. But you're right, most presidents since World War II have not obeyed the Constitution.
You know, Senator, I appreciate you coming on. I know we'll see you again, but there are certain politicians, if I don't interrupt, it will be a 1-question, 10-minute interview, literally. So it just, I can't, you know, we both have our jobs to do, I think, but I appreciate your time this morning. Thank you, Senator. And Squawk Box will be right back.
Happy with it.
Coming up, we reveal CNBC's top state for business. Scott Cohn joins us with a big announcement and the governor of said state. We will be right back.
Come and make it count.
Okay, time has finally arrived to reveal our 2025 top state for business. We already know that this is a year of changes. So what does that mean? For the top of our ranking, Scott Cohn is live in the top state to end the suspense once and for all till next year. Scott.
Right. This is our 19th year, Joe. We put all the states through their paces, 135 metrics in 10 categories of competitiveness for a total of 2,500 points. To reveal this year's top state for business, we turn to a man who represents one of this state's biggest claims to fame.
Hey America, NASCAR driver and team owner Brad Keselowski here with some not so surprising news. North Carolina has been named the #1 state for business in 2025. I lived in North Carolina for some time. Business there is fantastic. The technology, the talent and workforce, you name it, North Carolina's got it. So congrats, everybody in North Carolina, way to go.
We are live on the battleship North Carolina in Wilmington Harbor. This ship fought in every major battle in the Pacific Theater in World War II. It now stands as a memorial to the 11,000 plus North Carolinians who made the ultimate sacrifice. So here is how North Carolina took the checkered flag.
It's a race across the country, finding the state that puts it all together for business. Even in a year of changes, all roads still lead here. North Carolina, the Tar Heel state, with 1,614 out of 2,500 points. A well-rounded performance, with top 5 finishes in economy, solid growth, and entrepreneur's dream. Workforce, great people are flocking here, and business friendliness.
We've recruited businesses that have created thousands, tens of thousands of jobs in this state.
Hello, North Carolina. Like Jet Zero just last month, promising more than 14,000 jobs building fuel-efficient airliners in Greensboro. A big win in a state still recovering from tragic loss.
Officials in North Carolina say they were blinded by Helene's sheer intensity.
Hurricane Helene, a $60 billion disaster, killing more than 100 people in North Carolina, worsening a statewide housing shortage.
This is your own life, right here.
State lawmakers have approved close to $2 billion in aid and counting, even as the Trump administration begins cutting back on federal disaster assistance. But through it all, the state keeps growing, winning business and winning our rankings 3 of the last 4 years. Nothing could be finer. North Carolina, America's top state for business 2025.
Let's show you where we were yesterday. Lumber River State Park in the southern part of the state, 13,000 acres in 3 counties along a 113-mile stretch of the Lumber River. It was a beautiful location, and we thank the folks there for their hospitality. Now, about those hints. The sting. North Carolina's official state insect is the honeybee, as designated by the General Assembly in 1973. Moneymaker. The first branch of the U.S. Mint outside of Philadelphia was in Charlotte, established in 1837. Root. North Carolina is the leading U.S. producer of sweet potatoes, a root vegetable. A root vegetable. Hey Babe Ruth hit his first professional home run in Fayetteville on March 7th, 1914, and it is also where he got the nickname Babe. And Hottogo, of course, it's Krispy Kreme donuts, best when they're hot, founded in Winston-Salem in 1937. There you go. Josh Stein is the 76th governor of the state of North Carolina. First year in office. I think I got to break it to you, it doesn't get any easier from here.
No,
congratulations.
But we're really excited here in North Carolina. We are open for business. Since January 1, we have announced more than $20 billion of investment, producing over 23,000 jobs here in North Carolina. We're the 3rd fastest growing state in the country. We have a solid growing economy. But it's all about our people. We have the most talented, good, hardworking, friendly people you could possibly know. So that if you are a biotech or a pharmaceutical company or an aerospace company, you can come here. We have the engineers and scientists to help design your product but we also have the talented advanced manufacturing workforce you need to produce them.
And it clearly the recipe is working. You heard us reference Hurricane Helene a moment ago. Just this week, Tropical Storm Chantal in the central part of the state. How are people doing?
Heartbreaking. We lost 5 lives in the storms that hit this week, 108 lives from Hurricane Helene, $60 billion in damage, as your reporter announced. So we're working hard to recover. I was in Clyde, North Carolina yesterday, which is west of Asheville. Entire downtown under 6 or 8 feet of water. I could not tell that from any storefront I walked in. Everyone was fresher than it has ever been. I asked the store owners, I said, is it better than it was before? And they're like, yes, we have new floor, new siding, new air conditioning. It is beautiful. It is open for business. We have an ad campaign, which is Rediscover the Unforgettable. People need to come to Western North Carolina. If you've been here, you know what I'm talking about. Rediscover that unforgettable. And if you haven't, you'll be thrilled that you did.
But on that topic of it doesn't get any easier from here, as you know, the Trump administration wants to retool FEMA, maybe get rid of it, maybe put some of this responsibility back on the states. Does that work? Can the state handle that?
It depends on the scale of the storm. And North Carolina is a bigger state than most, so we have a pretty sophisticated emergency response team. But here's the thing, we don't get a huge storm every year. The country does. It doesn't make sense for each state to have a fully staffed emergency response team because they may not have a storm for 5 years or 10 years, but we know the country will. So let's have that expertise in the federal government. And also the resources, we as a state cannot bear the cost of recovery, $60 billion. Only the federal government can do that. We need more help. I have an $11.5 billion request before Congress and the administration that I eagerly hope that they fund soon.
I take it that you concur with Senator Tillis's estimates about what the big beautiful bill will do to this state. He talked about 663,000 people potentially losing their health insurance, as much as $32 billion in lost revenue to the state under the Medicaid changes. First of all, do you agree with that? And what will you do about that in a state that 10 days into the fiscal year, you still don't have a budget?
We don't have a budget. It's a real concern. This bill is going to result in real harm to North Carolina, harm to our people, harm to our healthcare system. It's about $40 billion over the next 10 years taken out of healthcare. You cannot do that and not have human suffering. So there are hundreds of thousands of people who are going to lose their healthcare coverage. We have a lot of rural hospitals. Those are where uninsured people will predominantly live. They will be the ones at risk of closing. So we're very concerned. Obviously, we need to work with our North Carolina legislature to make sure that we don't abandon the bipartisan win we had together. 2 years ago, we actually expanded Medicaid, providing coverage to those 660,000 people. So we have work to do. We came together arm in arm, Democrats and Republicans, to expand Medicaid. Now we have to come together to defend Medicaid.
So that bill is law. It's something you're going to have to deal with, whether you like it or not, and try and stay competitive in some of the ways that made you the top state this year.
Yep.
Can you do it?
We will. We'll figure out a way. Obviously, it's not simple, but Republicans and Democrats, we have our differences here in North Carolina, but we also know that having a strong, vibrant, growing economy, diversified, that is what works for our people. That's what gives us rising incomes. It gives us lower unemployment. It improves people's quality of life. So we will come together and figure out how to solve this problem.
And one of the other realities you're dealing with is tariffs. We found through our friends at Trade Partnership Worldwide that 20% of North Carolina's goods trade is international. 20% of the gross domestic product, I should say, is international goods trade. That's going to take a bite, isn't it?
Well, there's so much economic uncertainty because of a trade policy that changes practically on a daily basis. We need to have stability. Businesses need certainty so that they can figure out how and where to invest. We're here in Wilmington, North Carolina. Absolutely beautiful. It's our biggest port, one of 2 major ports here in North Carolina. They've had some reduction in traffic. What we need is certainty.
This is, spent a lot of time here. It's a beautiful state. But you come in 29th for quality of life in our study this year. So some of that has to do with the fact that this is one of only 5 states with no public accommodation law prohibiting discrimination. Mm-hmm. It's been that way for a while. Doesn't seem like that's going to change. But it's not just that.
Yeah.
What can you do to make lives better, to improve costs for North Carolinians, another area where the state is a little bit weak? Where do you go with that?
Yeah, well, we think we have an amazing quality of life, and folks who come here, they stay here. If you move to North Carolina because a job takes you here, you won't leave. That's how my family came here 60 years ago. My dad came for a job, and we loved it. So we think that we have natural beauty here in Wilmington, in the mountains, everywhere in between, good people, great culture. There are always things we can do better. I want this to be the most welcoming state, not only to businesses, but to people, to workers. Every person has something to offer. And the world is too competitive for us to leave anyone's talents on the sidelines. So come to North Carolina, we will find a place where you can contribute.
When we talk about costs, taxes fit into all of that. You have your state legislature, the General Assembly, which is controlled by Republicans. There's a debate about whether to cut taxes in the face of all the fiscal pressures that we talked about. But you also don't want taxes to be too high and drive people out because cost, as we said, is already an issue.
Yeah.
How do you come down on that sort of balance? How do you keep this attractive cost-wise?
No one likes to pay taxes. So we want taxes to be as low as possible, but we need enough to pay for excellent public schools, enough to pay for our community college and university systems, to make sure that our roads are excellent. We have incredibly good infrastructure. So I come down let's get them as low as we can. We have the lowest corporate income tax of any state that has a corporate income tax in the country. We have low personal income taxes. So what I don't want us to do is imprudently continue to go to zero when we have all this fiscal uncertainty coming from Washington. We're going to be having to bear Medicaid expenses. We're going to have to bear SNAP expenses to make sure that our young people have food. We still have recovery in Western North Carolina. So I'm just asking us, I do not want to raise taxes, but let's just go slow, make sure that we have the fiscal situation we need to succeed well into the future.
We'll be watching for it. Governor Josh Stein, the 76th governor of the state of North Carolina, America's top state for business in 2025. Now you can go online and see where your state ranks at topstates.cnbc.com. Guys?
And if I had been a betting woman on this, I would have lost. Scott, great to see you. Thank you for all the hard work you've put into this. We're just seconds away now from the jobless claims data coming in. Let's get a quick check of the futures right now. Mixed picture. The S&P 500 is down 3 points. The Dow is off by 48, but the NASDAQ in positive territory by 2 points. Treasuries right now, you're seeing the 10-year largely unchanged at 4.34 and unchanged. You've got the 2-year now down 3.858% is the yield on that. Rick Santelli standing by at the CME in Chicago with the numbers when they come in. Rick.
Absolutely, Contessa. Yes, we're waiting jobless claims, and do keep in mind 250,000 is kind of an important area psychologically for initial claims. That was the exact area we hit the first week in June, but we haven't been above it since October of last year. On continuing claims, we remain over 1.9 million, and they should be hitting the wires any moment. We do have 22 billion 30-year bonds that will be auctioned at 1 Eastern. 227,000 is our number for the week of July 5th on initial jobless claims. That's a bit lower than expected, and when you take the revision into account, 232,000, the new number versus 233, we are down 5,000. 227,000 will be the smallest number since mid-May when we were 226,000. It really has been kind of very, very steady on continuing claims. Another month above 1.9 million, barely 1,965,000. Virtually the last 3 months have been on top of each other. These are the highest numbers going back to 2021. We continue to see these numbers very well behaved. Historically on claims, recently on initial, and with that auction coming up, I'd like to highlight the 10-year auction yesterday was very solid. The 3-year was slightly above average. So supply at the moment doesn't seem to be an issue. We have been mostly sideways in what remains close to the upper end of a range, right around that 440 to 4.5 area. We did hit under 420 intraday briefly last week, and that definitely seemed to be the turning point. Joe, Contessa, back to you.
Still to come, the next front in the race for AI dominance, web browsers. That story next. And as we head to break, we'll look at the shares of AMD. HSBC upgrading that stock this morning to a buy and turning bullish on their AI chip pipeline. Their new target price, $200. Squawk Box. We'll be right back.
AC Plus.
All right, well, the next front in the race for AI products, web browsers. Perplexity launching a browser called Comet, initially available to its Perplexity Max subscribers. They're going to pay $200 a month. Now, they can connect with enterprise applications like Slack and allows users to ask complex questions via voice or text. Meanwhile, a Reuters report says OpenAI is close to releasing its own AI-powered web browser. If the new browsers are adopted by AI companies and customers, it could challenge the market-dominating Google Chrome browser and open up access to users' data. Now, the Chrome browser funnels user information to Alphabet, which of course allows it to target ads more effectively and also routes search traffic to its own search engine by default. So this could really upend that ad business for Google.
Yeah, it's been interesting to watch how dramatically clicks have become devalued in this new area of AI.
It just takes, when you ask a question, it used to take you to a website, now it goes straight to AI. And I use Claude, OpenAI, as a kind of browser anyway, as it is.
Yeah.
So it makes sense that they're going to do
Google. I know, unless Google suddenly.
Unless they
I
mean, they got a lot of smart guys in Google working on this.
I never
too.
use Google anymore. Because it's much easier to use.
And when you do use it, it seems to bring you to their AI answer anyway.
Right. If you can collate everything yourself and organize it.
Yeah.
Up next, former National Economic Council Director under President Biden, Lael Brainerd. As we head to break, check out the shares of Moderna. The FDA has granted approval of the company's COVID vaccine Spikevax in children aged 6 months through 11 years who are at increased risk of the disease. Squawk Box will be right back.
All All right, we got the jobless claims numbers in, 227,000 versus consensus of 238,000. Joining us to talk about the economy and the inflation and much more, Lael Brainerd, who served as former National Economic Council chief in the Biden administration and a former Fed vice chair, now a distinguished fellow at Georgetown and a senior fellow at Harvard's Kennedy School. First off, what does the employment picture in the nation tell you about where we are in the economy and what's next for the Fed, Lael?
Yeah, well, good morning. So the jobless claims today, I think, were reassuring. They bump around a lot in the summer months, so it wouldn't take too much signal from any week of numbers. But if you look at the payrolls numbers that we just got, the labor market still seems to be balanced. It is certainly softer than it was this time last year, but it is in good balance. And that means that with that and the inflation numbers, which have also been pretty benign, it does give the Federal Reserve a little bit of room to contemplate continuing to cut rates later in the year.
We've seen that the odds for a September rate cut have been lowered, but you still have a couple, Fed Governors Waller and Michelle Bowman, indicating that they think there could be cuts as soon as this month. Where do you stand on whether rate cuts should come down the pike?
Yeah, so the way that I think the minutes showed yesterday, a majority of people on the committee that sets monetary policy think that they still need to wait a little bit, that there's a real potential for inflation to go up because of the tariff increases that are not finalized in the pipeline, but they're getting more comfortable with the idea that there are going to be cuts later in the year, probably starting perhaps in September. You're right that two members of the board have said they're open to a July cut. It's not coincidental, perhaps, that they are both people who have been appointed by President Trump and perhaps share the views of the White House to a greater degree. But if you look at the overall minutes, it does suggest they're contemplating lowering rates later in the fall.
You have an op-ed just recently in the Washington Post about this tiff between President Trump and Jerome Powell and why you think the president wants to remove Jay Powell from his leadership role at the Fed. Talk us through your points about this a bit.
Yeah, so I was really surprised to hear the president say that the Federal Reserve Chair should be cutting rates because it will save this administration money on the interest payments they need to make on this $4 trillion increase in the national debt from the mega law that was just passed. And so he's very direct about it. As you know, he sent a handwritten note to the chair of the Fed making this point and said in a public event that for every percentage point that Jerome Powell lowers rates, that would amount to $300 billion worth of saved interest payments. Now, as you said, you know, I was on the Federal Reserve Board for 9 years, including as vice chair. We did not take into account Treasury debt management. That's not the role of the Federal Reserve. Congress tells it to focus on fighting inflation and also maintaining a good labor market. And so there's a real concern that if the Federal Reserve Chair that is appointed by this president believes their job is to focus on long-term Treasury rates, that they will lose credibility in terms of their fight against inflation. That actually will cost us more in terms of long-term Treasury interest payments over the next several years.
When you look at the scenario that's unfolding, are you concerned at all about the volatility in White House policy concerning trade and tariffs? That it somehow, I mean, Swiss Re is just out with a report this week arguing that it is going to issue in an era of a paradigm shift where the U.S. is concerned as a safe haven for investors. Are you concerned about that? Do you think that there's been long-term brand damage to the idea that the United States is the place for investors to park their money for returns?
Well, as you know, we are very fortunate to have the dollar as a global currency, and it means that we get to borrow at lower rates. So it costs us less to borrow than other countries. We get to borrow in the dollar because people from abroad want to hold treasury securities because they think those treasuries are going to hold their value. And that's in part based on the commitment of the United States to the international system. And that is where all of the volatility, unpredictability on both tariffs and what is driving tariff policy can really hurt us reputationally. And secondly, attacks on the independence of the Federal Reserve may raise doubts about the value of holding those Treasury securities because it means it undercuts the Fed's ability to focus squarely on inflation. It leads to higher inflation and a weaker dollar over time. And so, yes, we see that in the markets.
Lael Brainerd, it's great of you to join us this morning to talk about jobs and the economy and the Fed. Thank you very much. Have a great day.
Thank you.
All right, coming up next, SoFi CEO Anthony Noto on the future of fintech, how AI is changing finance, and a lot more. SoFi's stock, by the way, up nearly 42% in just 6 months. It's just off its 52-week high. Squawk Box, we'll be right back. CEOs and business moguls gathering in Sun Valley for a business summer camp of sorts. Julia Borsten is there and joins us with a special guest. Julia.
Good morning to you, and that's right. I'm joined now by CEO of SoFi, Anthony Noto. Anthony, thanks so much for joining us here today in Sun Valley. Your stock has been absolutely on a tear and got a pop from the news that you're expanding to private markets investing. Stock was up 7% on this. How big of an opportunity is this for SoFi?
We think it's a large opportunity. It's part of our overall strategy to be a one-stop shop for all your financial services needs. Investing is one of those areas, and we're giving access to Main Street investors to products they would not otherwise get in prior history. So we started with single stocks, launched fractional shares, added ETFs, robo accounts. We then started doing IPOs. We're the exclusive retail provider of the Rivian IPO, as an example. And then about a year ago, we launched alternative assets, including private equity, private credit, private real estate, and then even an opportunity to invest in some private companies, specifically through SPVs like Anthropic as well as SpaceX. And this is an evolution of now being able to invest in private companies through funds. And you can invest with as little as $10. The minimums are all different, but on one of them it's $10, one is about $500, and one is about $2,500. What's seen as another potential tailwind for SoFi is the idea that the new Trump bill could cap federal borrowing for college and grad school, which could drive more business to SoFi. What are you expecting in terms of growth because of that? There will be a large opportunity for us to continue to leverage student loans, and the new bill will provide a bigger opportunity for us. But it's a much smaller piece of our business now. More than 50% of our business is from non-lending revenue streams. We've really kind of de-risked the balance sheet and tried to become more capital light. We've had 13 consecutive quarters of greater than the rule of 40, which is your revenue growth plus your EBITDA margin. And someone pointed that out to me. And our guidance for the second quarter will actually be the 14th consecutive quarter if we achieve it. And we have great momentum in the business. So while we're excited about the student loan opportunity, it's small relative to everything else that we're doing. That's driving the growth of our business and the rule of 40 success.
You do have a lot of customers, though, in this younger demographic. And this younger demographic is being impacted by a couple of factors. We've seen unemployment for recent college grads higher than the overall unemployment rate. And we're also seeing a lot of concern about AI taking jobs, not just now, but increasingly in the future. How are you seeing this demographic react to those issues, and how is it impacting your business?
We do go after a younger demographic. We're going after people that have been successful, they're overachievers, but they're not well served by the financial markets. And we want to be there for every one of their major decisions in their financial life, like paying for college or buying a home and all the days in between. And our business is very strong. We came into the year with great momentum. In Q1, we had over 30% revenue growth. It was an acceleration. We've been able to maintain more than 30% member and product growth, and we don't see that slowing down. So we're seeing real strength across the consumer and spending, improving credit, and the desire to do more with us.
But when you look at the evolution of this younger consumer, the new CNBC Generation Lab poll shows that young people are so worried about AI taking their jobs. How do you expect that consumer to change in terms of the services that they get from SoFi?
What I'd say is every innovation drives more opportunities. Yes, some of the opportunity is closed, but it'll create new opportunities. And I believe our country, with the strongest economy, the strongest level of innovation, the strongest military, the strongest currency, will continue to drive opportunities for American people. And the innovation will just cause those opportunities to change. You can't really predict what they will become, but without a doubt, if you look at every cycle in history, when you've had these big super cycles from technology, it's created more opportunities, not less. And I think that will be the case here.
And you're really deploying AI across your suite of products.
We're using it in every area. So customer service, automating dispute resolutions, filing suspicious activity reports, but also personalization. We're testing a product right now called Cash App, or Cash Coach, which allows you to look at your cash across all your different partners, and we can help you optimize what to do with that cash. First of all, we'll show you how much cash you actually have and how little you're earning on it, and ways to actually optimize it, drive a better return. Our goal is to help you spend
less than you make, and invest the rest. And that's what you need to reach your American dream.
Here in Sun Valley, there's a lot of talk about tariffs, the impact of tariffs. You heard from Secretary Bessent yesterday. What is your perspective on what's going to happen with tariffs and how it's going to impact your consumers?
I think we'll all find a level, balanced playing field. At the end of the day, with the strongest economy, the innovation that we're driving, we should be able to drive a better balance in trade, and I think we will. There will be approaches that are extreme in negotiation, but ultimately our administration finds a way to win, and we all end up in a better spot, and I think that will be the case here.
We're out of time, but I have to ask you, when are you relaunching crypto?
We talked about it a couple weeks ago. We're launching buy, sell, and hold, and we'll also be launching remittance and being able to send payments internationally, first in fiat currency, through Bitcoin, and then on the back end through fiat currency. So we're excited about it. We're working on the plans. It'll cut across every part of our business, just like AI, and it's a really exciting time to be seeing two of these super cycles come to bear on our commercialization.
Great. Well, we'll have to leave it there. Anthony Noto, CEO of SoFi, thanks so much for joining us. Joe, back over to you.
Thanks, Julia. Appreciate that. Up next, a look at some pre-market movers. We'll be right back.
.com to learn more.
All right, some breaking news. The deal we told you about earlier, well, it is now official. Ferrero is buying WK Kellogg for $23 a share in cash, or $3.1 billion. The move gives the privately owned Italian candy company Kellogg's portfolio of cereal brands. So you've got all their chocolate brands with cereal. Count Chocula, though, is not included in that.
No. Cereal is almost like candy for me.
Oh, it is totally.
It's so good with milk. Seinfeld. Let's get to Frank Holland with a look at this morning's Frank Holland. Okay, now I'm confused, Frank. Now I'm confused. Yeah.
Good morning,
this is Frank
Joe,
Holland.
Robert, and Contessa. We got some movers to get to. We're almost out of time. So let's start with Delta. Delta shares up over 1/3 of 1% after a beat across the board in its Q2 earnings earlier this morning.
The airline reinstated its full-year profit outlook, and current quarter guidance came in above street expectations. CEO Ed Bastian telling our Phil LeBeau in the last hour that he's seeing more clarity in corporate travel. High-price seats, those were a driver. Premium revenue grew 5% year over year. Again, Delta shares up a third of 1%. Other airlines also rising in sympathy. Take a look. The Jets ETF, that's up just about 4%. American up about 7.5%. United Airlines up over 8%. JetBlue up about 3.5%. Alaska up over 6%. Also, McDonald's getting an upgrade from Goldman. And take a look. The Brazilian ETF, the EWZ, falling on those 50% tariffs. So in Brazil, back over to you.
I wonder if that upgrade is because of the snack wraps coming back, which is happening. Thank you both.
Sure.
Make sure you join us tomorrow. I think M. Lee is back tomorrow. Squawk on the Street is next.
Good Thursday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer. Faber is back at post 9 of the New York Stock Exchange. Futures a little soft as the White House continues to layer on the tariff threats, whether that's copper or now Brazil. Earnings season kicks off with Delta ConAgra. Jobless claims lower now for 4 straight weeks. Our roadmap begins with trade and tech. Some bullish AI sentiment lifting the NASDAQ and NVIDIA to new highs as investors continue to digest the latest volley of tariff announcements from the White House.
Plus, Delta shares are flying high. The airline beating, earnings estimates and restoring its outlook for the year. CEO Ed Bastian says bookings have stabilized. And with NFL training camps about to get underway, oh my gosh, you're going to start talking about the NFL again soon?
You bet.
Yeah. The league reportedly looking into renegotiating existing media rights deals, also embroiled in a collusion controversy. Why do I mention those things? Well, we're going to have a chance to discuss them with NFL Commissioner Roger Goodell, and that will be this hour. Squawk on the Street.
Let's begin with markets, focusing on trade and tech. One day after NVIDIA's historic march to $4 trillion market cap, which you saw right here on Squawk on the Street. Let's begin with trade. The president announcing this 50% tariff on copper, effective August 1, Jim. Brazil adds another layer of how he views tariffs in general.
Right, now there's a place we really don't have this surplus or a deficit. They've been even, and it's been a very good trading partner, but there's political reasons. Because the president doesn't really like the way that our president doesn't like the way that they handle their politics.
Their own judicial system,
right, and
yes.
I think that the president is taking steps that make it so that we, usually in the country other than Theodore Roosevelt, are saying, here's how you run your country. And whatever, everyone has the right to say, here's how you run it, but you usually don't put that kind of 50% whammy on it.
Yeah, I mean, we talk often about things that are unusual, if not we've never seen before.
No,
and I would put that in that category because we have a trade surplus with Brazil.
Right.
About $7 billion, not large, but a surplus nonetheless. So one would think you would not take a retaliatory stance necessarily given that relationship at this point.
Yeah, so it turns out that's not at the fulcrum.
Right, so basing it on politics seems a new territory here. And then, I mean, what the emergency powers the president is using to impose these tariffs, Carl, are still subject to review, I think, by the Supreme Court, but it's going to be a while till we get that, I believe.
The Supremes are always a little behind. I mean, I think that one of the things that amazes people, continually amazes people, is that we're not used to a president just saying, okay, here, boom. We're used to consulting and, to Brazil, maybe meet with the president until you talk about what to do. And this is radical. It's a radical thing because I would argue that, forget the politics, they've been good partners. But that seems to be only one of the criteria. It's kind of like Scott Cohn. There's like many different criteria.
Yeah, absolutely. By the way, Lula did have a response last night on social media saying that the country will not accept getting tutored. They're going to respond with reciprocity. They're setting up some study groups to figure out how to respond to this one.
See, but there you go. Okay, setting up study groups. One guy moves in he's lightning. And the other people are all like, let me think about that, because no one's seen this before. No one has ever seen anything like this. No one.
Right, well, it's much more typical of the Trump administration because the president, all decision-making comes back to him.
Only Claudia Sheinbaum was ready. She was ready. She said, troops? Yeah. Remember? Like she said, you want troops? You've got troops. Sheinbaum has handled this thing better than anyone. She was first.
Well, her response yesterday on copper was, let's wait.
Well,
which is becoming a pretty common playbook when
But she
facing
actually
the
has the
president.
cards when it comes to minerals. She actually has enough rare earth minerals that we should be making a deal with Mexico. But I don't think they seem to realize that.
What are your thoughts about copper, Jim?
Okay, let's go
Because
over copper.
that obviously had an impact. You can see what the metal's doing. Freeport shares up. No surprise there. But we don't mine enough in this country for our own needs, do we? We have to import some.
So we produce this country. Let's see, 1.1 billion from Arizona. That's mostly Freeport. We recycle 1.8 billion. We've been tremendous recyclers. Gold produces 40. These are pounds. 40,000 pounds. Against that, housing is 255, data centers 230, EVs are 300, commercial construction is 500. So you can see that we are operating at deficit. And here's what the president left out that he should have mentioned. We've taken out 1.1 million pound, 1.1 billion pounds because of environmental rules that closed 7 major smelters. And that's Clean Air Act, Clean Water Act, Resource Conservation and Recovery Act, National Environmental Policy Act, NEPA, Endangered Species Act, Native American legal challenges, forced closings or restrictions that made it too expensive. So he should have, once again, he doesn't spell it out. Now, did that take that long to do? I did it, 95 seconds? But now you see what's the gravamon, to use that phony word that I heard at law school? It's that we took out 1.1
with
billion.
various environmental and other
And
restrictions.
he wants that. He figures that at this price, you can, first of all, you can overrule the ones.
So you do away with the environmental restrictions, and you can bring a lot more supply to the market.
And that's what he should have said.
How much more though? We import half of our refined.
Well, but remember, we produce 1.1. We would bring back 1.1. We recycle 1.8 and gold. We're not that far. We're not that far if we open up those smelters.
And can those smelters start operating immediately? And what about
everything-
lawsuits? And what about people who care about the environmental impact of it?
Who are you? Look at him. Look at him with the
Well,
environmental
you used to
impact.
work for Greenpeace. What are you talking about?
I was.
Weren't you a member of the Sierra Club once?
I was Greenpeace. Yeah, I was.
No
I
more?
was.
I know.
No, I was. I was environmental defense fund.
You're giving that up. I mean, listen. The question is how far some of these regulations have gone and that prevented productive capacity from coming online that otherwise really wouldn't have an impact is a fair question.
The copper smelters are the dirtiest of smelters. They're even worse than gold. So remember, gold is a byproduct of gold is copper. And yes, I did believe in these things. And yes, I wrote my college thesis saying that perhaps NEPA went too far. I can show you that.
By the way, guys.
Wait, in 1948 you wrote that thesis?
Jim, the spread between copper futures in New York and London is pretty dramatic. And the thinking is that it's gonna be tougher for us than, say, the rest of the world.
Look, what the president had to do simultaneously was to say, okay, these rules cause these smelters to close. We're going to work to get these 7 major smelters open, of which then we will be able to be self-sufficient. Because look what they're doing with MP materials. I mean, now that's a bit of a surprise, but that's a way to be able to deal with rare earth.
You mean this deal now with DOD?
Yeah, I mean, we'll get Navarro on the phones. And Navarro said they should have given the president, listen, this is how much we need. We are great recyclers. I mentioned that again because, like, you can go to this. There's a great place right across the river where you can go. I'll show you where they recycle. I've been to it.
Oh, that's great. I can't wait to go.
But why'd you have to mention a Greenpeace affiliation?
I didn't actually. Carl did. Yeah, I didn't
That's
do
a
that.
deep track, though.
All right. Well, yeah.
Don't believe me.
I care about the environment. Now, you could say, well, Jim, you care too much. But I do think that we could get those smelters open and do a pretty good
I care
job.
about the environment, but we can get the smelters open. Oh, the smelters are the worst for the environment, but we can get them open. But I care about the environment, and I was a member of Greenpeace.
What
I wish I
I
had said
care
that.
about means nothing.
Nothing.
It means nothing.
No, zero.
The North Star is whether people can make
Make
money.
money. I listen to Mad Money. I listen to it. I know the mantra.
That's a long time ago.
Yes.
Hey, look, I also struck against. I had a wild card. You want to mention the Wildcats strikes?
I know.
How about the pickets I had to close the big plant?
Were you a card-carrying communist?
No, I was a told you I was a Trotsky. I did.
Okay, got it.
The workers own the means of production, not the state. Get your facts straight, Lev.
That's actually going to go very well here in Manhattan as well, soon enough.
When we come back, we'll get to the airlines that David mentioned. Airlines, actually, the index is posed for its best day since about April on this Delta guidance. We'll talk some football and streaming with the commissioner of the NFL, Roger Goodell, live from Sun Valley at the Allen and Company Conference. Take a look at the pre-market here. Got some calls as well on McDonald's, Palantir, CoreWeave, Oracle, Costco. When we return. Business leaders from around the globe attending Allen and Company's annual conference in Sun Valley, Idaho this week. Our Julia Borston is there this morning.
Good morning,
shot,
retail
and has a special
traders.
guest.
Good morning. Looks like we did hit the triple top this morning. Triple top on the SPY. Ascending triangle. Good morning, Angel, Livid Goose, Magnificent, and Sheba. S.
current media rights deals in 2029? And will you use that opportunity to make more bigger deals with streamers?
The
Don't forget to vote. I voted.
Option to read.
What time? How hot is it in here? 79 degrees. This is what I wrote yesterday. It said, Schwab, what have you done to your TV? It sucks. Go back to the old format. Hello, James. Thank you for taking the time to reach out. Feedback is one of the most important tools we have to learn, as we can always looking to improve our clients' experience where we can. Well, you made it worse. You made it worse. She says yesterday, maybe the retail traders had it right about the tariffs. I'm going, you dumbasses. At least for my opinion, the way I like to trade. Because a lot of it's psychological. If you listen to somebody's opinion and rhetoric all day long about the same subject, day after day after day, well, maybe they are right. Go get my water for my tea. I'll be right back. We already got a resistance level, so I got to see what's going to happen here. It's kind of like the guy said yesterday about NVIDIA. We hit that 4 trillion, so that's going to be like a wall. What's PLTR doing here? Okay, here's another lie. Well, it's not a lie probably, but Pelotar's stock is up 400% in a year. So if I look at it, I would evaluate it a little different. I would look at the 3-year, and I say it's up, what? How many thousands of percent? $148. How do you do this? 148.22 divided by 5.84. It's up 2,500%, not no 400. That's how I would look at it. It's up 2,500%, not 400. Almost 2,600%. Okay. Good morning, Robert. Good morning, Seamus. Today we might first pull back, might be a buy on NVIDIA. It's already had a nice breakout this morning. They were pumping Microsoft, and it's up a little bit too much too. And then we had Meta yesterday with that news about buying Ray-Ban or being invested in Ray-Ban. That's my glasses. So, six more minutes to go. Can't believe I spilled my tea on my desk yesterday. Or my coffee. Man, it's going to be a hot, humid summer here in Missouri. Because I think we've had more rainfall than I could ever remember in a 2 straight days of no clouds. It's unbelievable. Now, I wouldn't put it past the government saying that they somehow infiltrated our weather patterns, caused more rain, and then the next year or two they're going to say global warming, the ice is melting, and the water that we got was from rain. The ocean's up 2 inches. I wouldn't put it past them. I think we had 24 inches in 1 month, 12 in another. And that's probably about 3x of what we get on an average yearly rainfall. Maybe more, maybe 4x. I know we've had a lot. And I'm surprised we ain't had as bad flooding. Moment of silence for all them young kids and families in Texas. Yay. I can't believe Schwab actually wrote back to me. That was the second message I sent to him. I'm pissed. I mean, I rely a lot on social media to give me a perspective on how I'm going to trade that day. Just by listening to their rhetoric, because I know it's a rigged market. So we're at resistance right now, 624.27, and we did break it this morning. See what happens once we double top up here. Now yesterday I bought puts a little too early. Right about now, let me load this platform up. Now I don't know if you want to take this first risk with me or not, but today's the 10th. The 625 or the 624s at $1. And we're at 106. I always like to make these sweet and fast. 109. 3,000%. To 113. Profit, 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 profit. We can get down to the 200. There's $150 right out of the table. So I'm done. I'm off to the beach. Did you get that, Randy? Dadgummit, I wish I'd known what happened to Funk. I mean, I admit I probably was not, I mean, I was quiet for a couple weeks, not feeling very good, and just not in the mood. And maybe that if he thought, well, Jim's an asshole, which I'm not. I can be. There's 117. Couldn't get filled. Well, let's see if we can hold support here off the VWAP, or off the 200. 623.72. Barto, do you have the 200 SMA on your chart? Very good. I'm gonna give a list of my moving averages here, just in case nobody else has them. There's 123. Okay, SPX. Puts her at 124.25. I gotta go turn down that heat. So the 6275s, the 6275s SPXs at 390. This seems like a little bit more riskier for some reason. I don't know why. Let's see if we hold this orb in the double bottom, triple bottom. triple bottom. This might be a little bit more riskier. 410. In fact, I probably might stop out if it, well, it can come down here and drop 30, 40 points. We got a hammer, 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 hammer. And a long leg doji and a spinning top. Three black crows with a hammer and a spinning top. And hammer, long leg doji, hammer, spinning top, doji. Boom! There you go. Break it. So each one of these represent a resistance. The bodies of the candle. Now I'm up 40 bucks. Well, I was up 40. Contract. So we got one resistance in this channel right here and another resistance right here. So if we come up and double and hit that, if we're going to hold this, I'm going to get out, but could easily drop down to this. I'll add two more right here. If it dips down here. Anybody in this trade with Bobo? See, there's your $40 dip, $30 dip. Right about now. $340 and $390. $340 and $390, and I got 4 contracts. We're off to 63 in the 200 EMA. Oh, that's not at 63. That's the orb. Average 265. Their Starbucks pump is down $1.36 yesterday. Mr. down 270. Amazon down 111. Netflix is overbought. I'm at 380 right now. Got to break to 63. There we go. Cost is down 547. Mister's down 411, down at 354. Huge run on that one yesterday. And then we had that Meta. Now Meta, I'm still in these here. Just PXs. We got a megaphone. It can easily come back and hit the orb. We've got a long leg doji after them two. It's bullish. Bullish. $4. It's up $35 a contract there. 420. See if we can get back up here to the 50 SMA. That or just take profit, because the pivot point's going to be this here 63. I mean, that's a solid pivot point. Every chart has a pivot point. Every pattern has a pivot point. There we go, 390. What? God darn it. Oh, shit. What am I looking at? That's 265. Oh, that's funny. Not very bullish right now. I got my finger on the mouse just in case I want to sell this sucker. We had a big spike on a double top, or the top of the mega, or break this 50. That would be right there. 62, 61, 97. There's 4. I just sell them. There's your 50. Or here you are. Thank you very much. Out at 410. And we could probably go higher, like always. Trade number 2 out of the way. Trade number 2 out of the way. So what's green today? Tesla broke 300. Oh shit. Listen to that guy yesterday. See, that's what pissed me off about listening to Schwab yesterday. They get some guy on there, oh yeah, I own a Cybertruck, but I'm ashamed of owning one. So you freaking liberals are pumping these EV cars and you're ashamed of electric cars now? You spent trillions on that shit? You gonna buy an electric car? We could pull back more. Headline, Musk politics or Tesla future? I was in student government for a couple years and I thought about being a politician, and then I just said, no, not for me. Although I knew it was an easy way to make a ton of money. Okay, Tesla's coming back to a yin-yang. $302.59 has to hold. But I was liberal back then when I was involved in that. taxi service is expanding. Tesla stock is rising. Its robo-taxi service is expanding. So the guy gets out here yesterday and badmouths the robo-taxi service. And I was just going, what the heck? Expanding the larger service area in Austin this weekend. Expanding Musk, adding and launching, what was it, San Francisco? Bay Area, likely in a month or two. What indicators do I use when trading? I use chart patterns, moving averages, and being in the now. I use the tape. I use the RSI. I use the VWAP. I try not to make it overcomplicated. Understood. Mr. Fly. Is your fly up, Richard? Jimmy mentioned Mr. this morning. Do I get some credit? I didn't call it out, but I did say triple bottom. I don't feel like I want to listen to Schwab. I really got pissed off at him yesterday. I don't want to get caught up in that cycle again. Let's see what they got to say. Just AVGO, Broadcom, they were pumping that yesterday. I got a target of 315. Goldman Sachs reiterates. I'm liking this AVGO here. It's had a real good run yesterday. Here, let's put the fibbies on here, see if that helps. We're definitely pulling back to the 50% mark on AVGO. Oh, look at NVIDIA. NVIDIA down a couple bucks. SPX hit the 200. Missed that one. My eyes wasn't in the game, but there it is right there. I'd have took that on that hammer. But I'm not going to chase. Okay, we're about to 50% on AVGO. I think it's, yeah. And what are they? Oh yeah, Dow. Airlines were getting pumped again yesterday. They were wrong about airlines. So this is another thing. If you remember what I said when earnings came out, none of these companies were given any forecast. To me, I was highly offended by that. Because if you're a major CEO and you can't give a forecast on your company, you've been there for years, you've got a problem. As AOC would say, we got a problem. So they were assuming that the tariffs were going to just kill the market and that we're going to go into a deep recession and we'd probably never recover from it. They've been pounding that in our heads. So they were too freaking scared to give forecasts. Well, yesterday we heard maybe they were wrong. The retail traders were right. And we've heard it over and over and over again about the retail trader buying the dip. So they come out with earnings this time around and they're all good. They're going to underestimate what they predicted because they were too stupid to give a forecast. Oh, all of a sudden earnings were good, and that's what they said about Dow yesterday. See, here, listen, airline stocks soar, lifted by Delta's earnings beat and restored full-year guidance. And you're going to hear a lot of companies coming out saying that we were wrong, blah, 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 wrong. And I did say that. Because I thought it was kind of funny. And I say NVIDIA can come down more. And then we had Boeing break out yesterday. They raised the price target today to 240. Fast Money QBTS. Okay, we're about to our support level here on AVGO. 274.36. So I'm just going to take a risk. The 280 strike. $280 strike at 86 cents. We're at 92. Well, we're back to 86. $86 and $72. And what did you say about IWM yesterday? We got NVIDIA, AMD at the 200, Meta at 721, Apple's up. Now IWM, Magnificent thinks IWM is going to break out. QQQ looks pretty strong, pretty damaged here. Down $3, $4. And I'm in AVGO. And what's another one? Oh man, I really like this. It's damn cheap. Not cheap though. Come on, AVGO. Maybe it's up a little bit too much. Now that I look at it. Could be up way too much. Yeah, I think I made a mistake here. So let's see. .63. Average 71. Got 20 contracts. About even on these now. Break it. Bob was up a little bit this morning. Pot stocks are consolidating. We do have a little move on Cron. We'll pull back still on the video. And I'm even at 71 right here. We got a spread on these things. I don't know if I like that either. AVGO. I got 20 contracts at 71 cents. We're at 80 right now. I'm up 180 bucks. Let's break it. Anybody take AVGO with me? Come on, break.
Rating as well. They believe that it's a misunderstood company. Certainly
oh God, they got
as
this
crypto coverage is concerned. They do talk about how this does look like they're going to benefit from the Genius Act, also the Clarity Act. We know that obviously being the largest crypto exchange here in the US, they're going to be benefiting, no doubt, from the positive developments we've seen around some of the legislative wins, but also a sort of more crypto-friendly White House, more mainstream adoption, institutional participation here as well. So there's a lot of excitement around those stable coins as well. I've been speaking to a number of analysts this week. They believe it could be a $1 to $2 trillion market cap in the near future. No one's going to stick their neck out and give a timeline just yet, but there is, as I said, a lot of optimism around this. Take a look at the price of Bitcoin as well. I mean, it hit a high above 112 yesterday.
112?
A bit now, but the cryptocurrency space, very much as far as the prices are concerned, has been a big focus this year. I mean, we're a long way off from the analyst calls that we were talking about earlier this year of 150. Those have come off a bit. I was speaking to some analysts earlier this week that were talking about sort of sideways activity over the summer. Things are expected to ramp up in spring, but as I pointed out, Nicole, I mean, this stock has been on an absolute tear. I think it was up about 300.
I don't know if I can enjoy listening to these people anymore after yesterday. She ain't nothing to look at. I want Caroline back. Caroline, I miss your freckle. The one that's on your right breast. She has no freckles. Back to 78 on my calls here. Let's break this here. We got this double top ascending triangle set up. 82. So I'm up a couple $100 here. Break it. They were pumping coin. I got to look at it here in a second. There we go. 83. So you're coming up to the 21, and that's got a confirmation of a resistance level. So you could scale out, take out, or just call it a day. $0.84, and I'm not really liking the spread on these, on the bid and the ask. Now we're squeezing. We're between the 9 EMA and the 21. Slash ES is at the 200. God, finally someone on here with some sense.
I mean, so many have been saying 120,000 was the next stop. Could be the next stop, will be the next stop. So we have to wait and see. What's your big picture market thought here? We've been hearing seasonality being a big part of it, that these 2 weeks, week 27 and 28, going all the way back to 1990, are strong weeks historically. What are your thoughts on what might drive this market?
Yeah, that's a great point. Start of July is the first week of July is very bullish, but then you kind of get some sideways action, some dull activity through the end of August, and then you get a increase in volatility in September. I think we should expect the same this year. We of course have the tariff pauses coming off in September. That usually seasonality is when things pick up. You get a little bit more volatility.
Coinbase turns bearish.
So given the recent market action, I think some consolidation certainly is in order. We've had a big run up since April. We know that. So some consolidation would be healthy even for this bull market. Even a small pullback could be very healthy for this market. So we're just watching that very closely. And then looking forward towards
Barclays don't think so.
A rapid run up come late August, early September. I think if you're looking seasonality, that's what we would be playing for.
All right, Joe Tagay, thank you so much. Great to see you.
Great to see you too, Nicole.
Picture too. Portfolio manager of the Rational Equity Armor Fund. Coming up, we're going to focus on the latest trends we're seeing in the ETF space. Matt Kaufman from Calamos Investments will join me next.
SPX/ES at resistance, the Head and Shoulders. Disney broke 120. They raised the price target to 140. Citigroup does. Wolf 139. So the fat cats are pumping it. 140 by Barclays. No tariff talk today. Wonder if they got my message. Bank of America. Verizon, VZ, CAT, CAT's overbought. Spies back to the VWAP. Okay, Jimmy's watching. Okay, prepare ye. Spies are cheap. The calls are cheap. The 623s. I mean cheap. I'm going for it. Because they're so cheap. $623s. Lotto, 116. We got a new poll. I voted. $135. Woo! 139. $141. $143. Sophie, $22. God. $152. Woo! Ah, 158. Profit, 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 profit. Always clean. May I help you?
Hi, this is John. How are you doing today?
I am the sexiest man alive. How may I help you?
Oh, great. Good to know that. Well, this call is about your new healthcare benefits for 2025. So do you have any health insurance through Marketplace there?
Oh, yes, sir. I do.
You do. Perfect. And have you got your additional healthcare benefits like your zero co-pays and deductible charges?
What about charges?
I'm saying, like, do you have zero co-pays or you had some co-pays for your doctor or dental vision?
Oh, I don't know.
Okay.
I
and
gotta-
do you know the insurance name?
I gotta go. I got a coffee date. I gotta get ready to get out of here. I got a chick I gotta meet. Her name's Anna.
Oh my God. Is your she's your girlfriend?
She's gonna be when I get done with her.
Okay. God bless you. I will make like you got that.
Well, you take care, buddy.
Yeah. Thank you.
You got tickled, didn't you? I got a date with Anna. Woo! Yes, that's my Anna. Anna, did you get at the exit idea at the double top here, baby? I can't tell you. We're at 164 from 116. What do you think? What would you do in my situation right now? Does anybody know? Richard, what would you do in my situation right now? I'm at 116 and we're at 171 right now. Somebody give me a business decision. 171, is that enough for you? Thank you very much. Well, I made a business decision. Richard, I got it. I'm back. Yeah, man, I got a hot date with Anna. I can't be bothered right now. And today we got 9:39. So we need a breakout on AVGO today, please. I sold some, but I still have a few here. God, look at that. 177. 197. I'm out. I'll take it all. Woo! Jim, that was an excellent trade. I asked my aunt the other day, and she heard of you, and she wanted to know if she could meet you at maybe a cup of tea somewhere, or yeah, I'll meet up with her. I have a busy schedule right now. I hope you understand. All out. So what will I eat for lunch today? Okay, I got the resistance support level. Support to 624.31. I wish I knew how I can get a hold of Peppolini. They're all in black. See, it's a day of doom.
Jenny Horn, great to see you both. Thank you so much.
You got that
Good luck
right.
there at 3 key names. Coming up, let's discuss this day thus far. We've had records for the NASDAQ and NVIDIA and others, so Broadcom. But we do have some back and forth action, a lot more to discuss. Morning Trade Live will be right back.
We're waiting for Broadcom. Might have been a mistake getting that one. Meta reversed. I'm going to start a campaign to free Elaine Maxwell. If nobody's guilty of human trafficking, why is she in prison? AMD nice. Breakout on /ES on the 30-minute. Double top on the 2-minute with higher high. There's a little breakout there, magnificent on your IWM. New highs. QQQ is the only one that's really hurting. I'm waiting for that. General Motors is at 53. Dadgum, man, I don't even want to look at these 6275 puts on calls. These things are at 640 right now. So that's $800 left on the table. Just in them. I think I nailed it. Pull back, breakout, boom. Yeah. Oh well. Oh, I gotta go today. I got something I gotta do. What to eat? 5 minutes for lunch. I'm gonna go get something to eat. I think I'm gonna go run up to the store this time and get me some burger. I haven't had Kraffle burgers in a while. And come back and get into trading again. California senators approved bill to pause newly enacted marijuana tax hike for 5 years. California. Now, I have a different attitude about cannabis like I used to. I've always had the idea that you at least needed to have a job if you wanted to get high. Or be productive. It's like a privilege. Okay, we had a little pullback here. Yeah, I haven't had a Kraft burger in a month or so. So I think that's what I'm going to do. Come back and retrade. I've already had a great day. I don't want to. Oh shoot! I forgot. I got to go do that carpet. Well, I'll change my idea here. I'll go get a bowl of chili and a small chicken sandwich. Now that I forgot, I got to do that carpet. So that's what I'm going to do. We pulled back to the 21 here. So if it wants to stay bullish, I'd like to see it come back and hit this here alert. I'm going to raise it up. They raised the price target on Sophie to $13 and we're at $21. Woo!
Rating could suggest. And for our 360 round, we'll cover Delta's earnings as the airliner takes off after a strong quarterly report.
Let's wind now take a quick check on where markets are at this hour. You've got mixed market action that we've been watching after the NASDAQ notched another record earlier in today's session, but you're seeing some pullback within that benchmark there. The S&P 500, though, has got a gain a little higher by a little more than 0.1% in terms of the leadership. Healthcare is pacing the gains, followed by real estate and consumer discretionary. You've got weakness in communication services and information technology. That explains what we're seeing. And the weakness in the NASDAQ 100 now after you had big gains yesterday. Record for the NASDAQ 100 and the NASDAQ Composite yesterday. You're seeing some pullback now after some more optimism at the open. We'll see who wins out today in terms of where we are with momentum. With the NASDAQ 100 down by about 1/3% there. Dow's got a gain. It's up 212 points, better by a little bit more than 0.5%. Small caps matching that advance. The Russell 2000 also better by about 0.5% right now, as investors really are kind of shaking off the latest as it relates to tariff pressure and trade policy headwinds there. Let's take a look across the other asset classes and other price action that we are watching. The yield on the 10-year Treasury better, up 2 basis points right now. Dollar still been pretty range bound, up just 0.25%, still around that 97 level. Gold higher by a little bit more than 0.1%. It's been pretty range bound recently as well, but above 3,300. Crude oil pulling back some today, down just shy of 2%, trading near $67 a barrel for West Texas Intermediate. And although Bitcoin is a little bit lower right now, look at that level where it is. It's down just shy of 0.5%, but around 111,000.
That's new.
Talk about a run that we've seen in Bitcoin.
SPY got a new high.
For like one of the top moving stocks in today's market, I'm joined by Alex Coffey, senior equities contributor and co-host of Next Gen here on Schwab.
Alex.
All right, so Oracle was higher earlier. I've seen it pull back. I'm not sure where it is exactly right now. But it's receiving an upgrade. Okay, back on the plus side now. Receiving an upgrade. What's the latest here, Alex?
Good morning, Diane. Yeah, you were just talking about the run Bitcoin's had. Let's not overstate or understate the run that Oracle's had. It's been as impressive as any stock, I would argue, over the last 3 months, basically doubling off the lows as it's continued to become a more formidable player within this AI infrastructure and cloud build-out. Piper Sandler, though, the latest to really ratchet up their price target. They move it up from 190 to 270, so a substantial adjustment to that price target. They upgrade the stock as well from neutral to overweight, and basically say that their latest chief investment officer survey reinforces a bullish spending backdrop for AI infrastructure. That's the bread and butter for Oracle. They say increasing enterprise demand could add another layer of growth for the company's OpenAI Stargate opportunity, and they upped their fiscal 2027 estimates and the stock's rating as a result. Now, I would like to say that this seems like a very bullish note, but you look at where the street is, it's basically what the flavor of the month is. I mean, just in the last 3 days, you have Bernstein going to 269, Jefferies 270, Argus 270, and DBS Bank to 270. And this is not even the street high. Street high, Derek Wood at TD Cowen back on the 3rd, 275. So average price target is 230, but if you just looked at the last, I would say week and a half, it's much closer to this 265, 270 range. Just so many analysts really buying in. That said, there's always doubters. Stevens, Brett Huff, 208. Morgan Stanley's Keith Wise, 175. So still a little bit of controversy about how far this stock has run. All things considered, though, 2 out of 3 analysts in the buy camp, 1 out of 3 and hold, no sells.
Okay, so Piper Sandler now the latest to get even more constructive on Oracle. It seems to me it's all about AI and the cloud story there. Anything else stand out to you with regard to this analyst coverage, Alex?
Yeah, I think the one thing I would say, and this isn't necessarily in regards to the analyst coverage, but I think that there's a feeling and there's this idea that, hey, stock gapped up around earnings. It's made a nice move, like it's due for a pullback. There's that feeling, and you hear that in the commentary. You hear the concerns around valuation. just key up a stock like Oracle, key up a stock like Microsoft, key up a stock like Nvidia. They can continue going. George Tillis used the term gap and go around earnings, and he was exactly right. That's exactly what's happened with Oracle. So just because a stock has moved.
You can't hear me, Sheba? Yes? I'm here. I'm here. She left a bunch on the table, a bunch of Sensibilia. I left a bunch of my Sensibilia on the table. My bad. Can you hear me, yes? Say yes. He can't hear me. Can everybody else hear me? Yes. Reboot. Damn, these things are keep going. I gotta go get my lunch. I really do want to have something in my tummy before I go down there and do that little room carpet. Mayana. No correction here. Very nice. Yeah, I'm talking. Can you hear me? Hello? He can hear. You're not muted. But right now, I am going to go get some lunch.
Higher closes, but RSI is trending downward. In fact, it's looking like we could be breaching our green upward sloping trend line as well, so that would also be noteworthy here. But on the way to 250, though, we have our 21-day EMA and our trend line. Those come together around 260, 263 general area here. If we were to look at our other studies, standard deviation channels and volume profile, we can see that for now, price is stuck at the +1 standard deviation channel. So we have our linear regression line of best fit. One standard deviation to the upside is something people use to project potential resistance from that point. That comes in right about where we are now, near 267.
I agree.
And to the downside, 250 really stands out. Volume also picks up here around 235 or so.
Okay, Dan, before we move on to your next trade, any final thoughts you want to leave us with as it pertains to Broadcap, especially given some of the patterns Rick just pointed out?
Yeah, I mean, that technically I saw exactly what Rick saw. So I think that, again, momentum up over 100% from those April lows. I mean, this stock has had a move, to say the least. So long term, I still think it's a hold. I think it's certainly a name that's probably going to outperform. But at this point, I'm looking not to chase the stock, but with this trade example, to capture the stock if we pull back to that consolidation range.
Okay, let's talk about the next one on your list, LLY. That's Eli Lilly. It's underperformed the S&P 500 year to date. Some had looked at this previously as the vanity trade, if you will, tied to the GLP-1s. I mean, it's not my terminology. I'm using someone else's terminology. But what's your view here, Dan?
Well, it seems to be finding some stability after the disruption that it experienced the last couple of months. And, I think that you're seeing the slowly developing upward trend line, and we will have earnings in early August. So a name that I still think, again, is probably a little overdue to play some catch up, but particularly if you see a broadening of this rally as healthcare has lagged so far this year. So again, I'm looking to capture upside with this trade example. It's a call 1 by 2 in August once again, so 36 days out. And it gives you a big capture range to the upside before it becomes problematic above 900. And if the stock is unable to find momentum and trade lower, basically this trade 1 by 2 call spread you can put on for even. And that gives you don't have any downside to this. It's just the risk to the upside if we see a massive explosion.
Okay, Rick, tell us what you noticed about this chart for Eli Lilly.
Yes, as Dan said, a very slight uptrend. Once again, starting with those April lows, a significant low point for so very many stocks across the market here, and then connecting these subsequent lows here. Another way you could look at it, though, is around this 700 level. Price hit a significant low here, around here too as well, and then here. So for the most part, 700, that general area was a major supportive point for this this particular stock here. In the more recent term, though, you could still argue that there's also a longer-term downtrend in play. You can see starting with the 52-week highs here, 972, connecting these highs and these highs. Kind of an example of how trend lines can be more subjective. Some people would choose to draw it along the highs and say the trend was not tested here. I try to go with kind of the line of best fit for the most part based on you know, this other subsequent high here. It's subjective, you know, it's more of an art than a science sometimes here. Regardless, though, lower highs, you know, that's the main point here, is we're still making a series of lower highs. We're also seeing a situation now where if you look at our three moving averages that we follow, yellow 21-day, orange 63-day, purple 252-day, they are clustered closely together and trending sideways, speaking to a low directionality, weak trend. So that can often be a precursor to high volatility, though. If one of these important boundaries does get breached, it can trigger the breakout type situation. To the downside, 760, repeated high and low point many times throughout the past year. You can see to the upside, this high area right here, 850, around 851, that was the high point after our gap down here. 900 would be up here for the Dan strike price that we discussed there. A quick glance too at our volume profile study shows additional emphasis on this general area we're in. Heavy trading volume from about 770 to 830 here. We are basically right on the point of control, the area of heaviest trading at all.
It's funny, they went back to their format. Yesterday, I was so mad at these people. I mean, he brought on those other stooges yet. I like how these people talk here. I'm not listening.
Feels like the view is it's.
I'm not listening about depression and tariff crap and. I don't even think they've mentioned a word today. Yesterday it was almost in every sentence, all day long. Well, I guess the retail traders were right. They've been buying the dips.
Month and a half. So today's trade example is to buy at the money call spread, basically buy the August 95-105 call spread, but then sell the August 87.5 put to finance a part of that call spread, and then
Meta just hit the 200 EMA.
Enjoy the move from let's say this level to 105. But if we see some weakness, have the opportunity to get put into stock at another consolidation area around that 88 level.
Okay, it seems like there's some flexibility with that approach there. Rick, take us through what you notice about the chart as it relates to Uber.
Yeah, some horizontal levels on this chart really stand out here. If we were to backtrack all the way over here, we had this gap up that gave us some significant lows and highs. Our light green line and dark green line, 82 and 87 respectively. You can see that was 82 was a high point,
so Meta,
a breakout point, and then it was tested.
We're up $7 on Meta.
A floor of support here. It held on. We can also see that the 87 level, high point here, low point here, high point here. From there, we have moved on. Now, the important area, 93.60 was roughly our old highs there. It's our red line. We can see that price got stuck there again for a little over a week here. Now we have broken out to the upside, 97.72 representing our new intraday highs here. However, be on the lookout for potentially a retest of that red line near 93.60. It's a common situation after a breakout for a stock to pull back to prior resistance, which then becomes support, before continuing the trend. Not saying that's going to happen or anything, just a common situation to look out for. RSI also deteriorating here, moving below our green trend line.
All right, Dan, any final thoughts you want to leave us with on your approach with Uber or Eli Lilly or Broadcom?
I mean, the overall, I guess I want to go back and touch on the Eli Lilly trade example. I don't think I got the actual example out there. It's the 790, 850 call 1 by 2. Again, you can do that for about even money at these levels, and the break even on the high side is 908. Now, of course, there's some risk above that, so it's not riskless, but to the downside, you're basically financing the entire cost by selling that extra call. So you really have limited downside, if any at all, with even money paying for this 1 by 2. The risk could be to the upside on an explosion after earnings. But as Rick pointed out, it's been pretty range bound. So if we see it just drift higher from here, this is a way to capture that range to the upside.
And capture that vanity trade coming back into play once again. Thank you, Dan. Thanks for calling our attention back to that one. That's Dan Dimming, Managing Partner, KKM Financial, and our Rick Duquette. Thank you both. Coming up next, we're going to spotlight tax implications of one big, beautiful bill and sector positioning based on your time horizon. That's next on Trading 360. Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Trading 360. I'm Diane King Hall, live from the floor of the New York Stock Exchange. Time now to spotlight sector positioning, and we'll call some attention to tax reform. Joining us now for perspective is Tony Drake, CFP at Drake and Associates. Tony, thank you so much for joining us. Before we get into your views on sector positioning, I'm curious to know your market outlook, given that you describe the current environment as a late cycle economy showing signs of deceleration, yet we continue to see records in the market. What do you make of that disconnect?
Yeah, I think we're all seeing that disconnect, right? And there's certainly some signs of that late market cycle, but you got to be careful here, right? I think that the game here right now is bridging between growth and kind of paring back a little bit to protect yourself. We just don't know what the timing's going to be. We're going to see what happens, when the Feds cut these rates. And I think the challenge from a larger perspective is the country's debt too, and how are we going to save America when the spending seems to continue? We got this tax bill through, but there's also some new spending there. We've all seen the spats between Elon and President Trump.
Oh, I'm here. If you hear the news, you hear me.
I guess we'll see how that plays out in the second half of this year.
So what have are you expecting in terms of the impact of that bill, that big beautiful bill? Obviously, Wall Street seemed to celebrate it. What's the view from Main Street?
Yeah, I think for Main Street, again, a lot of people are just looking at this debt. Can we save America without having to print money? Essentially inflating away the debt. And when you look at Bassett, he's shooting for these.
They're so full of shit. I've been looking at the debt about $20 trillion ago when Obama took office and brought it up to 20 trillion. They don't care about the debt. You Wall Street people love that printed money.
Some nice benefits with the tax rates that were set to expire.
Well, I'm going to do my thing.
Those are going to now be extended. That's going to be great for middle of America. So I think that we'll see some benefits there. But we really have to figure out what we're going to do with this debt short of inflation and raising taxes.
Tony, I'm curious to know your views on sector positioning. Now, you say the goal is balance between growth and stability. Obviously, tech has been booming, and it's all about AI in terms of that. But can you unpack what you mean when you're, kind of in practical terms, when you're talking about pursuing?
I think it's more about AI, more than just AI.
There's a lot of internationally developed markets that offer margin of safety with some great valuations right now. We also work with a lot of retirees, so different time frame for them. So I really want retirees to stay vigilant with cash flow planning. Don't let these recent market highs tempt you into chasing those returns that can really sting us in retirement. So you want to use this momentum to reassess bond ladders, adjust for potential Fed cuts. Could be some good, interest rate opportunities right now. The economy isn't falling off a cliff, but it's slowing just enough that I think the Fed is on a razor's edge and is likely to make some adjustments there. And that's why we really want to balance between that growth and stability.
Oh, yeah.
So, Tony, I want to ask you this, not for actual retirees, but for those who say maybe 10 years out, or even, let's say, 10 to 15 years out. Do you still suggest this barbell approach? You talk about parent sectors like tech with defensives. How should investors think about that mix if they've got 10 to 15 years?
Yeah, if you have some time on your side, I think this is a decent time to take a little bit more risk. I mean, we all saw what happened with NVIDIA yesterday, and tech sectors and AI continue to soar, especially on some of these tax tailwinds. And but when you look at some more traditional safe havens like healthcare, consumer staples, a little bit more uncertain, right? I mean, technology, is definitely benefiting from some of these tax treatments, right? Bonus depreciation is back. I mean, massive change with R&D expenses, not just this year, but being able to retroactively go back and treat that as an expense. That's a big deal for these technology companies that have these massive R&D budgets, and that can really benefit them. So you want to be selective with the sectors, but if time's on your side, remember, we really favor a long-term investment plan. Trying to get in and out generally doesn't work, so it's about waiting to the right areas and really seeing what's going to.
That is, if you're a retail, if you're an institutional trader, it doesn't work. But if you're me, it works great. You understand? Almost every one of my trades work out. When I was a swing trader, I hated there watching my money sit there and going and not doing nothing. And then, I mean, there'd be times where I'd jump in it and it'd dip on me and I'd go, fudge. And bad news would come in and they'd just wipe the stock out. Now I just get in and out of them, and I have no stress.
Between growth and safety.
I can sleep at night.
To hit home runs, singles and doubles work really well in retirement.
Fair point, especially when you think about retirement. But great perspective there about obviously what you're dealing with is sometimes just emotions around this. All right, thank you so much, Tony. We appreciate your time. That's Tony Drake, CFP at Drake and Associates. Coming up next, the disruptors. Take a look at Coinbase following a double downgrade. Trading 360 will be back after this break.
That's strange. Every time I talk, the news gets muted and I cannot hear you. That's got to be weird. I'm not sure. So, no issues? Oh, God. Always clean this gym. Okay, well, I'll be back. I'm gonna go shampoo guy's office. It should take me about 45 minutes at the most, hour, and I'll be back in an hour. Well, here's that chick. Miss Negativity.
And because everybody wants to obviously see more efficiency when it comes to the amount of data they're holding, they're talking about how obviously they acknowledge Dan Ives. He says the valuation is expensive today, but calling it the Messi of AI and a core winner in the trillions of AI spend that we're seeing across the board here. Talking about, as I mentioned, new and existing customers across the commercial and federal landscapes are waiting in line to sign up for some of their software and the stack that they offer. They're also talking about how the street, he says, is underestimating the $1 billion plus revenue stream that Palantir's commercial business can evolve into the next few years. They're also talking about unprecedented demand based on recent checks in the field across, as I said, both commercial and government landscapes to help solve meaningful problems across organizations, obviously, that enterprises can take advantage of, because that's what we all want. We want to see these use cases as far as how beneficial they are to make things more productive, more efficient. They also talk about, well, Dan Ives in this note mentioning the Trump administration clearly represents an additional tailwind for Palantir, which is interesting as far as some of the AI initiatives are concerned as well within the US government. And then also talking about how they're in a sweet spot to benefit from the tidal wave, as I mentioned, of the federal spending across not just here in North America, but also talking about some of those international markets too, the likes of Europe as well. So he says Palantir is well positioned, certainly in this new disciplined spending environment. Discipline is an interesting word, because I just suppose, again, when it comes to things like cybersecurity, I mean, software, when you want things to be more efficient and the amount of data that we are collecting, it just seems like it's not optional when it comes to some of the software that's needed here.
Yeah, I definitely see his point about government spending, because look, that was, how Palantir originally made its name, and then it's since expanded in the commercial space, and that has been growing faster, but you can't, but government is still a significant portion of its revenue here. I always love when Dan uses this flashy language, like the Messi of AI. His analogies are so funny to me, and just kind of big and bold. And what's funny is when Alex Karp, the CEO, does his earnings calls, they're usually kind of some drama in that, but he's so understated. I saw him here when he came to the stock exchange before. He comes across so understated, just kind of like he looks like a Brooklyn guy. It's just a certain look to him. Anything else stand out to you about this, or the price action that we've seen in software?
Yeah, absolutely.
283. I left a little bit on the
We
table.
have seen this sort of software semi-unwind continuing. That's certainly what some
New
of the
high.
traders have been pointing out to me, because if you look under the hood at what's happening in the technology sector at the moment, it is a down day, certainly for the softwares versus the semi component of that index as well. So no doubt that is being brought down alongside that. But you mentioned it's a hot stock, high valuations,
Hot
as we know,
stock.
they come with very high expectations. We do have to wait until August the 4th until we hear from Palantir as far as that report card is concerned. So we have some time. But as I said, Dan Ives growing confidence on the stock.
And that's been one of the criticisms around it. That valuation is very high. All right, thank you, Sam.
Thank you.
That's our Sam Vadas, Schwab, a network contributor. Time now for the Disruptors. Alex Coffey, co-host of Next Gen Investing, here with today's company. That's Coinbase, on the receiving end of a double downgrade. What are the details here, Alex?
Yeah, H.C. Wainwright double downgrading, as you mentioned. Hello again, Diane. Looking at Coinbase, double downgraded to sell from buy. Price target 300. Last trade nearly 380 for Coinbase, so quite a bit of downside seen by a firm that admittedly thinks this is still a best-in-breed crypto exchange, remains positive on the sector, but cites valuation for the downgrade. Diane, just saying that, hey, at these levels, valuation has outstripped near-term fundamentals following a 150% rally from the April lows. That's the reason here. I would say, too, notable that despite crypto basically going 3-4x from where it was a few years ago, or double from the former highs, not the same for Coinbase. If you zoom out in time, it is at 52-week highs, but this stock went public and it was over 400 for a short amount of time. So it's still not made a new all-time high, despite Bitcoin seemingly dancing around that on a daily basis.
Okay, despite Bitcoin dancing around there, you make a good point there, and some have argued that it should trade more like it. But what's your approach, Alex, now for an example trade?
Yeah, I just totally looked at this with this note in mind. So if you're bullish, Coinbase, maybe you plug your ears, you don't listen to this one, or perhaps you see it as something complementary to an existing, maybe longer term optimistic view, kind of similar to the analysts, but it's a short-term bullish trade, or bearish trade rather, looking for maybe some sort of a pullback over the next couple weeks. If you think that that could happen, or you're thinking, hey, this stock's run too far too fast, maybe this would work out. Looking at buying a put calendar, so most importantly, it is a 1, customizable trade, but 2, risk-defined trade. Selling next Friday, buying the following Friday, put options at the 350 strike. So not quite looking for a move all the way to 300. This is only over the next couple weeks where maybe that $300 price target accounts for a little bit more time, but it would still be a pretty substantial down move for Coinbase to achieve in a short amount of time, like a couple weeks. But we know Coinbase can move rapidly. $3.50 for the 350 put calendar means you have $350 in risk. So it's kind of funny how that all lined up that way. But risk defined, and you probably don't need to move exactly to 350, but you would need a down move for this one to work out.
Okay, and like you said, for the bullish investors, plug your ears. I'm not putting myself in either side of the camp. I'm going to stay agnostic on this one. All right, Alex, thank you. That's our Alex Coffey, co-host of Next Gen, once again with us for an example trade on Coinbase this time. Coming up, time for our 360 round. We'll cover Delta Airlines. That stock soaring today after better than expected earnings report. We've got some perspective after this break.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email,
Okie dokie,
and in-platform chat.
Well, I'll be back in a little bit.
Trade brilliantly.
I gotta go do a job.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's a... Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Welcome back to Trade 360. Time now for our 360 round. We're across Delta Airlines shares soaring. To discuss their latest earnings, we've got Sean Cudahy, senior aviation reporter at The Point Sky, and Meghna Maharishi, airline reporter at Skiff. Thank you both for joining us today. So, look, they did better than expected with both their trailing numbers, and guess what's back? Guidance is back.
Back in an hour.
Catch-up adjusted EPS was $2.10. Revenue topped $15.5 billion for the most recent quarter. Although guidance is back, it's a little weaker than when they initially gave guidance at the beginning of this year. I want to start out with you, Meghna. What was your take? I mean, one of the things that stood out to me was CEO Ed Bastian said, quote, people are traveling again.
Yeah, so it's interesting to see how much the tone has sort of shifted since April. I think in April, Delta was very cautious. They pulled their full year guidance because there just wasn't a full picture as to how people were responding to this economic uncertainty we were seeing with
There is no economic uncertainty, you stupid chick.
And now it seems as if the airline industry has a better idea as to
They were
how this
wrong.
is actually affecting consumers. And based off of Delta's earnings, it seems as if the travelers who are buying the international
And I was saying
and the
it.
premium.
I was very boisterous about it. And I still am. You can't believe a word any of these analysts say anymore. You just can't.
Yeah, that's really Delta's kind of bread and butter, right? They've targeted that premium end of kind of the consumer base, the higher dollar customers. They've got their robust international route and obviously a huge complement of premium seats on board their planes. Now, I think the big question for the airline industry now is going to be whether Delta is, kind of indicative of what the rest of the industry is going to report here over the next few weeks. Delta always tends to go first here in the earnings cycle. Will other airlines be a little bit more, concerned about where things stand as far as the more price-sensitive customers? I think that remains to be seen here over the next few weeks.
Magna, I'm curious to know, your thoughts on that premium traveler. Sean makes a great point. Look, this is what we know Delta as. Like, that is where the premium traveler wants to go. How long can that demand hold up?
At least like right now in this moment, it seems like that demand is holding up pretty well. That set of travelers did not really react to this threat of tariffs. They're still not reacting to it. However, it is worth noting that there is some concern, though, however, over a weakening dollar. The dollar has weakened around 7% this past year. And if that continues to weaken, that might affect that high demand that airlines have been enjoying in international and premium travel since the pandemic.
Okay, and then Sean, I'm curious to know your thoughts on what you think the landscape will look like for air carriers from here, because the recipe last quarter was Delta pulled guidance and it was, shown grace. You clearly can't do that this time around. What do you think is the roadmap for other airliners from here? Not just that when it relates to issuing guidance, do you think we're starting to hear more about having to do more discounting?
Yeah, and you've seen that even in recent years here. Airlines have talked about how the peak summer travel season has really kind of shifted up into June and July as school calendars kind of across the country have shifted forward a bit. So I think you've seen, in recent years, you've seen a lot of discounting activity even in August and certainly into the fall months. And I expect that this year will be the same. I think it's what really remains to be seen, is what the guidance looks like for other airlines if they, assuming they do issue it. We've heard kind of continued reports about softness in the main cabin, particularly on domestic bookings. We also, I will note that the total number of seats that airlines are flying on domestic flights in September down almost 1% over last year. So I think you're going to be seeing some of that capacity coming out of the market, and that's going to really kind of be the backdrop as we head into the fall months.
Right. We'll have to leave our conversation there. What you guys can't see is we're looking at shares of all the airlines right now. Delta Airlines up 12.5%, having a knock-on effect in a positive way for all the other airlines. United up 13%, American up 12%, even Southwest gaining some ground today, up more than 7%. Thank you both. That's Sean Cudahy of The Points Guy and Meghna Maharashi of Skift. Thank you both for joining us. And thank you as well for joining us today on Trading 360. I'm Diane King Hall. Download the free Schwab Network app. It is available in the Apple App Store and tune in 24/7 on schwabnetwork.com. Stay with us. You've got Fast Market up next.
Schwab Bank Investor Checking, the the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Good afternoon, traders, and welcome to Fast Market here on the Schwab Network. I'm Tom White. We've got a great lineup for you today. We'll talk markets, which are pushing towards session highs, and then we'll have some option strategies. We're going to cover AMD, which is up over 80% from those April lows and was upgraded today, and then Google Alphabet, which continues to lag its Mag 7 peers under threats to its search business. And like Folio, will have consumer sentiment data in Carvana, which has rallied over 70% so far in 2025. And is near multi-year highs. Now let's take a look at the major indices, which, as I mentioned, near session highs. Most of them in the green. The S&P 500, the benchmark, up 0.25%. The Dow Industrial is up over 200 points, or 0.5%. NASDAQ 100 lagging, down just over 0.1%. And leading to the upside today is the Russell 2000. The small caps continue to outperform here in July. To help me break all this market action down, let's bring in my co-host. That's Kevin Hinks. Kevin, you know, tariff headwinds kind of get pushed aside relatively quickly overnight. 50% tariffs on Brazil. The president confirmed 50% copper import tariff. But the market doesn't care at this point. Maybe it shouldn't.
Well, Tom, I think Brazil is not one of those market-moving names, right? You're right. 50% tariffs on Brazil. They're talking about reciprocating. It was a headline. I just don't know if it's a market-moving headline. Do I sell stocks because of how we trade with Brazil? I'm not sure about that. And so I thought, with all the lead up to July 9th yesterday, that the announcements were fairly benign. Were not a lot of big headlines made at all in that front. So, yeah, that date seems to have come and gone and not really caused any problems with the overall market. So I think we've started to switch to other things. I think there's some underlying data out there that's showing a little recovery. I thought the Bank of America consumer checkpoint data showed a nice recovery in the U.S. consumer. Jobs or the labor market data, first-time filers for unemployment insurance, better than expected, good number, trending back in the right direction. So, Tom, remember, I hate to say this so often, but we're in the middle of summer, and lower your expectations for any big effects. And I just don't think the market's going to get its heart rate up over trade problems with Brazil, Tom.
Yep, I think, another one that gets pushed aside. I think it's 22 letters the administration sent out to these other countries about impending tariffs that begin on August 1st. So, yeah, still navigating that to the positive side here. As NASDAQ settled at record highs yesterday, Kevin, coming off here just a little bit, some weakness in some of the Mag 7 names, but it's definitely off its session lows. Also, what might be helping, and this might be just maybe the personality of the market, is that rally that we're seeing in Delta of over 11%. They reinstated full-year guidance. They raised their dividend for Q3 moving forward. And CEO Ed Bastian was pretty positive after this report, Kevin. And you know what? This is kind of what we've seen in the overall market, right? There was a lot of consternation in April. A lot of people worried about the impact of tariffs. Delta pulled their full-year guidance, but now they're putting it back in and saying, hey, these tariffs aren't going to negatively impact us as much as we originally thought. And they were a little bit more, confident on the consumer and the economy moving forward, Kev.
I thought it was real interesting how he broke it down via more affluent premium seating versus economy seating. And the economy seating is the one that's struggling, but the premium and the international travel, that's still doing fine, and that's powering them in Delta stock. And really, frankly, Tom, something we see all the time. Look at United Airlines, look at American Airlines, even look at Southwest is rallying on that news. So that sector is all higher. Remember, airlines and banks will start us off. Banks coming next Tuesday, it's going to be important. Bar a little higher for the banks. Remember, the airlines were all sitting significantly off their highs and a little more low bar. Remember, some of the numbers Delta was reporting were lower year over year.
Yeah.
So it wasn't like they were putting up great numbers. They beat considerably lowered expectations, but the stock was a reflection of those low expectations. They beat it. They reinstated some guidance, and pretty positive things happened there.
Yeah, and Kev, you make a good point. The comparables from year-ago levels, that's when, the airlines and the travel industry, midsummer to the end of the year, just started rallying and, parabolic moves to the upside. But we're also seeing, you mentioned the overflow into the other airlines. We're seeing it in the cruise lines. We're seeing it in the hotel stocks, some of the travel stocks also. So this is kind of, is it reflective that, hey, the consumer is not going to be pulling back on spending? The jobs data is good. We got a solid jobless claims number that was 5,000 less than last week. So the jobs market continues to be robust at this point. So it's kind of exuding that confidence across maybe all consumer discretionary stocks at this point, right?
Yeah, listen, this morning, Bank of America put out their consumer checkpoint, it's called, where they look at overall receipts. And remember, Bank of America, because their cards and how many cards they control, they have massive amounts of customer data. And here's the numbers, Tom. April was down 0.2%. May, down 0.7%. This is for total card spending. What is it in June? Up 0.3%. So big recovery in the U.S. consumer from this consumer checkpoint number out of Bank of America. And they have so much data. That's a real positive recovery for the U.S. consumer. And what is it in line with? The stock market, right? Stock market rallied, consumer feeling better about itself, consumer spending numbers back up, Tom.
Yeah, crude oil price is down 2.2% at this point, back below $67 a barrel. That's probably helping out the cruise lines and the airlines also on that front. But we're seeing some weakness here, Kev, in some of the Mag 7 names. Got some, Microsoft off of all-time highs, Netflix down 2%, Meta Platforms down nearly 1% today. So it almost feels like, Kevin, this is another one of those rotation days. We talked about this last week when you weren't on air, that we saw the rotation where people were pushing into small caps. People were pushing into names that had been underperforming the Mag 7, which had led most of the rally. So this is actually a healthy kind of rotation, right?
Think about what started this week, Tom, ahead of earnings, right? Banks getting downgraded by HSBC, Bank of America, JP Morgan, Goldman, all downgraded. Why? Ahead of earnings, and because they had all rallied in the high 30% numbers. So people are starting to back off on some of these names that have rallied so much. Now, you can make a case, we're going to talk about Google Alphabet, that hasn't really rallied that much, but some of these other names have rallied pretty significantly, and you could start seeing as we start the third quarter, taking some, remember, we're at or near or above all-time highs on some of the indices. People might start taking some chips off the table here and getting ready for second quarter earnings, which you've mentioned before. First 2 weeks in July, very positive, and then we get in some bumpiness in the second half of July. So people might be taking some chips off the table in some of these widely held names, Tom.
Yep, not a bad idea. VIX is below 16 level. We haven't seen these points as far as the VIX goes since February highs that we saw in the overall markets. But let's expand this conversation and bring in Nathan Peterson, Director of Derivatives at the Schwab Center for Financial Research. He's on the phone today. Nate, give me your take here on the market, the rotation that we're seeing, but also the fact that we're climbing this wall of worry, but it seems like any headwinds or roadblocks to risk on trading is kind of getting pushed to the side, right?
Yeah, Tom, it's really tough to break momentum when you have this FOMO, MOMO type market near all-time highs that's, characterized by, a lot of performance chasing. And then as long as the indices continue to make fresh highs, then, they're getting rewarded. So as long as they're getting rewarded, it persists. It continues. That momentum continues. Look, that's going on. There is on the bullish side, just, we've talked about it, in the previous weeks, but this secular growth story that's both AI and Web 3.0, that's also fueling a lot of that optimism and a lot of the trading activity. And the way that I think the reason that we're not reacting, so it's not just Brazil at 50%. It's also the copper at 50%. And with markets hitting new highs as they are, I feel like President Trump is emboldened to actually put on more tariffs, and because it almost gives him permission to do so, saying, hey, look, see, there is no inflation. The market doesn't care. We're not going to get a sell-off like we did back in April. And then from the investor-trader standpoint, it's once bitten, twice shy, where, hey, we sold off stocks back in April because we were freaked out, but we're not going to do it again. So we're just going to ignore, essentially, these tariffs. But I'd throw out that there is some complacency, and not because of a 16 VIX, we're not getting 1% moves on the S&P, daily moves on the S&P 500, which is what that 16 VIX reflects or suggests looking forward. It's complacency that there is a vast difference between 10% and 50%. And I'm not saying he's going 50% for all these countries, but we know 20 to 50% is in the cards. And on copper alone, which is at all-time highs, we import 45 to 50% copper into the United States. Who's going to pay that 50% tariff, assuming it stays in place? It's either going to come out of corporate profits, or it's going to be passed on to the consumer or the corporations that are buying industrial applications. Copper goes into a lot, just like oil has a big play in the global economy. That's why they call it Dr. Copper, and it's an economic barometer. I think there's complacency, to be honest. I'm not saying that there's going to be any evidence that's going to show up between now and I'd even go out to perhaps September. But in Q4, maybe into the late September, we might begin to see some of the inflationary impact that a lot of the bears have been pounding the table on. And I think the difference is 10% versus 20 to 50%.
Yeah, and I think that's kind of what's confirmed. The Fed's Governor Musalem came out and said that he expects some of the inflationary numbers to start showing up here in the June data. Next week, we get June CPI, PPI. So will that be finally reflected in the inflation numbers? But I don't think the consumer's been taking the brunt on anything as far as price increases go, Kevin. And that's kind of maybe led to this kind of rebound, especially on the discretionary side and that push into big tech, right?
Well, I think the U.S. consumer has had a nice little recovery here in the month of June from the April and May lows. What's causing that? Could it be the stock market? Feeling better about your overall investments gives you a little more reason to go out there and spend. I think I saw Alberto Musalem's comments this morning that they think some of the inflation from tariffs is going to start showing up in June. It better show up in June, Tom, because if it doesn't, then the Fed got this dead wrong. And remember, yesterday's Fed minutes, that was about 2 weeks ago. It was June 18th that Fed meeting happened. And they thought their projections were for unemployment to go to 4.4 to 4.5. Well, it just came out 4.1, right? Those numbers all look wrong now, Tom, frankly. And if that data doesn't show up soon, remember their PCE and core PCE numbers were all higher and above 3. It better show up sooner. They're going to be dead wrong on these projections.
Well, I think that's the prediction that a lot of people are kind of stating at this point, that they're already behind because inflation has come down. The jobs market's robust, right? That's one of their mandates, Nate, and you have to take that into consideration. If the job market's robust, people will spend. Stock market's at or near all-time highs. That's wealth effect comes into play here. Those GDP numbers were skewed in Q1. Those will ramp up in Q2 moving forward. So maybe we should be rallying, and maybe the forward-looking PE on the S&P 500 that's elevated should be here, Nate.
Well, I think it's elevated a lot because of what I mentioned with AI and Web 3.0 and the investment binge that's going on there, and that looking at the likes of Vertiv, Vistra, Oracle, the power deals, etc., everything that gets announced around that suggests we're not in the late innings of AI. So I think the market recognizes that, and they are repricing a lot of tech AI-related names, chips, etc. So I understand why the multiple is high. This is, akin to the internet in terms of the optimism and the investment and the technological shift that is underway. So I get that. But if you're going to say that, okay, the labor market's great, the Fed needs to cut, et cetera, and everything is, glass half full, have we priced it in, though? We're at all-time highs with a forward PE of 22. We basically have a 0% discount for the potential impact for tariffs. And I think, again, the reason that we're not really biting on a lot of these tariff headlines, so to speak, is A, the market either doesn't believe that those are going to be the final rates, or B, they're just not convinced yet. They haven't seen it on the hard data in terms of either impacting economic growth or on the inflationary side. But I just think you have to at least respect the potential for that to be in play. If we were at 10% and we knew that was the case, then I would agree and say, you know what, those tariffs are negligible. Those costs are being eaten. They're not being passed through. No big deal. But over the past week or so, there's been a slew of higher tariff rates, starting with Vietnam last week, that have the potential, at the very minimum, I think, to eat somebody's margins, eat somebody's pocketbooks, and therefore, we've seen earnings estimates on the S&P 500 come down. We've seen Q2 GDP come down and get revised lower by the Atlanta Fed nowcast. And so everything's fine right now, and I understand the market's conditioned to not react until it shows up in the hard data, but I just think at least respect the potential for things to shift. This could be a totally different conversation we're having in September or October.
Yep. The art of the deal is in full force right now, Nate, and that seems to be playing out okay for the time being if it stays that way. I think a lot of the suppliers, a lot of the manufacturers overseas are eating those tariffs at this point, but giving us a lift here in the U.S. All right, guys, let's take a quick break here. We come back, we're going to take a look at AMD, the chipmaker stock, up about 18% so far this year, was upgraded today, still far off of those all-time highs that we hit over a year ago. Stick around.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Fast Market here on the Schwab Network. We're talking AMD. The stock got upgraded today out of HSBC. Kevin, when you look at this name, you know, the all-time high was in March of 2024, $227. You know, it's still over 35% off of those levels. Having a nice day today in this upgrade, but, you know, this is one of those names where every time you get, you know, a little bit more optimistic in it, they'll come out and they'll cut guidance, or Lisa Su will say, hey, we're taking some market share, but we're not. They're still way behind NVIDIA. But some of the optimism starting to grow here in this name?
Yeah, I think what appears to be happening, Tom, and I've read a couple articles on this, and here's what I take. They seem to be doing better because overall AI is doing better, and companies like Meta and Microsoft, Oracle, a company called DigitalOcean, I don't know that company very well, they're all using these MI300X chips. And so the pie is getting bigger, and AMD's turning out to, again, what we've waited for a long time, being the number 2 player behind NVIDIA. They're not going to catch NVIDIA, but they're still a pretty solid player, and the stock has made a pretty nice recovery from the $76 range up to 144, in the mid 140s, Tom. So I mean, their Q1 results, revenue growth up 36%. Things are getting better, and they seem like they're competing not necessarily for number 1 with NVIDIA, but they're the solid number 2 choice, Tom.
Yeah, that new MI400 chip that they're going to launch is supposed to be, competing well with NVIDIA, but NVIDIA is also innovating at the same time. So maybe their new chip will, double the capacity that AMD's new one does. This is all about a leapfrog game here. But Nate, when you look at this name, it's rebounded over 87% from those lows that we saw in April. The stock got down to $76 a share. What's your take here on AMD?
Yeah, no doubt. 76 back in April. It's that would have been a good buy. Look, the technicals look great. It's obviously in an uptrend. It's about to do a golden cross. NVIDIA hitting all-time highs is kind of symbolic, or conveys that the sentiment shift around where we stand on the AI trade has changed, and they're under the process of re-rating a lot of the AI-related type names. Oracle has helped with that. Micron's earnings last week looked really good. And within chips, and when we think AI, I do think that it is NVIDIA, AMD, and Broadcom. Those are the 3 that are really demonstrating that they kind of, hold that market for the most part. And if you trust HSBC and their upgrade, Melius Research did an upgrade on AMD and bumped their target to 175 back on June 23rd. HSBC comes out, doubles their price target to 200. They raised their 2026 AI revenue forecast by 57% above consensus. They bumped the selling price for their MI350 from 15K to 25K. If you trust these firms, these brokerages and their channel checks, and that this is actually what's going on, these types of price increases, this just speaks to the demand that is still out there. It's very robust for AI. And again, this kind of suggests, I don't know if it's inning 3, 4, 5, 6, 7, or whatever the case, but that demand has not abated. And so you're seeing a lot of the analysts change their tune. The price is reflecting that.
This CapEx spend that these big tech companies are doing doesn't seem like it's slowing down at all. And, it's a competitor. Kevin mentioned the growth rates. The data center growth rate was above 55% last quarter. That's what they're relying on. And their CPU business was actually showed some growth too. But Nate, you got an example trade for us here in AMD. Break it down for us.
Yeah, no doubt. So, let's assume you're bullish. It's an example trade. Let's assume you believe Melius Research and HSBC, and you think they know what they're talking about in terms of their channel checks, and you want to get bullish on the name, and you're interested in playing the earnings, which come out on August 5th. One way that you could do that, you could put on something like a vertical bull call spread. But another way to play that is a diagonal, and that's simply on the long side. I'm going to, in this example trade, going to the August 8th 140 strike call and purchasing that. And then I'm going to the July 25th 147 call out of the money, collecting roughly $3.50 for that. And the net debit combined is about $6.90. And the idea with a strategy like this is that you have a little bit more flexibility rather than just with your traditional bull call spread so that when we approach that 25th expiration, depending on where the stock is trading, you could do some rolling to the April 1st strike, sell another call depending on where it's trading. And then when we get to the earnings date, some option traders would then convert it then at that point to a vertical call spread, because the August 8th expiration for the most part is going to hold that implied premium for the earnings move. So this is just a modification of the vertical bull call spread. It's a little bit like a synthetic buy right, but true synthetic buy right, you probably buy a long call that has a delta like 80 or above. That's not the case here, but it's a little bit like that. It mimics that. And look, if you get into a strategy like this and we get to the week of the July 25th expiration, and let's say AMD is trading around 147, you don't have to necessarily react if at some point between now and July 25th AMD gets above 147. You can let some of that time decay take place, and then in the event that it is trading above there, you can then make another decision, and if it is above that 147, that will net you a profit if you close out both legs.
All right, yeah, let's break this one down. Going out to the August 8th weekly cycle that expires in 29 days, buying the in-the-money 140 strike call. It's got about a 61 delta on it, so it reacts more like the stock the higher the delta is on this. And then against that, you're selling the July 25th weekly 147 strike call. 690 debit, there's your risk, $690. Anything above about 144 is going to be potential profitability on this. You want it to go towards 147. That's not too far above where we're currently trading. But Kevin, Nate made a good point on this one, is the fact that, hey, you're buying the option series at August 8th that contains the earnings event in the stock, so that volatility, because you're buying Vega in this position, is going to probably, or most likely, will hold firm.
Yeah, here comes the trade-off discussion, guys, on option. Because Nate's buying an elevated level of implied volatility, right? He's buying about a 52 in aggregate and selling lower. That doesn't seem fundamentally sound. However, because you know that's the event, because the Thinkorswim platform tells you that, you know that in most cases, I don't want to guarantee anything, but in most cases, that vol should hold or go slightly higher at those levels. So the bad news is you're paying a little more for the price of that diagonal. It's trading $7 diagonal, trading about $7. And so you've really got to be cognizant of if it gets to that short strike. But you're already trading the event implied vol. So the good news is that will probably stay steady or has the potential to go higher. Do we know for sure? No, we don't. But that's part of the trade you're putting on here. You're buying the earnings event and then chipping away at that net debit. Think about it, Tom. There's about $2.15 in that short 147 call. If it were to move towards 147 call, picture that long option holding and the short call losing $2 or a big fraction of $2. So this has a setup. It doesn't look pleasing to the eyes, but when you do a little deeper dive, it looks much more attractive.
Yeah, and Nate mentioned the fact that the ability to roll or adjust those short options on this trade, where you're buying the ones that are closer to expiration, that short 147, rolling it to the next week, that could collect you some pretty hefty credits on this one. Just the near-term 1 week wide call calendar on the 144 strike between this week's expiration, which expires tomorrow, and next Friday, that's a $1.90 credit already. So if you have that ability to roll when the market's open, there's liquidity provided, you can collect some big hefty credits ahead of that earnings event on this type of trade. And you can roll to the same strike. You can adjust that strike also. But the whole idea is it grinds up towards 147 for max potential profitability. You have some assignment risk on that short option also going into expiration over the next couple weeks here. All right, let's move on. We got taking a quick break here. We come back. Mike Folio is going to join us to look at sentiment data on Carvana. This stock has just rocketed over the last couple of years, up over about 170% over the last 12 months. Stick around.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's going to be Landon Swan. He's a co-founder of Lightfolio. Welcome back to the show, Landon.
Thank you. It's great to be here.
All right. So your data historically has been pretty positive over the last year and a half or so on Carvana. Is it continuing because the stock continues to move up to multi-year highs?
Yeah, this is an insane stock. I mean, I don't know if you guys can pull up like a 5 or 6 year chart, but this is unbelievable. I mean, I don't know of many stocks that have gone down 99% and then 100x after that. So back to where they were, right? I mean, it's a complete U shape. It's absolutely wild. Went from 376 in August of 21 to 3, and now we're back up to 350. And it's one of those stories. It's a huge turnaround story. It's really interesting, obviously. And the data is incredible on it. I mean, when you look at what they've done, you talk about how they're plus 33% on retail sales year over year. They're finally up to about a half a million pace on cars sold, and their goal is to get to 3 million on an annual basis. So they want a 6x from here. And even if they did that, that would only take them to 5 to 7% of the total market, depending on if you're counting used cars or new cars as well. And so right now they're at about 1% of the market, and all of their metrics are beating the competition. And then they're kind of a head scratcher. Like, how do they do it, right? I mean, they're paying more for their cars. When you go to sell your car, they're paying more than CarMax. They're paying more than Vroom. And so their supply is higher, but then also their margins are higher. So they're making more money per car. CarMax is around $5,700. Carvana's around $6,900. So they're paying more, but they're making more as well. And it's really all about the efficiency, that how profitable they are. They have a better mix of retail versus wholesale. So they're selling more to people. They appeal more to the average person than CarMax and competitors for whatever reason. I mean, it's, the marketing is pretty cool with the tower, but everything is kind of moving online. Many people are now preferring to buy cars online, and for me personally, I would say new car, sure, I'm comfortable buying that online. Used car, though, you got to have a lot of trust in that dealer and that all the service reports and everything to buy it online. But that's the way things are moving, and so I think they've established this really critical point of trust where people can say, well, if I buy it from Carvana, it's going to be good. It's going to, I'm going to get what I pay for. I know it's going to be a decent deal. And so that is very, very valuable. And so they're starting to build this reputation where they pay more, you get what you pay for, it's a fair deal. And they're also they're kind of cool, right? They've got some advertising going with John Hamm, and they've got pickleball stuff that they're sponsoring. So they're getting their name out there in a way that equates them to not only cool but also great value. So the data that we've got is showing that that's continuing. I mean, when you look at web visits, they're plus 10% on a year-over-year basis, continuing to climb. They're hitting all-time highs on web visits. Compare that to CarMax, down 17%. So obviously they're eating their lunch, and they're doing a great job here. And when you look at the kind of the year-over-year, the line chart about the web visits, it's exciting, but just I got a little pause, because if you look at where it was in January of 24 there, that yellow line, it was pretty low, seasonally low. Makes sense, people aren't buying as many cars then, and it ramped up really strongly into the summer and fall of that year. Pulled back again in January, and then we got another ramp up, but that ramp up didn't continue at the same rate as last year. So yes, it's higher highs, it's higher lows, but the strength of the uptrend is just waning just a little bit. So while they're continuing to do really well, my only hesitation is what's priced in. Like, how much growth is priced in? Because I know a lot of people, that's what they look at. They say, well, they're only 1% of the market. They're going to get to 5% of the market. So they're going to 5x from here, and everything's going great. And it is. Everything is going really well, but is it going at the pace that the market expects? So that investors expect, excuse me. So, and there's the chart that I was talking about. You just don't see that. I mean, that's insane. And to know that that's from 300 something down to 3 and back up to 300 something, that's normally you see a chart like that and you're like, all right, but what's the y-axis? Well, no, the y-axis is pretty much all the way to 0 there. This isn't skewed, and so this is an insane chart. And I really hope there's an investor out there that bought at 350, rode it all the way down, and said, nope, I'm holding, and now he's back to even. That would just make my day if I heard that story. But that's where we're at on Carvana. Optimistic, just curious, and a little bit concerned about what are the expectations out there.
Landon, what took this stock to $3.55? It was December of 2022, not that long ago. Was the volatility in the used car market during and after COVID, and their ability to manage that. Now, you mentioned the number that $6,900 gross profit per unit. I have friends in the car business. That's the number that no one can believe. They just don't know how they're making $6,900 per vehicle. And think about this. Q1 sales, 133,800 cars at $6,900 gross profit per unit. That's a head scratcher, because no one in the car business can understand how they're doing that. Now, that said, if we can't guarantee that uncertainty may not come back to used cars again, what do we say? Because the stock is not cheap. The numbers are video game numbers that they're putting up. What do you see as the risks here, other than instability again in used cars?
I think it's the biggest risk is, other than the head scratcher one, which, we can talk about, but I think the biggest risk is what are investor expectations, and are they going to continue to live up to those expectations? Because the story is they're small, they've got unbelievable momentum, they're taking everything over by storm, and if that growth is all priced in and there's a little bit of a pullback in the acceleration, right? It can still go up significantly. Like, we've got plus 10% on their web visits on a year-over-year basis. That's still positive, but were they expecting 20, right? Were they expecting 30? And if so, then that's negative, and that multiple goes both ways, as we talk about all the time. So when you price multiples in the future, any kind of hesitation on that multiple goes both ways on the stock price. And obviously, this is an incredibly volatile stock. And so between the head scratcher and the investor expectations, I think that's where your risk is for sure.
Landon, just full disclosure. I mean, I've used Carvana in the past, and you mentioned the competition with CarMax, right? They offered like 18% more. I just don't understand how their margins can be so high, because they're both used car retail sellers. Those, Kelley Blue Book and all this stuff, they tell you basically what your car is worth. I just don't know how they're making these margins. And Landon, when you see the stock with this parabolic move, the way it has snapped back, I mean, when you give an earnings score on a name like this, you got to be wary, right?
You got to be wary, obviously, yes. And so for us, the stocks run an incredible amount, and the like I said, the web data is strong. Everything that's coming out from Carvana is strong, but because it's run so hard, and because the web data the acceleration of the web data has slowed, right? The derivative there, that puts us into slightly negative territory if they were to be reporting soon. But this is one that I can't buy personally, because just like Kevin says, I don't understand it. Like a lot of companies, I don't exactly understand how Amazon works, but I get it. Like, I'm a customer, and they make incredible margins. They're super efficient. Carvana, I agree. Like, how do they pay more? How do they make more? On all sides, they're just doing better. So they've either solved a riddle that no one could solve for years, or there's problems underneath. And it's tough at 350. It is, but the comeback is unbelievable. I mean, the story of the comeback is just unbelievable. And I think that you just have to kind of step back and say, all right, assuming that everything that is coming, all the numbers are correct, then this is one of the best comeback stories in history, and they're on trajectory to do what they're saying, and they're going to have 5% of the market. So that if you accept that first part, then all right, buy on dips. If you're not so sure, or you're worried that expectations are too high and investors are getting ahead of themselves, then you might want to stay away from this one. So it's very tough, but absolutely fun to watch, that's for sure.
Yeah, beta of nearly 2, so this thing moves double about what the S&P 500 does on a percentage basis. All right, great stuff as always, Landon. Appreciate it.
Thanks, Tom. Thanks, Kevin.
All right, that's Landon Swan, co-founder of Likefolio, breaking it down. Kevin, you got an example trade for us. The stock's actually down $3. Not too many negative days over the last couple of years, but how do you want to look at this one from an example trade?
They don't have earnings till the 30th of July, Tom. And so what I looked at here is just going out to that 25th of July, staying ahead of that date of the earnings date. And I'm, doing a trade that we do a lot. It's a complex trade, selling a call vertical to finance the purchase of a put calendar, Tom. So I went out to the July 25th, which allowed me to move further and further out of the money. I'm selling the 375, 385 call vertical. Now that would be a new all-time high and then some. And that's pretty much in line with that expected move. You're right though, the stock has moved lower since we looked at this trade. Selling the 375, 385, and then buying the July 25, 330, July 18th, 330 put calendar. So buying the 330 put calendar, selling the 375, 385 call vertical. And for that total package, it was at about a 30-cent debit, Tom. Now it's about $1.30 debit. So markets are, you use a little price discovery here. The markets are a little wide. It's moves a lot all over the place. But Tom, this is one that, even if it stays relatively range bound, you do well. You're collecting a fair amount of theta. You're short about 12.5 deltas, Tom, and you're looking for just the risk in this trade is above the 375 strike. There's the risk of about $1,000 plus whatever you spend on the trade, Tom. So if it's 30 cents, it's 1,030. If it's 130, it's 1,130. That's the risk. But you're looking for a move back down towards that 330 strike, Tom.
Yep, let's break this one down. Complex four-legged spread here in the July 25th weekly cycle, selling the 375 call, buying the 385 call, short $10 wide call vertical. That's helping to finance the purchase of the 330 put calendar, buying the July 25th 330 put, selling the July 18th 330 put. So buying the 1 week wide put calendar, help finance by the short call vertical. 30-cent debit if you pay that, $1,030 as Kevin mentioned. You might have to pay a little bit more for that. But the break evens, you know, you've got two of them, right? Because you're paying a debit for this thing. So it's going to be around 355 or so to the upside. And then it'll be only 30-cent debit until that 375 strike. But then if it does fall like maybe below the 300 strike or the 290 strike, that's when you still have that risk that you paid, the debit you paid on this complex trade. You do have some assignment risk on that short 330 put that expires over the next 8 days also, so keep that in mind. But this might be the way to look at it if you think this thing is going to grind lower back towards that 330 level, but you do avoid earnings, as Kevin mentioned on that example trade. All right, we're going to take a quick break. When we come back, we're going to take a look at Alphabet. The Google parent stock is down about 6% this year, coming under pressure from AI search competitors in this space, maybe from the AI side.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to Fast Market here on the Schwab Network. Before we take a look at Alphabet, let's take a quick look at the markets, which are near session highs as we speak. Still some weakness in the tech space. 9 out of the 11 S&P 500 sectors are positive. The only two that are not are information technology and also communication services. S&P 500 up 0.2%. The Dow up 238 points. NASDAQ down 0.25%, and the Russell 2000 leading to the upside, up over 0.75%. And if you take a look at the heat map there, got some green. You got AMD doing well today. You look in the far right there, consumer discretionary is doing well, healthcare is doing well, and financials ahead of those earnings next week are doing well. So not a mixed bag, but leaning towards positive today. Now let's get into a discussion about Google Alphabet here. Kevin, this one's been a laggard in the space. A lot of concerns about moving forward about their search business, digital ad spend. WPP came out yesterday, lowered their estimates for advertising. That might be hurting. But I think the big news here, Kevin, is Perplexity launched Comet, an AI-powered web browser, and then Reuters reported that the web browser from OpenAI is going to come into play to kind of compete against Chrome. They're coming after Google Alphabet pretty hard here, Kev.
Well, Google Alphabet has dominant positions, Tom, in search, that you already mentioned, AI, streaming, cloud, robo-taxis, everything that's most important in the U.S. economy right now, Google Alphabet has a dominant position in. Yet, the stock trades at 18 times forward earnings. The question is why? Why is this happening? Why can't this stock get any traction? And again, Tom, I pay attention to headlines, and they pepper this stock with negative headlines. All day, every day, they had negative headlines that keeps this stock under pressure for some reason. And I don't know, Tom, when it'll end or what will happen, but it's amazing to me that this stock trades so incredibly cheap when they are dominant in just about everything. I mean, it's another head scratcher, Tom.
Yeah, I think it's a head scratcher for a lot of people. Oppenheimer came out with a note yesterday, put a $220 price target on it. They hiked that from $200, outperforming, and it's undervalued, they say, for the most part. And, but if they're coming after search, I think that's still a concern, and that's why the stock's still about 14% from those all-time highs that we saw at the beginning of February, while a lot of the other Mag 7 names are hitting all-time highs or near all-time highs. So I looked at a strategy here, Kev. They report earnings on the 23rd. The bar actually might be low going into this report, but I wanted to avoid that earnings event on the 23rd. If you think the stock is undervalued, or maybe it's going to go higher over the next week or so, this strategy takes advantage of it. So going out to the July 18th monthly cycle here that expires in 8 days, buy the in-the-money 175 strike call. It's in the money by a couple bucks. It's got that higher delta, it reacts more like the stock. And then against it, to offset some of the costs on that bullish call purchase, sell the 182.5 strike call. So a $7.50 wide bullish call vertical, paying roughly about $2.80 debit. It's trading closer to $3 right now because the stock has moved higher throughout the session and now positive on the day. But if you pay $2.80 debit, that's your risk. $280. If you pay $3, it's $300 in risk. Pretty good risk reward setup. If you're paying $2.80 on this one, it can expand to $7.50. And if you pay $2.80, the break even $177.80. That's less than $1 above the current share price in there. Even if you pay $3, break even is going to be $178, about $1 above the current share price. But pretty straightforward, Kevin. But you do need a move to the upside.
Yeah, the expected move in July 18th, Tom, $6. That takes you right to the 182 level, right? And so when you look at what you put on, you lined up that short strike like we talk about all the time with the expected move. Now, that's up or down the expected move. You're choosing a bullish posture on this, buying the 175, selling the 182.5. The risk is whatever you pay for it. It's rallied a little bit. It was just down on the day. It's rallied to be up slightly on the day now. But, Tom, there's going to be a day of reckoning with Google Alphabet. I just don't know when it is, right? And I don't know, when these negative headlines will dissipate, but they just keep coming. And so this stock trades at a low valuation. But if it starts to recover, this trade, like I said, it's the long strike plus plus the debit paid is your break even, Tom.
Yep, and you avoid that earnings event, but you know it's all about duration. What's your outlook for the move higher if you think it's going higher, and how much duration you're going to have in that. Kevin, real quick here, no data tomorrow, but everybody should start getting prepared for a lot next week with earnings and data, right?
Whenever here's what you can count on. When there's a slow week in terms of economic data, which this clearly was, then next week will always be heavy. So yeah, CPI, PPI next week for sure will be a big one.
All right, that's going to wrap it up for us today here on Fast Market, but stick around right here on the Schwab Network. Next Gen Investing is coming up.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Okay, I'm back. 4 minutes left. It's time. I made it back in time.
Investing, Amount Coffee, joined by Jenny Horn. Jenny, we got a
Jenny
market
Horny.
That is a bit mixed, but it's really just the NASDAQ that's a little bit weaker here, led by some of those mega cap tech names that we talk about all the time.
Yeah, I mean, we were seeing strength today in NVIDIA, and actually, shockingly so, Tesla is also up about 2.5%, but Meta, Microsoft, Netflix all lower, Alphabet modestly higher, and Amazon down about 0.25%. So it's pretty mixed as far as then the tech coverage, which I think speaks to the 0.25% move to the downside in the Nasdaq. But Green across the Russell and the Dow. Another leading day for the Russell shares. We see some favorability trickle into areas that are not just tech, which I always think.
I'm back. Good.
What's interesting too, Jenny, is a very opening bell, and you never know how the market's going to go from how it opens. But I was on with Nicole. We opened things up, and one of the things that I've really been focusing on is the relationship intraday between the Russell 2000 and the NASDAQ. Because it doesn't seem like those two are trading in sync. And recently we've been trading with the Russell 2000 out in front. Now we opened with the exact opposite. So my first thought was, hey, if this is any indication of today's intraday action, might be a NASDAQ day. And it was for about 5 or 10 minutes.
I was going to say, I think we're all rooting for that. It just doesn't seem like it's able to hold throughout the trading session, but obviously it's still been a pretty stellar month thus far, as we are now 10 trading sessions into the month of July, which historically
we just now hit resistance.
A point of strength. But as always on the show, we will kick things off with our movers, a tech-heavy, or semiconductor specifically heavy theme to kick things off. We will also be looking at the latest technicals and example trades in Delta and United. Talk about a winning recipe today as Delta shares reacting pretty favorably to what was a mixed report, but better than feared, I think, is the tone here, which thus the rising tide lifting all boats. United
better than feared.
We'll also be discussing a Wedbush, Dan Ives note on Palantir that he sees further upside, calling this the next Oracle as far as its AI plays. We'll also be discussing the outlook for Airbnb, and we'll close things out with the Slim Jim parent company Connect.
She says better than feared. They've been doing, this has been one of the most artificial pumps I've ever seen in my entire life. Fear-mongering for 6 months, 7 to 8 months on tariffs, and our earnings are better than expected. It's because we weren't in a bad spot.
This particular part of the market is mixed, and that's the semiconductor, subsector of IT. And I would say that these are key AI semiconductor players as well, starting with TSMC.
Yeah, and I know we've given NVIDIA a lot of that credit after hitting record highs yesterday, being the first U.S. company, or first company, to reach a $4 trillion market cap, but Taiwan Semiconductor deserves a mention too, and sales are booming as it does ride this nice wave of demand for AI processors, recording a second quarter sales of around $31.9 billion based on its latest monthly report. That marked 39% growth from the same period last year, although this was a slight slowdown from the 42% growth we saw in their first quarter. So they did not give any details on the makeup of their sales. That we'll get more clarity on that when they report July 17th after the close. But Taiwan's growth doesn't quite match NVIDIA's, which we saw 69% revenue growth back in their latest quarter. But what is so different about Taiwan Semi? And obviously they're very different business models, but the fact that NVIDIA does still have to stave off competition in some extent. I know that they haven't really faced that, but Taiwan really commands all of the domestic high-end chip manufacturing without really much competitive threat in the foreseeable future. Intel has been trying to persuade overall the
Tesla's at the yin yang
facilities, but Taiwan has continued to really dominate that growth space. So asset light, one that just consistently puts up double-digit growth. There's really a lot to like about this name.
Yeah, it's an impressive company, and largely as NVIDIA is successful, it's hard for TSMC not to be successful because they build the stuff for NVIDIA. But NVIDIA has a little bit higher margin, and this is a high margin business for TSMC, a little bit more consistent revenues as they're just kind of a manufacturing company. So it's not surprising that it lags NVIDIA, but the correlation real strong.
Yeah, and also, NVIDIA being its biggest customer, but they also do make the core processors inside, like mobile chipsets from Qualcomm, Apple's iPhone. So it's not like they're going to just see like sole demand tied to Nvidia, but definitely is at least a good read.
Definitely helps though.
Yeah, definitely doesn't hurt when you have sales up almost 48% from last year. Now our next name today is talking now some of the maybe lesser thans in terms of the performance we've seen over the year and over the last 12 months. That's AMD, which is actually ironically our really nice mover of the group today at 4.3%. HSBC upgrading shares to buy from hold, saying that AMD is back in the AI game, highlighting that in their January 8th note, they actually downgraded shares on this expectation for weaker 2026 estimates for AI revenue outlook, as well as their AI GPU roadmap seeming less competitive. However, the analysts noted they now believe there could be significant upside to their fiscal 2026 estimates, driven by the revised forecast of around $15 billion, which is now 57% above consensus forecasts, which are shy of $10 billion, driven by this higher than expected pricing premium in their recent MI350 launch. So, all that to be said, I think this is a really interesting way to frame AMD since back in the game, because to me, as far as AMD is concerned and following the stock, they never left. They just haven't been a competitive threat.
Well, in the ironic part too, if you look at the performance, it did run up initially with the AI trade. It went from
Tesla
mid-60s, let's say, a share, which had already been a nice run up from pre-COVID, to 150 on the way to 220, but then it gave back all of that pretty much
then we'll go make me a tea
in the last year and a half. But if you were to look at its performance, a lot of those gains took place in 2023.
305 strike.
In 2023, its earnings per share was down year over year, and its revenue was down year over year. 2024 and so far in 2025,
220,
2026. The numbers are actually starting to look pretty nice from a growth standpoint from AMD. They're not NVIDIA numbers, they're not even TSM numbers, but there's no longer a negative sign, yet ironically the stock has struggled as
this
it
is
turns
scalp.
So this goes to show that the market is, oftentimes pricing things in before they happen, looking beyond today to tomorrow, and it maybe got a little ahead of itself in the first run up, but it has stabilized. It's starting to move higher again, and to the point of this analyst, maybe it is seen as back into the game, even though to your point, maybe it's never really left.
I hope that they're back in the game. I mean, we haven't touched high since earlier in 2024, and we're about 37% off those levels. So I think that as someone that follows the chip stocks as much as I do and the semiconductor stocks, I think I am also rooting for them to be back in the game, as HSBC put it.
Now, I'm in this, I don't know how long. I might just stop right back out.
Maybe I would have never just thought this initially from looking
we can
at
double bottom
stocks, but Micron is actually, of these four, our best performing on the year. So up 44% year to date. The rest of the names are up about 16-17% roughly on the year. So who would have thought that Micron would be actually the leaders for its 2025 performance? Deutsche Bank initiating shares at buy, $150 price target, saying that right now they still see an attractive setup for the stock, and they are constructive on both the cyclical and secular setup facing Micron. Also, Goldman, as part of this broader note on semis today, did initiate coverage with a neutral rating, $130 price target. Both, though, do imply upside from where we're currently trading at 123. The average price target right now is 143 amongst analysts, so that does imply, about 17% upside, with the street high being $200 a share. So there is still conviction on this name, just a bit more mixed, and I think the memory chip market has been one that's challenged by some supply chain snags, and right now figuring out the best way to really balance their supply and demand.
Yeah, this is a volatile part of semiconductors. And you look at the performance in terms of just their growth. They were losing money. And this is an established company in this space. They were losing money in 2023. Revenue was 40% lower in the fourth quarter of 2023 than it was the fourth quarter of 2022. But you fast forward to their most recent quarter, it grew its earnings by over 200% year over year. And it's almost, let's just say it's averaged, 50-ish% revenue growth over the last year, and it's kind of stabilized in this mid to high 30% year over year.
We're at 237 now
for revenue.
I think I did
for
put
context,
this in there.
That quarter that was down 40% was around $4 billion back in the first
Richard
quarter.
wants 420 for Mister.
Their most recent quarter was 9.3 billion, so it's double that mark and then some. So it's back to where it was, but you look at that stock price performance, it's reflective of, are you in that boom or bust cycle? Because it seems like this memory space goes through these pretty vicious cycles.
Yeah, which is, I think, then the risk of like the consistency of some of their earnings and overall metrics. Because yeah, I like consistency when it comes to these stocks. I like to know that we see just relatively stable, maybe boring, but stable again results. And our next name today has not really been maybe as a stable of a player, but it's been a nice name moving to the upside, which is Broadcom here, down about 1.3% today. We did touch new all-time highs today, but we pulled back now about 2.4% from those levels. So Broadcom continues. I feel like the story has been really impressive from like Broadcom as well as Oracle lately with their own specific news. And the street continues to pile in on this name. We did see Goldman Sachs actually initiate coverage on Broadcom, as really highlighting that both NVIDIA and Broadcom are extremely well positioned, saying that although monetization has been elusive, they do see early signs of incremental revenue and much clearer evidence of cost takeout to justify these investments, and they believe AI CapEx can sustain growth from these current levels. So Broadcom does warrant the most buys of all four of these names. 39 buys, 3 holds, no bears in Broadcom as it stands.
Yeah, that makes kind of sense to me. Like, stock price aside, you're investing in a business, and if you assume it's fairly valued. I mean, there's a lot to like about this company. One, you talk about whether it's stable or not. I'd argue for semiconductors, this is about as stable of growth as you can find. Even throughout the pandemic timeframe, it was still able to muster both earnings growth and revenue growth. But what's changed in the last year and a half is this new AI segment of their revenue has essentially opened a new growth stream that has just supercharged the percentages behind here. I mean, this is a stock that, if you were to, average or push near 20% revenue, kind of mid-teens is typically where it had been on a growth rate, pretty good. Well, now we're looking at a company that last year grew 40% in terms of its revenue. In 2018, this company total revenue, $20.8 billion. Yeah, I know that's pre-pandemic and going back in time, but there was no AI segment revenue then. This year alone, it's expected to push that number just in AI. So 5-6 years ago, AI is not a word that we're talking about. Suddenly now it is, and it's doubled its revenue and then some because it still grew its other core business. It's a really strong core business. There's a long way to say it. It also has this new AI segment that's growing rapidly.
No, but that's a really good point also, because I tend to not view them as I mean, now I do, but I feel like they were late to the participation of some of the AI hype because they've been transferring some of that legacy business and now focused more on AI. But it's almost like the comparison of AMD, one of the initial winners of 2024, versus Broadcom now seeing that strength trickle into 2025.
Yeah, and how I would even say that, if you're trying to frame it in a positive way, is it still has a really robust core business to fall back on if AI, for whatever reason, there's some breakthrough and it doesn't need all this fancy technology, or if it does continue, it's still going to be exposed because it's one of its fastest growing segments. So it's kind of like I see Walmart in many ways, where Walmart's got this growth segment through AI efficiencies and e-commerce, but then it's just Walmart. It's like you feel pretty confident that Walmart's performance is going to be okay.
Yeah, and I actually think to that point, the legacy businesses, if anything, maybe some degree of cushioning if we see, like an AI trade not play out the way that the bulls are expecting, although I think that we're now years in, we can say it's sort of here and here to stay. But we'll leave it there for our tech conversation to kick off the show. Coming up next, time to talk a nice move to the upside today in Delta Airlines following a second quarter that was mixed, but perhaps giving some expectations for this peak summer travel season better than expected. Shares are now up just over 12%, as well as United up a whopping 15.4% on the session.
Do. We're at 226. We were at 237. We'll stop out if this thing does not hold.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Boom.
Welcome back to Next Gen Investing. It's now time to look at the technicals and two names flying high, no pun intended. I mean, the puns just come easy when we're talking Delta as well as United. And I feel like I even sensed a sigh of relief when I saw this move today. I mean, forget about even the report because there was still areas
We're back to 238.
But a 13% move now to the upside, I think clearly demonstrates that the market alongside me was like, okay, better than
a little pullback.
Well, the fasten seatbelt light is maybe not off quite yet to continue the lame puns, but
they'll continue.
We can see though, and what I mean by that really is that you're right. We did clear some important levels here. 54, our green line was a notable low point back here, and then a breakdown point after price breached our purple 250 2-day EMA. Then we failed to capture that level once again, but now we have cleared it pretty handily here. We broke out from the upside of our downward sloping channel shape. We had all our moving averages clustered together right on top of each other. Typically that speaks to lack of trend directionality, low volatility. But as we often say, low volatility can be the precursor to high volatility when one of these boundaries is eventually broken here. And now we can see though that price is, for now, hanging on above this red line. Low point, high point, and that's about where we are today, a bit above that 57 level here. So an important foothold for the bulls to hang on to as this trading day comes to its conclusion later today. But notice as well, very heavy volume during this push to the upside on earnings, high volume, and a big move to the upside in conjunction with each other usually is thought to signify high conviction on the part of traders and gives greater credence to the move. We can also see that after RSI was compressing in a symmetrical triangle type shape, we have broken out to the upside alongside with price, RSI pushing into the overbought area, often regarded as a sign of strength in a trending market.
Okay, and I know that airlines have not seen the same degree of strength so far this year as they did back in 2024. So where do we go from here, and what else should we be watching for now in the near to midterm?
Well, as I said, that 57 level, our red line, that's a notable price level that the bulls would want to take out here. If we were to keep moving higher, there's not too much in the way of notable levels or volume. The volume really picks up again once you get here to about 60 to 62. We then have our +1 standard deviation channel, one standard deviation above this solid blue line, which is the linear regression line. So that comes in at about 62.40 or so. To the downside, our green line we mentioned earlier, 54, that could be an area to watch if the move starts to slip. And remember, after a big breakout on a fundamental price change, it's common for a price to retreat back to a supportive area before continuing on in the current trend direction. Not saying that's going to happen, obviously, but that it's a common situation here. So we can see a volume node here just above our level near 55. And then if we were to move lower, there's quite a bit of support and other technical indicators here around that 50 level.
Okay, so a lot to like here, especially on of course, a day we're seeing such substantial momentum to the upside. So appreciate that. And now, As we do look to trade Delta, we do obviously at least have some of the expectations for the rest of this fiscal year now priced in, hopefully. And say we were looking, again, just for example purposes, for an example trade where someone was trying to utilize Delta continuing to take off to continue these funds.
Yeah, what's our favorite term we learned from George Tillis? Gap and go. So if we get the gap and go in Deltas, it's maybe you still got the fashion the seatbelt signs on, as Rick said, but if you think you're going to get through some of these resistance points, continue. No earnings to think about or worry about for the interim in Delta, but looking at a call vertical spread, buying the in-the-money 55 call, selling the 60 call, all of this in the August monthly cycle to give it some time to work. It is making a big move today. Oftentimes, as Rick said, sometimes it can run into a little bit of resistance before it continues on. If that's the case, this one's got enough time perhaps to allow that to happen and still work out. Done for a 250 debit means you risk 250, you can make 250. 57.50 is the break even. So looking for a move higher here, Jenny. Equal risk to reward, and thinking, hey, something shifted. This is a lot of conviction behind this move, and perhaps we're turning the page in these airlines, and clearer skies are ahead.
And people are still traveling. I mean, who would have thought? Because it was all this pessimism around the airlines and the broader tourism stocks, really since we've seen some of the announcements in April. But seemingly so, this fiscal year is looking okay. And that also is the momentum lifting United today. United is actually up a bit more substantially, 15.6%. United closed out 2024, its best year on record. I mean, gaining over 100%. Now has since chopped around a bit, so walk us through the price range that we've established, although today breaking out, obviously.
Yeah, so even though these are closely related companies, both airlines, United's chart is quite different from Delta's here. And in some ways it's stronger because you can see here, back here, after earnings, we have this other gap.
United.
Gaps can provide us with important areas to watch here. The low point after that gap was our green line near 84.
Oh, man.
That was where we tested and then eventually broke lower. Couldn't quite make it there that time. Resistance, resistance, resistance once more. So you could, repeated price level here.
He says what I say, resistance.
Floor, these old highs and then subsequent lows around 72. So 72 to 84 was a repeated range.
I thought this one went a lot higher than that.
Forth here. But now, with this news today, this sympathy move with Delta's earnings, I mean, we're at a large green candle that's near the highs of the day, handily clearing this resistance level near 84. There's not a lot of clear technical signals either to the upside to slow down the move. I mean, the next area really of note that I saw up here is 110, and that's the repeated ceiling that we saw up there near those highs. But, you know, like our last chart too, RSI momentum breaking into the overbought area on the back of this surge to the upside.
So, okay, considering this surge, we do have earnings, and now I believe it's just next week coming up. So either next week or the coming weeks, but they're definitely imminent. But what else are we watching here as we go into now? Earnings with a very different price level just based on today's move than we were, prior to today's session.
Right, and this is where our other studies can perhaps help us out a little more. Like I said, not really a ton of very clear price levels to keep an eye on going forward here, but we can see that right now we are just about at our linear regression line, our line of best fit. This is often used as a notion of fair value for traders. So by this measure, price is right about where it's supposed to be. That doesn't mean it can't go up or down beyond this point. It's just kind of, this is where you might expect to find price based on the data that we have here on our chart. If we were to keep moving higher, then volume starts to pick up again near the 95 level. So even though the price didn't cleanly trade in a specific exact range here, that's the general area where the trading was heaviest. So that's the point to be on the lookout for potential resistance to the downside. 84, our green line, that's the obvious place to be on the lookout for. But also this area right here really stands out here. It's a high point and then a low point. It's our -1 standard deviation channel, long-term purple 250 2-day exponential moving average, and the point of control. So all that's a mouthful to say it all, but around 72 to 73, a lot of technical indicators converge there. That would be a downside area of note.
Okay, yeah, earnings are next Wednesday, July 16th. So we do have that now coming in just several sessions away here. So nice move today, now almost 16% as it continues to climb. So appreciate it, Rick Ducat, as always, for all of the technical help here. And now as we do look to trade United, for example purposes, I mean, considering that we have this massive move today, we haven't even gotten the report yet.
Yeah, I think that makes it a little bit difficult when you're looking at trading it, is because you have something that could be a setback or perhaps, give it more fuel for this move higher. But it looms in like an awkward amount of time away. And so I looked at a neutral to bullish strategy, and it acknowledges that earnings are next week, but there's not a lot of premium in these options, and so it goes out to that same August monthly cycle. Perhaps there's a little bit of correlation between these businesses. That's why you see United reacting the way that it is. And the market's making a read through saying, hey, if Delta's earnings are pretty good, maybe United's will be at least that good as well. And if that's the case, perhaps you're getting some of that move here today. Now, of course, that cannot be true, and a big quick unwind could happen, but it's risk defined. It's the 82.5, 80 put vertical here, Jenny. Looking for at least a 60-cent credit. That means you can make $60 per spread. 81.90 is the break even on 190 in risk. So a little bit worse than 3-to-1 risk reward. 81.90 though is pretty good, almost 10% below the current share price. So you got some cushion, but you also have some time here with that event looming next week.
Yeah, and I think also a good point, because these names oftentimes trade, I'd say, in close correlation, just given that they both have these premium offerings that are right now serving them well, as it does seem those first-class upgrades are driving a lot of the enthusiasm behind at least Delta today. We'll leave it there, though, for our airline stocks. Now, coming up next, time to discuss the latest with Palantir. Now, shares are lower today, but Wedbush says they could be the next Oracle in the coming years, given their presence in AI.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
At each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl?
Schwab, a modern approach to wealth management.
Accelerate your market knowledge and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Next Gen Investing. It's now time to discuss Palantir, as we frequently do for this segment, because the feeling of FOMO has been felt hugely from Palantir, given that it closed out the first or second quarter of this year, as the S&P 500's best performer. Joining us now to talk more about the latest is Marley Caden, contributor here for the network. So we have this note from Wedbush's Dan Ives. I have to say, of all of the names in his coverage, where he has been a lone bull at times, I feel like this one he's been the most right on, because he was an enthusiast years before it really gained all this hype and momentum.
He was. He's been a fan, a long-time fan. I would say this is maybe his most bullish note yet. He uses some pop culture references that I'll tell you about that if you are a football or soccer fan, you will think are pretty potentially iconic, and the mention of a big company. So we raised the price target $160 to $160, up from $140. Of course, this is at Wedbush because this is Dan Ives. Keeping his outperform rating, and he cited growing confidence in the company's AI strategy. He says that is key to his bull thesis for Palantir playing out over the next 12 to 18 months. He says that they have the path to become the next Oracle in the coming years. Not in a long-term play, in the coming years. In short term, he views Palantir could be an Oracle-style company, which is incredible. Now, oddly, despite the note, it is faltering a bit today. As I look right now, we're down less than 1%, but still in the red.
$1 a contract,
for Palantir.
33.
It appears to be there's some underlying lingering concern that Palantir is overvalued just
Tesla.
because it has had a meteoric rise. But Dan Ives did address the potential of that, saying he thinks that bears in the hibernation cave are trying to say it's the top.
Double bottom.
The valuation is expensive today, but he believes that the stock should be compared to famous football or soccer star Lionel Messi, and he says that he believes its path to $1 trillion for the Messi of AI. So a lot of big names if you're a sports fan, or if you, and everyone in the world knows what Oracle is. I mean, he's put out some big suggestions here for Palantir. But, you know, with a high valuation means expectations are extremely elevated for this company, despite the fact that they've had this meteoric rise. And they have had some major initiatives help them, as helping the U.S. Navy operations of late. They have their partnership with Accenture to help streamline the federal government. Their stock's up more than 85% this year. I mean, they're moving well, and they have good growth potential, but they're already really highly valued.
SPY
so
623s are at 334.
It does appear that some of the other analysts are maybe less enthusiastic while still bullish.
Yeah, no, and it's super interesting. And Dan,
Well, honey, ask what political party your fearful analysts represent before you ask any questions. Ask them if they're biased in their politics, and they're just hoping for the worst. Because they're wrong. I've been saying it for months.
Palantir is the future. Do you really want to become the legacy company? And two, I thought the gap between their market cap.
I want Caroline back.
It's still pretty big. Oracle's about a $660 billion company, Marley, but Palantir is 330.
Yeah,
It's half the size already. I mean, think about it. Like, Palantir, no one knew what Palantir was 5-10 years ago. Everyone has known what Oracle is.
It wasn't even public 5 years ago. Less than 5 years ago.
It was a meme stock.
I feel like we've been talking. I feel like we talked about it forever, but it hasn't even been public for 5 years. I mean, their market cap is $1 billion. Now they're half of Oracle's size.
Yeah, 330 billion. So my favorite metric, that's 3 Starbuckses. Starbucks I always use because they're on every corner in major cities. They're scalable. When you think of successful business from where it started, its humble beginnings to where it is, like Starbucks is that story. Palantir is 3 times that in 5 years.
I mean, you want some other perspective.
Starbucks is not that story.
United Health, Coca-Cola, Wells Fargo. And these are huge businesses. Their market cap is higher.
Yeah.
I mean, I guess that's right now the theme of, like, we are looking at some of the costliest companies they've ever been.
God, that girl's got to eat.
I believe it's a 4P like 250 times. So I know the growth has been there. So I know a lot of times we criticize based on valuations, but then, like, Tesla, for example, if you were, arguing at that point, then you would have missed a lot of the upside because valuations can remain stretched. There's just these names that carry these lofty premiums, like Palantir, CrowdStrike are some other ones. So I know that that's even mentioned in this note, but doesn't seem to be deterring him at all away from continuing to be pretty tried and true bull in the
Not at all, Jenny. And I have the number. This stock trades at a staggering 600 times earnings right now. That trades like a speculative, like a crypto. I mean, that doesn't trade like a standard growth stock. So,
and that goes to show how fast it's growing and expected to grow too, because on a forward basis it is like 240. But this is the thing that sticks out to me, because when they start getting to those kind of numbers, you're like, okay, this company is thought of as almost like how Amazon was 5-10 years ago, where it's like it's going to have a spigot to turn the earnings on. 85 times forward revenues. That is, I mean, there might not be another. I mean, this is like beyond Reddit numbers even in terms of how expensive this stock is. But there's a belief that this stock can, continue to, exponentially grow, and it has to live up to these high bars.
And certainly the analyst price target right now, average, is 89.32. So even with all their upgrades they've gotten and all of their price target increases, there is as much as a potential 35% downside risk. So there are some people who are slightly less bullish than Dan Ives is, but Palantir just continues to perform.
This is a career maker or ruiner for that space. I do not envy this. I mean, you can be Dan Ives and you just believe. And
he'll be fine because he covers 50.
But it's also like when you're right, you are so right, and you're a rock star for it. It's why Dan Ives the household name in financial markets. But if you're the guy who says Palantir is worth $30 because that's what your model says, and it goes from 15 to 150, and your clients aren't involved or outright bearish these names, I mean, you're getting fired, and that's the tough part of this business. So don't envy the job.
Nope.
Yeah, don't envy that job. But this is
They're
one
getting
where
fired.
I commend him because this was a new stock. And I know everyone always gets mad when you call companies that. I'm not saying it still is.
Different style, but it's
different
same
style.
crowd. Ran in the same crowd.
It did. We're like the days when AMC were popping. It was like, oh, Palantir is a part of like that.
Okay. I've had enough. I've had enough. HTZ's up 75 cents. Deutsche Bank adjusts price target to 525 from 4. Got a hold rating. Well, okay. This one heck of a run today. And I called this reversal out here too. I wish I'd have loaded up on that. Slash ES is killing it. Tesla's at 281 now. Anybody take Tesla with Bobo? Profit. I'll take $61 a contract. Oh, and I put the wrong date on there? Yeah, 11th. Yippee-yi, it's on the 11th, not the 12th. Will Tesla squeeze this month? I bet you it could. I got this feeling that we're going to have a pullback. So let's take the risk. This is something you put after trading for so many years. You start getting this. I don't know what do you call it. Let's go to SPX. Intuition. It just comes natural. The 6280s. Ladies and gentlemen, Washboardjim has now entered the building. He's looking at the 6280 puts on the SPX. He's getting ready to buy 2 contracts at $2.70. Does anyone have a problem with that? Let me know. James. I should have got him at 270. Oh boy. Today's the 10th. Yeah, $3. 62.80s. We'll just have to wait because I don't really want to buy them here. Respect, 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 respect. There's a wedge. Could buy 2 at 3. A rising wedge. So we hit support. He's not in yet. I can't believe that Asian man took 10 minutes to cook a frickin' egg roll. I mean, he treated it like it was a... I have to admit, he treated it like it was very special. I asked him if he put any gold flakes in it. He looked at me. What? I'd have been a great New Yorker. You know what? Especially if I grew up in the Bronx. Okay, here we go. Almost got it. I should have got it there, but it didn't go. I want 270, please, on this put. I want it now. Oh, I was going to steal some creamer from that guy. I forgot to. There it is. We'll see if we got it right. This is kind of risky. Kind of risky. Well, shoot. Might get stopped out. They're at $2.45. 2.45. There it is. Okay. Now I've got 4. We're at triple top. New high. Kind of got a megaphone here. Well, that timing was not right on that one. $220. Now I got 6. That's it. No more. Well, that didn't work too good. This is a strong market. Hike. Come on. It didn't work out too good. Man, this is hot in here. Oh, God. What happened here? Tesla. Son of a bitch. I can't believe this. I left $500 on the table right here. Jesus. Unbelievable. Gosh. God darn it. $4.10. 220. That's a pretty good trade right there. I wish I'd have held that one. No, I didn't see the latest auction. Well, that kind of hurts me.
Yeah, understood. Kevin, it's so great to see you. Thank you so much. Live at the CBOE for us every single day. And today we climb this wall of worry. Some people think that, there is a little pain in the market. Maybe some things are overvalued. But regardless, you are seeing new highs. I want to continue to talk about the big picture. Mel Casey, Senior Manager, Portfolio Manager at FBB Capital Partners is with me. Your thoughts on the current environment and what's propelling this market?
I think totally the opposite of these Wall Street people. Especially after what we saw through the Biden years with all of that printing. And all that wasted money. Trillions. I hope they never get elected ever again. Because what they did was treason. You got a dead man as president that couldn't even speak for years. And they printed $14 trillion. In 4 years. Not counting what was already funded. Not counting that. And then you got I'm going to see where the debt clock is. I'm curious. We're at 37 trillion right now. U.S. total unfunded liabilities is 104 trillion. Which I think it's higher than that. No, I might be right. Food stamps has always been about the same. I kept good track on that during the Obama years. And it went up during the Obama years. Food stamps did. About 5 million. But it's been about the same ever since. I'm surprised with all these illegal immigrants. It seems like it should be higher. We still have 37 million in poverty, and we have 27 without insurance. So we spent trillions on to insure everybody, and everybody did not get insured. Revenue's up there, man. We got $5 trillion in revenue already this year. That's pretty big. That's a big number. Well, I missed that. That'd have been a nice little ride. Has Jim ever actually stopped out? No. Not very often. I might have done it when I first started. Uh-oh. We're back to $4 again. I can't believe it's Tesla, how it took off like that. I mean, that was a beautiful call. I just didn't know how beautiful it was. No, I was going to go make some chai tea and then get back at this. Still a put, but I don't know if it's a good idea.
And finds real options trades that he's found. And we've seen the airlines leading the S&P 500 today, Tom. And you, in fact, found a United Airlines trade that's bullish. We'd like to hear more about that.
Yeah, United Airlines, all the airlines are popping on the back of Delta's results. It almost gives you a sense of relief here, Nicole, because recessionary fears have gone, out the window. The tariff impact is kind of...
Hey, you bald head junkie. You should have never been in there. What would you say recession fears when we got a business president?
But having a nice big rebound off of those April lows since the market kind of bottomed out here.
And I've been consistent.
Earnings kind of was reflective of that.
I've been very consistent of this. You can't say I have not.
So they're getting more confidence in the economy as those recessionary risks kind of wane and people continue to spend. And this is good for these consumer discretionary type of stocks that we're talking about here with United Airlines. Now, they don't release earnings until next week, so we'll get some more clarity for them. But they're probably the biggest competitor, in alignment with Delta as far as they're doing well on the premium side. International travel has really picked up, and business travel has also picked up. That luxury segment's been doing really well. And United is usually one of the first airlines to cut capacity. Delta said they will in the fall because they've seen weak coach or economy sales. So they're going to start cutting capacity. But United will probably do the same also if they see any weakness on that side of their business. But we did see some bullish activity, not surprising, not only in United, but across all the airlines. Saw a lot of call buying. But one that stuck out to me was in the July 18th, the 90 strike calls. You're going to capture that earnings event, this trader is. Trader bought 4,000 of those 90 calls for an average debit of about $3.90 earlier on this morning. The break-even 93.90 over the next 8 days. We're basically right there right now. Call volume 7 times normal daily average volume that we've seen over the last 5 trading sessions, Nicole. So yeah, a lot of bullish activity in all the airlines, including United today.
Yeah, and as you said, so much of this kicked off when Delta CEO just talked about the demand and how good things were looking. I mean, it was certainly a surprise the way, because especially when we've heard so much about domestic flying and that was less attractive and people were worried, and this came out sort of, and maybe we'll see more surprises throughout earnings season. We will see. Yeah. And then we'll see how much they'll be spending on their cruise trips. I mean, we've seen many of these cruise lines doing so incredibly well. People feel like they get a lot of bang for their buck. But what do you think about Norwegian Cruise Line here? You found a bullish trade.
You can almost overlay the cruise line charts to the airlines, right? They were struggling a little bit after hitting, multi-year highs earlier on this year, and that's due to those recessionary fears, pullback in consumer spending. But we're seeing a nice pop in Norwegian and all the other cruise lines today on the back of Delta's airlines. And they almost gave like a microcosm that the economy's not doing poorly and it's going to start doing better. Still down about 10% so far this year. So it's not quite back to levels that we saw in early January. Broke its 200-day moving average to the upside also. And then concerns about recession, consumer spending, the conflicts in the Middle East, travel. Those are kind of getting pushed to the side as the stock market's making all-time highs. They got some new ships planned, over 3 of them. They're going to start doing river cruises.
NCLH.
Yesterday raised the price target to $25 from 22 ahead of their Q2 earnings,
River
which
cruise
are expected to be better than expected. Remember, last earnings, they kind of lowered their guidance. Capacity basically was at 101.5%. That was a little bit below from year ago levels, so they expect that to turn around according to Barclays. But we did see some bullish activity in this name also.
Norwegian's already up.
So about 71 days till expiration. Trader bought 12,500 of the 24 strike calls, paid an average debit of nearly $1.50 on those, so the break even of basically $25.50 over the next basically 2 months is about 10% above the current share price. So they're giving themselves duration on this one. They did sell out of a long.
I mean, they're raising price target all over on this thing.
Calls, so they sold those, took some profits, and raised the strike
Norwegian Cruise Line upsizes credit facility to $2.5 billion.
To move higher, and call volume in there is about 3 times normal daily average volume. So if you look at this across the airlines, cruise lines, travel stocks, hotels, all doing really well based on the fact that Delta's earnings were pretty well.
Yeah, and I mean, they're trying to get the vibe and hope that people will be spending after all. That's good, at least for this day and this moment. So we'll take it for those bulls out there. Last but not least, we did see Bitcoin hitting new record highs, crossed 112,000 in the last 24 hours. And Coinbase has also done particularly well. When I looked, I saw some analyst calls that were higher. I also saw a double downgrade to a sell. There was a lot that went on. And at the same time, you have a bullish trade that you'll share with us.
Yeah, the stock's been doing really well. As Bitcoin late yesterday hit all-time highs above 112,000 per coin. A lot of the other names within the crypto space have been doing really well. The stock's up over 50% so far this year, near over 3-year highs. But then H.C. Wainwright analyst comes out, double downgrades the stock to sell from buy with a $300 price target. That's sticking your neck out there a little bit, Nicole, for this analyst. He said the stock's valuation has outstripped near-term fundamentals for this company following the 150% rally that they've seen off of those April lows. So sticking their neck out here a little bit. And Bitcoin continues to move higher. The correlation between between Bitcoin and the stock very high at this point. So you'd need a pullback probably in Bitcoin to get to where this analyst thinks it's going. But we did see some bullish activity in here, really short-term positioning, where somebody thinks that the rally is going to continue here in Coinbase. Trader bought over 6,000 of the July 18th, the monthly options that expire in just
Europe.
8 days. The 400 strike calls paid an average debit of about $6.80 for those calls. So you can see here the break even where this trader starts to profit is above $406.80 over the next week. That's about 6% above the current share price in there. Put call ratio, even, the stock's up today on the downgrade because maybe the market's up. There's been a lot of bullishness in crypto. Put call ratio is only 0.38. A normal put call ratio is about 0.7. So yeah, a lot of call buyers in here, but some put activity also. This trader thinks we're going to be higher over the next week.
Thanks for sharing all that and that downgrade from a buy to a sell. On the same 24 hours that Bitcoin hits record highs. I mean, I would understand if they said take some profits, we go to neutral, but they didn't. They went to $300 and that was definitely sticking their neck out. So we'll see. Tom White, great to see you. Thank you for taking a look at United, Norwegian, and Coinbase for us in Options Corner. Still ahead, folks, Dina Jalbert will join us and talk about Ferrero's bold $3.1 billion move to transform the American breakfast table when the watch list returns.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your
Bitcoin at 113,000.
With robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to the Watch List. I'm Nicole Petalides. We're live on the floor of the New York Stock Exchange. Another couple hours till the closing bell. We have a lot to talk about. Dana Jalbert's with us, CEO of Align Business Advisory Services, is here to talk about the deal with Kellogg, with Ferrero acquisition. It looks like they are interested. It looks like the back half of the year, and that we may hear more over the next week. I mean, how likely is this to really happen?
I think it's pretty likely. There's a lot of synergies here. It's a real opportunity for Ferrero to continue on its U.S. buying spree. They had prior had a $2.8 billion acquisition of Nestle's U.S. chocolate business. So this is very much in line with that. And I think we'll certainly plow ahead. There's quite a bit of market share that they're looking to gain and helps them diversify their portfolio of products. So I expect them to march on full steam ahead.
Yeah, I mean, it certainly seems like it's going forward, at least at this point. There was talk that it could, happen, $3.1 billion. Do you think the price is right?
It's a premium for sure, but the market seems to like it, at least as we sit and talk here today. It's certainly a premium, but this is, we're talking Kellogg's. These are brands that are beyond well known when you think about consumer retail products and branded products. Fruit Loops and Frosted Flakes are certainly in most people's pantries, and so I think you're seeing the reflection in that premium. I think also they were willing to pay up for the North American expansion, the U.S. presence. Ferrero intends to make Battle Creek, Michigan, which is their headquarters for their North American cereal, but I think all of their U.S. operations will be headed there. And in today's world where there's macroeconomic uncertainty and tariff issues, having a U.S. presence,
there's no tariff issues, honey.
A boon for them. So I think that's baked into the premium they're seeing there as well. And Kellogg also had some debt, so the premium, I'm sure, is to help deal with some of that.
It's a crappy cereal.
Certainly a
It's the crappy cereal. I mean, just get down and say it. Cereal is not good for children.
Does have the synergies, I guess, with.
I wouldn't
things
feed
that
my
we eat
children
and
cereal.
such. Do you think they were considering a different company? Because earlier
Unless
this
I really
morning
had
when
to.
you spoke, I quickly checked something like General Mills, and while Kellogg was up 30%, General Mills was doing a lot of nothing. So maybe they were talking about this in the back office, and they won't really be looking for more, and they do think that the boards will give the approvals. I don't know how long from, it does say second half of the year. I mean, you got to get the approval of the boards and such, but it doesn't look like they were looking elsewhere.
I don't think so. I think they were very specific and intentional in their strategy. They're really looking to diversify their product portfolio here. As you mentioned, they have a good holding in chocolates and snacks, but when you look at the price of cocoa,
never heard of them.
and the tariff challenges that I'm sure they're having globally, that this is a way to diversify and grow a well-known and well-established U.S. brand. And they're also diversifying in
well-known, I never heard of them.
Shift and pivot amongst changing consumer demand. We talk about Fruit Loops and Cracker Jacks and the more perhaps sugary cereals, but they also own Kashi. And
Sweet packaged food companies, that's what they are.
When you look at your demographics, your higher income households are going to be less price sensitive and more health focused. So they're going to stray less from the sweets and the candies and the sugary things. So that's where I think some of these more health conscious brands that Kellogg's has could lean well in there. Similarly, your lower income or middle income households, they're a little more value orientated. And so, but the brand matters. And so I think they're able to capitate the households in both of those demographics by diversifying their portfolio of products. So I think it's a geographic market expansion play, but it's absolutely a portfolio diversification, and I think they were very intentional about pursuing Kellogg's specifically to your point.
Yeah, they also have, I know you mentioned the Kashi brand as people are being more health conscious, and this is going to become a health conscious question about some of these staples overall. They also have Pringles, which, I love to eat Pringles, and Cheez-Its. I love to eat Cheez-Its. You go to your registered dietitian, they don't necessarily recommend those. They're really not a food group. Who knew? So at this point now, while America seems to be on this kick of less sugar and a little healthier, what about all the names? You have Nestle, Kraft Heinz, James Smucker, Conagra, General Mills, Kellogg. Are they all, they're all going to see fewer sales because America's trending more to protein and vegetables?
Well, I think there is definitely some truth to that, and you can see it in all of those organizations that you just mentioned have been going on an acquisition
missed that
spree.
one. That was a good trade right there, Norwegian. Triple bottom.
I think the one thing you notice is that these foods are shelf stable, and so right, wrong, or indifferent, while they may or may not be the most nutritional, it is the snack that a lot of folks often reach for. They are able to sit in your kid's lunch without going bad. If the power is out and you don't have access to fresh foods, those are always there. They've been these types of snacks have been around for some time. There is as I mentioned, higher income households I think have more of a health focus because the cost of healthier foods obviously is much higher. And so I think the Cheez-Its and the Pringles and the cereals of the world are going to continue to have significant demand. And that's what these companies are banking on, and that's why you're seeing them buy, and diversify their portfolio with these types of snacks and products. I think you're also going to see a lot of investing in healthier alternatives too. I think they want to have a vertically integrated portfolio of all these different types of.
I don't think I bought a bag of chips in a year. Maybe longer than that. And that used to be my everyday treat, that hummus. Pringles, I like Pringles. They always seemed like they were thin and more healthier, but
I mean, I know that Ferrero bought that ice cream company way back. We've been making acquisitions and getting.
I thought this was strange. I went and saw my doctor last week, and I didn't think about it at the time, but she's got her hand on my belly, and I was kind of enjoying it. She was rubbing my belly, and not real hard, but very gentle. And I'm kind of looking at her, and I'm going, you've never rubbed my belly like that before. I just let her do it. I didn't even think about it. And now that I went home and I thought about it, I said, damn, was she trying to pick me up? She was sitting there just gently rubbing my belly, and I'm going, I mean, no pressure, no nothing, just rubbing it. And I'm going, this kind of seems a little strange. And now that I think about it, she asked me, she says, well, I think it's time for your colonoscopy. And so she got into her drawer and pulled out this envelope. And there's two ways of having a colonoscopy, through a stool sample and a regular old stick the rod up your butt kind of thing. And I'm going, I asked her, I said, what's that? She gave me that look, like an eye roll. I said, how do I do that? I asked her, I said, how do I give a stool sample? I asked her which one's better. I said, they're going to do that. The less I know about this, knock me out, put me to sleep. I don't want nobody playing with my butt.
Throughout the year.
Dina, thank you so much. Wonderful to see you. And we covered a lot in these food group and staples and such. Dina Jalbert, thank you very much. Still ahead, we're going to be talking to our next guest, Larry Tentarelli. He has a bullish market outlook, several stock picks you're going to want to hear all about, and his preview of what the Fed meeting will be for the end of the month. Let's get that too. We'll be right back.
Can you drop to the 200. I went out at 62.80, 77. Do it now.
Trading the trending names every day. I'm Tom White, host of Fast Market. Ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim.
That was a pretty good reversal on Tesla. I don't think I expected that.
On Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization.
Did anybody take the reversal on the Tesla call down here? You see what happened, right? Double bottom. I jumped in a little bit too soon and bought the double bottom. Boom! We are now at 185. No, that's not right. What? Oh, yeah, I'm looking at the put. SPX. Drop. We're wanting you to drop to the 200 for an exit idea. It's a $5 drop. And we've got 21 minutes to go to power hour. And I'm going to go into the kitchen. Go. I'd say they're much better today than they were yesterday.
So, as long as we stay in these uptrends, I think that the pullbacks will remain viable. And I've been surprised at how well the markets have worked through tariffs and the big beautiful bill, and they really worked through almost all the news that's out there. So the markets have been very strong.
And so at this point, let's talk about some of the names that you really like. You like Uber,
yes,
right? I want to hear why you like Uber.
So
where do you
Uber,
think this is headed?
I use Uber all the time, so I've got a bias there, but it's been breaking out to new all-time highs. They're the global leader in ride transportation services, and they've got key partnerships with Waymo, Cruise, and other robo-taxi services, which I think could be a big growth driver going forward.
Yeah, I mean, it's incredible. Right now, it's at hit a high of 97.72, and year to date, it's up over 60%. So certainly a great performance. And I mean, if you got lucky to buy on dips, you could have done even better.
Sure.
What about, is it GE Vernova you have here?
Yes.
Yeah, tell me about that.
So GE Vernova is all things power. They've got nuclear exposure. They've got exposure to electrification. That's a key theme right now with the AI data center build out. Also, there's some bullish tailwinds with the White House executive orders on nuclear. GE Vernova is another stock breaking out to new highs. And what you'll see is that all of my picks basically have the same chart. So regardless of the sector, I'm looking for confirmed uptrends, breaking out ideally to new highs.
So you love this momentum that you're seeing. You want to just keep riding the wave. It's not time to get out yet. When we think about some of the software stocks, you have CrowdStrike in there.
Right. CrowdStrike is a leader in cybersecurity. That's a key growth theme. And CrowdStrike, they're the fundamental leader, above average sales and earnings growth. They're the technical leader. And it's really one of my favorite stocks. It's a high volatility stock, so when it pulls back, it can have sharp pullbacks, but a very strong tailwind for that stock.
And what about Snowflake? Where does that fit in?
Snowflake's very interesting. They're in data analytics, somewhat of a competitor.
There is
to Palantir.
626.80.
But Snowflake was a laggard for about 3 years while everything else was breaking out. Snowflake really couldn't get out of its own way. It recently cleared $200, which was a resistance level going back 3 years. And now it's breaking out 52-week highs. And for the first time, they're expected to be profitable. They've been losing money for years. They're projected to be profitable over the next 12 months.
Yeah, I mean, it's really been jumping. It says Snowflake stock jumps 45%. AI Data Cloud drives the record revenue. It's not, you said a 52-week high, that's correct. The last high that I see prior was $237. You think it can get to that?
Yes.
Oh, yeah.
Very, very strong trend. Once it cleared that $200 level, that $200 level was resistance for 3 years. It would run up to 200, go back down, run up, go back down. Now that it's broken through, I think we're looking for more new highs.
Yeah, understood. There's more. You have RTX, which used to be Raytheon.
Yes.
Tell me about RTX.
Very bullish in defense. They're a key player in the Golden Dome missile defense system. They've got bullish tailwinds from the White House. Very, very strong chart. And really global defense, whether it's in the US or in Europe, global defense is very strong.
Yes.
Yeah, aerospace and defense. So a lot of those names, a lot of people have been getting into those. They like some of the names it brought, too. They're doing the same thing in aerospace and defense.
Europe defense, yeah.
Right?
The European defense sector has been very strong. You've got stocks like BAE Systems, Rolls-Royce Holdings. There's a lot of strength in Europe as well.
And what's the final thought here? I mean, if you have cash, do you put it to work or sort of keep it for the rainy day here? What's the allocation of the portfolio, do you think?
I'm 100% invested right now. And we've been 100% invested probably for the past few weeks or so. This is the type of market environment that maybe I'd hold 2% cash would be on the high end. But as long as these trends remain as strong as they are, you've got rising 10-week moving average, rising 40-week moving average. You've got breakouts in all sectors. If you think about it, we've talked about defense, tech, nuclear. Yeah, I would look to continue to add.
You also said the Fed's cautious and not cutting.
Yeah, the Fed can take a wait-and-see approach right now. The labor market's very strong, and inflation is still above target. So as long as you have that combination, there's really no reason for the Fed to cut yet. I know that that's a very, debatable topic. But right now, from the Fed's position, if the labor market is strong, which it is, and inflation's above target, which it is, why would they cut yet?
Larry Tantarelli, Chief Technical Strategist, Blue Chip Daily Trend Report. Thank you so much for being with us. Great to see you. Thank you. Coming up, our panel is ready to talk all about the economy, inflation in particular. We'll be right back.
What's up, Carl Nation? It's your number one broker with the best full-service wealth management skills in the biz.
Tesla.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even
I'm pretty
manage it for
upset
you.
Not to mention
that I didn't hold that call.
For taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages,
and being in the now.
And much more. Best of all, you can ask questions directly to an education coach.
150, 550 now.
At its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
$350 a contract. I left.
Hey, Dad. I have a question for you.
Sure.
When did Granddad
How come Grandpa doesn't sleep with me anymore?
Account with Schwab before
Dad?
there were branches in the area. He really started with nothing. He worked hard, and after he passed away.
Dad, can I ask you a question about Grandpa? How come Grandpa doesn't sleep with me anymore?
Someday it'll be their turn.
Welcome back to the watch list. We bring in our panel to talk all about inflation. Obviously, you know the Fed's focused on jobs and inflation, right? And next week we have CPI, PPI. What do we expect? Eric Pachman's with us, Chief Analytics Officer of Ban Creek Capital Advisors, and Jed Ellerbrook, Portfolio Manager at Argent Capital Management. Thank you both for being with us. So, Eric, some of your thoughts. Are you concerned about inflation moving higher? You know, is it anything from gasoline or anything else?
Yeah, I mean, not really in the near term. When I look at the data, you know, last month we had 2.4. Consensus is expecting 2.6 this month. We are definitely going to see pressure on gasoline. It's pretty easy to forecast gasoline once the month ends. And so we'll see at least kind of a 0.1 point increase. So I would expect headline to come in at 2.5 just with the cycling of gasoline impact. There also looks like there's some headwinds in airline fares, which could bump it up a little bit more. But outside of that, I'm not too concerned. The 2.6 number seems pretty reasonable to me. Tariffs actually have a very, very small, or the items that would be impacted logically by tariffs have a very, very small weight. I estimated somewhere between 12 and 17, 18% within CPI. So we're still kind of like looking at some tailwinds in the shelter kind of going forward. And so overall, we kind of are looking at a little bit higher numbers going into the end of the year because of gasoline, but nothing extreme in my view.
Okay, let's see, Jed, what do you think? Because the Fed's been in this wait-and-see mode, and you have half the Fed committee saying, you know, cut, 1 cut, 3 cut, whatever. You have a mixture of folks voting for cuts, and some want to be in this wait-and-see line. Where do you think the Fed may go with this?
I expect them to hang
SPX is recovering.
It seems like inflation is just kind of pesky at the the recent levels it's been, the 2.5-ish that Eric was talking about. Costco this morning reported their monthly results, and for the second consecutive month, their average ticket increase year over year accelerated. I think it's up to 2.7 or 2.8% now year over year. So we just remain at this kind of pesky, higher than they'd like level, which makes cutting interest rates harder to
justify. We get to 200 here, I'm winning.
So at this point, I mean, what about some of the things within the report here, Jed? I mean, shelter and auto insurance, two things that definitely can remain as a sticky thing.
I think there are kind of sticky high items, that impact the average, and others that maybe are exerting some, more downward pressure here recently. But the overall picture seems to be consistent in that 2.5-ish range. And absent change there, I don't really see justification for cuts, despite, Trump's repeated badgering about it.
Oh, shut up.
What do you think about the auto insurance and shelter, Eric?
Yeah. So, I mean, I actually looked at shelter going forward, and, we're coming off that massive run-up in 2023, 2022, and we're still cycling off of that. So it's not going to help this month that much just because of an odd cycling issue from the prior year. But when I look forward over the next, call it 6 months, if we keep getting these sequential numbers, which are in like the 20 basis point area, we're going to get another, 0.3 points that are going to come off of inflation. So we actually have a tailwind to core inflation because of that. I do expect that to be offset by gasoline, but who knows what happens to gasoline prices going forward. But if they stay range bound like they have, then that could offset. But I would think there could be downward pressure to core. Again, like putting aside what could go on with tariffs, but the CPI weight is, the housing weight is so large. Again, it's like almost 40%. That tariffs really have to rear their ugly head in order to offset what I see as coming tailwinds on the shelter side.
I mean, we still have a relatively tight labor market, Jed. Where does that fit in?
Yeah, it seems to me like the labor environment might be weakening a hair on the edges, but not to an extent that would cause great concern. So I just keep coming back to wait and see. And if you made me bet, I would take the under on 2 cuts before year end.
Yeah, the core CPI year over year 2.8%, CPI year over year 2.3%. We'll get this on July 15th. The Fed does not seem so likely to make any moves. In fact, in the Federal Open Market Committee minutes yesterday, they talked about GDP rising, inflation coming down, and unemployment actually is a better picture than even what they are thinking, it seems. I mean, we just got in jobless claims, for example. Eric, your final thoughts?
Yeah, I mean, I think that the labor market, in my view, is weakening substantially. But you have to really look underneath the data. I mean, unemployment came down because the denominator came down. The workforce participation. You're seeing, a tremendous amount of strength in the last payroll number within healthcare. But the day before the government number came out, ADP showed that healthcare declined by about 50,000 jobs. So we're getting conflicting data at this stage, and then the rest of the strength within the payroll report was in state and local government. State and local government education, which is K through 12 public school teachers, janitors, and the like. Public universities, which are being impacted by NIH funding cuts. The item level detail was not positive. I'm looking for strength in other areas of the economy besides healthcare and government.
I don't like this guy.
Oh, that's interesting. There has been talk that maybe we could be sort of on the brink of a terrible turn. There are the glass half full folks and then those naysayers, the black swan event types. Jed, what do you say to those folks?
You missed the boat.
I lean optimistic. We're going to learn a lot here over the next few weeks during earnings season. There's a lot of talk about, AI leading to job losses, but thus far I haven't seen a whole lot of that. I take Eric's comments about the sources of.
Now, I am the one. When they came out with last earnings, hardly any company could give a forecast. The earnings are going to be good. Surprisingly good. And what are all these people going to say? I mean, tens to hundreds of CEOs out there that have been whining and for nothing. A waste of hot air.
Healthcare costs, and I think there are good intentions there, and it obviously was very necessary because of the tax cuts. But the issue is that this is unprecedented. The entire just straight up and to the right growth that we've seen within healthcare jobs, it's never been challenged by $1 trillion of cuts to Medicaid. So we're entering into uncharted territory.
You idiot!
What happened to the job market if we kneecap the biggest growth driver of the job market over the past 30.
Medicaid's never been tested by so many. We got 34 million people that can work that are on Medicaid. They are workable people. They can work. No, I don't know. There might not be that many, but I know it was in the millions.
So keep it here on Schwab.
Welfare really got out of hand under the Biden administration. Real bad. $20 million illegals, and then you got plus the other 6 or 7 million. I don't know how many million it was. I heard the number this morning. I just can't remember it. Okay, let it be said. Uber, man. Uber might do its thing finally and break the $100. Not today, but I mean, it's coming. Let me see, how many workable people are on Medicaid? Is it Medicaid or 2023? It's 16.6 million working adults out of a total of 26 million. So we got 16.6 million working adults on Medicaid. Medicaid work requirements could put 36 million people back to work. %15 of working enrollees reported having both Medicaid and employer-sponsored health care. May 15, 2025, those on Medicaid, 6.7 million are elderly, 29.3 million are children, and the remaining 37.2 million are working age adults.
As we take a look, we've got some green here. Only oils are down on the day. The dollar at 97.32. Gold up 0.3% at 33.30.50. Crude oil trading down more than 2% right now at 66.82 a barrel. And Bitcoin hit a record high now, a new record high even since last I looked, at $114,015. That's up more than 1.5% on the day. A couple of our big stories there with those all-time highs, but that is not it for the day. So let's take a look at some of our top stock stories on the day. Joining us now to help me do that is Jenny Horn, obviously co-host of Next Gen Investing. So with Next Gen, we do have some Next Gen stocks on here, quite a few tech ones to talk about today. Let's kick things off with AMD. They got a pretty decent upgrade today.
They did, and actually a name that is seeing the most favorable reaction to this upgrade. So I think that the price warrants, some of the upside from the street, the overall community here. HSBC upgrading shares to buy from hold, saying AMD is back in the AI game, highlighting that initially back in January they actually downgraded shares. But now, as a result of their AI GPU roadmap, they did highlight less competition, but they are now believers in the least upside to fiscal 2026 estimated AI revenue as they revised their forecast now to be about $15 billion, which is a whopping 57% above consensus, which sits below $10 billion. So this is, in their opinion, driven by a higher than expected pricing premium following the recent M1350 series launch. AMD still has a lot of fans. I mean, there's 36 analysts that do have buy or buy leaning ratings. There's 15 holds. Not a single outperform, but there is one lone sell. And amazingly so, the average price target right now is 134. So that would actually imply downside from where we are currently trading. But I do think it's funny the way that they say back in the AI game, because I don't know if they ever left. It just hasn't really resonated with the street.
I agree with you there when you said that, and I know it's a quote right out of the note, to say they're back. I knew they had the downgrade in January, but what an abrupt turnaround in a 6-month period that they've raised their price target. You know, as I look at their $200 target, this is a 31 times multiple of what they're estimating their EPS for next year is. So, I mean, it's a pretty substantial upside they're viewing, and they're so far above the consensus. You know, their revenue estimates for AI are 57% above the consensus. So they went from bear into bull and really on the far end of bull territory.
Yeah, and I think that is right now, I mean, it's like you see the mass repricing from the sell side on a lot of these chip names where we perhaps had gotten too pessimistic, or we'd seen, frankly, the AMD hasn't had the performance to match upside though. So I think that rightfully so, re-ratings were definitely moved to the downside, and now it's like the game of catch up where I'll be curious to see if that average starts to inch up. But AMD also still 37% off its all-time highs, which were made back early in 2024. I think perfectly demonstrating that this name was an early winner of the AI hype cycle, but it's yet to really enthuse, and it's continued to unveil new series of architecture and chips. So it's not like it's stopped, providing business in AI. It just hasn't really been read as a clear threat, obviously, to NVIDIA.
Oh, certainly not. And we do need to talk about Palantir. Obviously, Dan Ives put out a note while we're on our AI story, although surprisingly not the same response. AMD up more than 3.5% right now. As I look at Palantir, they're down 0.5%. And this was an extremely bullish note that he gave out.
It was. So now Dan Ives gives a $160 price target, which is a street high amongst all analysts that cover Palantir, and represents about 12% upside from where we closed yesterday. He posted on X initially expressing this growing confidence, though, in their AI strategy, describing it as the company's golden path to becoming an AI stalwart over the next 12 months. The bullish outlook, though, comes as right now many are trying to leverage their AI platform or AIP to integrate data, decisions, as well as operations for clients, which has helped drive a 45% increase in their U.S. commercial revenue. But also, I do think it's important to note that they've been hugely beneficiary of some of these defense spending, even as right now I know there's a lot of uncertainties regarding the strategy of our government spending. There's still, right now, U.S. lawmakers calling for about a 12% increase in defense budgets, specifically here in the U.S. Palantir has been partnering with Blue Force Alliance to digitize and accelerate its U.S. warship production for the Navy. Also has been negotiating to provide technology for the IRS, Social Security, so strengthening its government footprint. And so again, I know that that's always a looming risk, is what happens if we see an evolution of government spending. But so far, under the Trump administration, since his inauguration, Palantir has secured $113 million in contracts, excluding even the roughly $800 million Department of Defense deal. So they've done well under the Trump administration.
They certainly have. If you look at them in the past year, they're up 400%.
It's ridiculous.
This is a
2,500 chick.
Ives acknowledged that he does think that the valuation is a little bit expensive today, but he believes it's warranted. I think he equated him to Lionel Messi, the football soccer star, saying that he believes there's a path to $1 trillion to be the Messi of AI. And I think it's something people think about. Palantir's a name we talk about on a daily basis, but to hear it put in terms like that, he also said it's a golden path to become the next Oracle.
Yeah, and which I think is an interesting comparison because to me, Oracle is like a grandfather of AI. It's like or not AI, technology really. It's like IBM, Oracle. It's like the old school way of, although to commend Oracle, they've done a great job reshaping that. But I would say Palantir is to me everything that represents like huge growth, definitely high valuation, but it's always carried that high valuation. We were talking about that earlier. I mean, it trades at a forward PE of 233 times. Its PE on a trailing 12-month basis is 622 times.
It's
ridiculous.
It's wild. I mean, that's like trading a crypto, not trading a stock. So it is really interesting to see something whose price is not simply tied to the fundamentals that it has, but is speculative almost. I mean, it's a speculative investment. But it seems to be hitting. You know, we're talking off camera. Everybody says, "Oh, we should have gone in on Palantir," and we talk about it every day.
Every single day that it's higher, I know today not so much the case. It has eased off session lows, but every day that passes, you do think, wow, levels just years and years ago, we were covering it, would have been a good thing to get involved in.
That we never thought about it. I mean, they haven't been public for 5 years.
That's
think
astounding.
about how big they are now. Their market cap is $330 billion.
Yeah, and that is in its own right. I mean, I feel like this name has done such a good job carving out a niche for itself, and I mean, being one of the most important and necessary discussions as far as like AI and defense spending, and they're relatively new.
Absolutely. All right, and we have one more to talk about, a huge deal, food deal here, Kellogg and Ferrero.
So this is interesting. So the Italian candy maker behind, of course, Ferrero Rocher, Nutella, struck a $3 billion deal to buy the breakfast cereal conglomerate WK Kellogg in a bid to boost its business in North America. So Ferrero, which is a family-owned company, announced the deal Thursday. It was confirmed first by the Wall Street Journal, but WK Kellogg shareholders are set to receive about $23 a share in cash, representing about a 40% premium to prices prior to rumors that this deal was going to be announced. So it does give that enterprise value, including debt, just over $3 billion. And a huge spike today in WK Kellogg as a result.
$650
the deal
now.
would combine two pretty storied
That's
consumer food
$430
makers
a
from
contract.
both
That'd
sides
been
of the
$2,000.
Atlantic. And as we know right now, with prices and the concern of like the trade down effect,
Nobody
very
would back me on that
interesting time to get
trade.
involved in this space. As I mean, Conagra, for example, just gave
Jimmy called the
dismal
reversal
guidance
on
for the rest
Meta.
of this year. A lot of these staples are just frankly underperforming the overall market, but it will be interesting right now as Americans are seeking still a way to spend at grocery stores, but the appetite is, no pun intended, quite literally changing. Higher prices have then helped push towards healthier options. So the timing of this deal, I have to imagine they're getting it at a relative discount because we've seen shares beaten up pretty substantially. WK Kellogg has also been under fire. I was reading this really interesting note about like from a PR perspective for using various artificial food dyes in some of its cereals, which I say right on. I love Fruit Loops, so I'm like, give me all of the artificial dyes.
Well, it'll be curious to see once they come together what sort of changes are made, because they are buying some of the most iconic sort of Americana brands that exist. You know, their Fruit Loops, their Rice Krispies. These are household names, but like you said, household tendencies and buying strategies are changing. So it will be interesting to see how that plays out for Ferrero during this acquisition. Thank you, Jenny, for all the insight on the top stories. We really appreciate you being with us. That's Jenny Horn. And now we'll switch gears to the macro side of the market, and we'll welcome in Jim Yorio, the Managing Director for TJM Institutional Services and the Unfiltered Investor newsletter. Now, Jim, thank you so much for being with us today.
Thank you for having me.
Oh, we're so glad to. Now, we have seen all week President Trump calling for interest cut rates. Now, do you think that we need to see some big cuts soon?
Yes.
Or are they down the line a ways?
Okay, so need is probably the operative word here, and I'd say the answer to that is no, not really. I hate to give credit to Donald Trump because I think he's right. I think that the situation does call for some interest rate cuts. And
These one-liners just kill me.
One, the real estate market.
They never said this about Biden. Well, Biden couldn't speak anyway. I hate to give President Trump credit, but he is right. He's damn right. These interest rates have been high way too long. And we overspent. If anybody wanted to disagree with any administration, it would be the Biden administration on the printing. that caused this high inflation. I'll never get over it because I've been in business too long. I'm 30 years. But I'm a business person. I mean, I have a different perspective on life. I mean, I'd love to write a book about my 30 years of owning a business and what you have to go through. The racism, the prejudice, the assuming that, you know, just because you own a business that you're rich. I mean, I had girls just by the dozens trying to cling on to me because I owned a business. And I told them, I said right out, and I said, I ain't rich. And then you don't hear from them again. Maybe I am, but I ain't telling them that. I can debate these guys forever.
Inflationary. Everyone, you know, all these analysts at the beginning of the year said tariffs are strictly inflationary. They're missing the point.
Yes, they are.
History shows us that one, the exporting country oftentimes subsidizes the commodity being exported. The exporting company sometimes compresses margins to stay competitive, as does the importing company. And only then does it get to the consumer. And it's not even inflation in the truest sense, which, as we both know, is a rate of change. It's not a one-time price adjustment. So we're seeing now this happening all year with the tariffs have not been inflationary. But then all of a sudden this week, we see the one in copper, where copper shoots up 15%. I can't see how that's not going to be inflationary if that one sticks, because we don't produce enough copper in this country to satisfy our demand, nor can we flip a switch that turns it on. But it is ironic to be arguing that tariffs aren't inflationary, which I have been arguing, in the week that the one little thing that could be inflationary surfaces.
And I was planning to talk to you about copper because I know that it's been one of your largest long positions for a long time, even without any of us knowing that that tariff was coming, that 50% tariff. How has that changed your thesis, if at all, with this meteoric rise we saw in copper in response to that headline?
So since I don't believe the tariff is going to stick, I hedged some of my longs. Like you said, I've been long copper for about 3 or 4 years. My initial thesis was electronic vehicles, but as soon as that came out of the picture with the Trump election, it morphed quite easily into power needed for AI, quantum computing, crypto, both mining and servicing the space. So I really do think we're operating at we need more copper, and it's going to be a good position long term. That being said, a 18% move off of a Donald Trump headline to me seemed excessive, so I did hedge some of my positions. I'm still long, mind you, but I don't think this is the right move. And I'd love to say that I made money on it because I predicted this coming, but I certainly did not.
Well, I certainly think you made some money, though, at least, so that's okay. Whether or not you predicted it. Now, somebody else that's had a meteoric rise that I do want to talk about before we have to say goodbye is Bitcoin. Hit a new all-time high today. I think they may have touched another one just since I've been talking to you. I'm going to double check. They are at 113,732.53. Bitcoin has been on such a wild journey, almost moving into this sort of safe haven reserve asset space. You know, what's your take on Bitcoin and how much farther it can run up?
So to say safe haven and Bitcoin in the same thing, I know what you're getting at, and I don't disagree, but it seems kind of ironic because the thing can move, have 30% swings in a week quite easily. So I'm not sure it's that safe. So my thesis on Bitcoin always has been broad adoption, and it has been for years. What's gone on in the short term, and I put this yesterday morning, I put it out to the subscribers to the Unfiltered Investor, is that if it trades 110,500 or 111,000, that was breaking out of a 2-month long consolidation pattern. Now the fundamental story hasn't changed. When companies like BlackRock and the United States government are spreading and expanding their footprint in crypto and Bitcoin specifically, that's something I want to be involved in. And I don't really care about the technology behind it. I just care about being left on the sideline if it's rallying. Now to the technical part. It breaks out of this 2-month wedge pattern, and all of a sudden everybody's jumping in when it hits 111. So this has been a good move. My target on the upside in this move from a technical standpoint, this is not the fundamental argument, from a technical standpoint is about 122,000 to 125,000 in this move.
And how far up you think? So you think we could potentially see a 125 in the near term?
That's what I think. Within the next few weeks, my target is 125. But as far as long term goes, I think in 10 years' time, Bitcoin's either going to be $1 million or it's going to be zero. I actually think if I had to place a binary bet on one, I'd say it would be zero. But why do I hold it then?
Wow.
In case I'm wrong. I don't want this thing to shoot up to $1 million and be left on the
How could it be
sideline,
zero?
because if it does, the backdrop will be somewhat scary. Because at the end of the day,
I can't see it going to zero now.
Stewardship of fiat currencies, particularly the dollar, and I don't believe we have particularly good stewardship of our currency. So,
If we keep spending out of control, I can see it going to $1 million. You know, like a $100 trillion debt. I could see it going to $1 million. I got some girl wanting me to download WhatsApp. Is that a good idea? Stranger? She's flirting with me. She's flirting with me. You think it could be danger? Yeah, that's what I'm thinking too. I don't have WhatsApp, so I don't know how stable it is. I mean, you gotta watch it, man. I get 2 or 3 girls a day try to pick me up. Or a week. I can only stay with Anna. I want to see what that WhatsApp is. A review of the evaluation. Customer service is horrible. Now I'm receiving 3 to 4 spam calls per day. So yeah, I'm not gonna do it. She ain't worth that. What's up? What's up? Shoot, that's like asking a guy to go to bed with you on the first date. $62.90s.
And then subsequently her eponymous line of dressings and dips that have been around, believe it or not, for 130 years.
130 years ago, Teresa Marzetti founded this company that now we're named after.
It's amazing. It really, the Teresa Marzetti story and her husband Joseph is an American story. They came to the United States as first-generation immigrants, started a restaurant, turned into a white tablecloth restaurant, had terrific food, but they really became known for their dressings and sauces. And so much so that they started selling them outside of the restaurant. Fast forward, built a line above the restaurant and eventually built a plant. And fast forward today, we're a $2 billion in sales company, equally split between retail and food service, known within the retail channel for our dressings and dips, New York, Texas toast, and Sister Schubert rolls. But away from home, people probably don't recognize that we also make Chick-fil-A sauce, which is amazing, the whole line of Olive Garden dressings, Buffalo Wild Wing sauces, and a whole range of other items that they eat every day.
Dave, you just named off some of America's favorite sauces. You also left out Arby's sauce, which I'm a big fan of. But I have to ask,
absolutely,
why was the rebrand so important for the company?
Yeah,
it's a great question. And Marley, I think you can appreciate this. I think in America, period, but in food in particular, I think we live at a moment in time where clarity of communication is really paramount.
Oh, yeah, I've had
and
this.
We felt like this sort of dual structure between our holding company named Lancaster Colony and our operating company named Marzetti was really becoming a source of confusion. And we wanted to ensure, independent of whether we were talking to customers like a Chick-fil-A or to a mom in a grocery store or to one of our suppliers, prospective employees, or investors, that they really understood who we were and who we were going to aspire to be into the future.
And how much of that, Dave, was driven by the consumer and this increasing demand for this transparency and honesty, not only about where our food is coming from, but what's in it?
Well, we recognize it as really a critical component of what's going to be a broader communication strategy on our part. You know, we're proud of the food we make. We're proud of the ingredients that are in that food. And when consumers go out to research who we are, to understand who's behind that great tasting item, who's behind sourcing those ingredients, we wanted to make sure they could get to that information as easily as possible.
And as far as the tariffs go, this is a constant conversation that we're having right now. Are there any tariff concerns for the Marzetti company?
You know, Marley, it's pretty modest. If you look at it, we're a domestic company.
Did you say tariff?
5% of our sales are outside of the United States, all of that into Canada, and it's been USMCA compliant. Really, our exposure on tariffs is limited really to our suppliers, where we might be sourcing trays for Sister Schubert rolls, for example, or even some of the parent material that might go into packaging. But net, you put it together, fortunately, tariffs are really of more modest impact to us. What we're watching, and I think what probably a lot of your viewers are watching, is what is really the strength and disposition of the American consumer. And in that sense, we share the belief that they're continuing to reconcile with really the last couple of years of inflation and just making their family budget work around the kitchen table.
It's a constant conversation we're having, right? As spending patterns change and as the consumer changes, not only what they're purchasing, but what they're willing to put inside their bodies. You know, as far as your name change goes, what is your company growth outlook and how is the rebrand impacting that?
Yeah. So we continue to believe that even in this challenged environment, we can generate low single-digit volumetric growth, and we see room through productivity and other initiatives to be able to expand that as you go down the P&L from sales into gross profit and into operating income. And if you look at that versus the food space, we're one of the few companies that's continuing to be able to generate organic growth in this environment. In addition to that, if you follow us, we have a really strong balance sheet. We don't have any debt, and we have the ability to think about different sources of inorganic growth that could be a plus on top of that.
And would you say a primary driver of that is your licensing agreements? And do you have any new ones on tap or that you maybe plan to announce with your earnings?
Yeah, but when we think inorganic growth, we think both licensing or those strategic partnerships, but we also think M&A. I think the one that's the newest and one that we're extremely excited about is our partnership with Texas Roadhouse, which has just emerged as the fastest growing of the full service restaurants. And we just, I guess about a year ago now, started selling their rolls, which are unbelievable in retail. Right now, they're available in all Walmarts. We've
You waited all day for that.
4 states in the United States, and then in a month, in August, we're going to be making them available.
I did answer the question yesterday. I said, I don't know. I said we were close to resistance levels.
That's Dave Ciesinski, the president and CEO of the Marzetti Company. Coming up, we have Options Corner. Rick Ducat will join us to take a look at the airlines after Delta rallied today following its latest earnings report. Market on Close. We'll be right back. Stay with us.
Oh yeah, I was gonna. Oh heck! Look what time it is. Get ready, we're coming down to support. We have a gap play coming up. Ladies and gentlemen, please buckle up your seatbelts. We're about to hit the 200 SMA. Oh yeah, yeah. Get ready, ladies and gentlemen. We are looking at the 6285s at $1.80. Now I'll buy 2 contracts of the SPX. Make that more. See if we can get 5. 3 Black Crows off the 200 SMA into the gap. Do we have a problem? Jimmy's been waiting for the gap. We're now at 215. I never seen anything like it before in my life. Washboardjim has strange girls asking him to go out on WhatsApp. And she's a Ukrainian. That should be another red flag. Uh-oh, 245. Profit, please. Please take some profit. Do it. You just hit the 9 off the 200. We got 3 black whores into a gap. I swore I put that on here. They are now at 225. Now what the heck? The QQQ's at the EMA, the SPY's at the 200 SMA, and the IWM is at Head and Shoulders. Inverse. Right there. Right shoulder, head, left shoulder. Got to break the 200. We're now at 220 on these. $1.70 to 2.25. Thank you very much. And now they're at 240. 275, 2.40, 235, excuse me. Damn it, there it goes. To the 21. To 255. 170 to 255. To 250. He scalped some for pennies. Yes, he did. Darn, 280? Can you believe that? This is with the 280. Oh. $295. I'm done. I gotta retire. So let's talk about the gap. What was it? Why did I call it a gap? Okay, I got a problem. I called it a gap. I don't know why. Oh, I got it. I called it because of this here and this right here. Not really a gap, but so it's not really a gap, but I mean, I guess I could call it one.
This is a significant low point around these areas.
Yeah, it's certainly, and with Delta being one of the first to report for earnings season, we have quite a few more to come. And if they're in line with what Delta reported today and the research that's backing Delta's news, then airlines may be in for a little bit of a boon here. Thanks so much, Rick. We appreciate it. And coming up, we'll spotlight Ava. The LiDAR company has been surging this year as it's up over.
Now, when I debated the fat cats by not giving any forecast on the airlines, I said, you got to be kidding me. These places are packed. The airports are. They're packed.
Investments for me too.
Let's move on, shall we?
No can do.
I'll get out there.
Where are you going?
Schwab.
Carl's way is the best way. Boy, AMD really got the volume. 145 is my next resistance. Once we break this, 158, 148. Someone sees a 40% gain on AMD to $200. Oh, that was right. I didn't. $16 more minutes to go. We're at 390 on the 6285s. Beautiful call. Beautiful. Bespoke resistance. Nice. We have 16 minutes left.
We call it perception technology that is used, and LiDAR as part of that is in, for example, industrial sensing, where you're looking to really measure precise, micron level accurate measurements of the objects that are actually being used to manufacture parts. So we have, for example, partnerships with folks like Nikon, which is big in industrial, what's called industrial metrology equipment, SICK AG, LMI, a few others that are really actually going after manufacturing automation, which is the robots that actually make the parts. They make the vehicles, they make the different pieces of technology. And where that shines is being able to measure something from a distance at micron level accuracy. And that's something that's quite different. No LiDAR today can actually achieve that. And I think this whole breadth and flexibility of our perception platform is something that we are seeing that traction in that space. Another area besides industrial is actually around air transport. We have a collaboration ongoing with Airbus for ground taxiing operations. So that is basically obviously an important area where you have to be able to see everything on the ground to be able to monitor and do those automations. And so we are tackling multiple different areas, not just on automotive, but also industrial, as well as airport, and in other ways also security applications. So it's the breadth of kind of perception sensing is quite broad, and that's something that we have been planning on for quite some time in the past number of years as part of the vision for the company.
And as I'm looking at your chart right now, you're up more than 1,000% in the past year. Just the last 6 months, up more than 550%. What would you say are the major catalysts behind that massive growth?
Yeah, absolutely. Look, first of all, of course, we're pleased to see that, but this is by no definition, the destination. We're obviously on a journey to bring our product to mass market applications. We are really heads down and focused on delivering our product to the market. I would say there's maybe about 3 catalysts that.
Okay, AEVA is up 1,700% from 220 all the way up to 3880. 1,700% in less than a year. AEVA. 1, 2, 3, 4 months. Create an alert. I mean, it still would be up quite a bit, but 1,000%. $1,100. At the first pullback. We already had one. I missed it. It's right here. I don't know. We're back to support here. What time? I got 11 minutes. I ain't gonna mess with it no more. I've had too good of a day. Oh gosh, that thing dropped. Look at that knife. Well, I'm glad I didn't take it. But I didn't think it would go that down like that. Huh. Missed that. Nice.
S&P knocking on the door of an all-time high. What are your takeaways on the session?
Yeah, I mean, today, notwithstanding, because there's a little bit of weakness from tech, there actually has been a
Weakness.
pretty significant rebound in breadth for that sector. And it's not just driven by, when you think about NVIDIA for tech or even Microsoft for tech, it's not just a mega cap story or a single name story. The breadth in that sector, even in the industry for semiconductors, and importantly, has been pretty broad-based and pretty strong. You've got close to 80% of the names in that industry that are trading above their 200-day moving average. So I think that, a lot of the story with tech gaining a lot of momentum and even tech adjacent parts of the market gaining a lot of momentum recently is good in the context that the health of this rally and the broadness of it has broadly remained in there, especially with industrials and financials still showing relative signs of leadership and strength. I think it's a relatively healthy sign.
And Kevin, Nathan, is there anything that you're seeing in terms of the technicals for the S&P? We hit that intraday all-time high, but we're hoping for one at close. Not sure what. Oh, we might get there as I look at the board.
Well, first I'll say, momentum begets momentum. The trend is your friend. The dip buyers are getting rewarded. As long as they continue to get rewarded, it's really difficult to kind of, break them free from that buy key. But I will say this on the technicals, last week, we did get some consolidation, a little bit of a pullback earlier in this week. We were at a 75, 76 RSI on the S&P 500. It's funny, Marley, if you go back to last summer, we had a similar type of a melt up and we ran up to roughly an 81 RSI in the S&P 500. We got a little bit of a pullback. We got new highs in the S&P, which was met with a relatively lower RSI reading. That's called a negative divergence. And from there, the markets rolled over. Now, it was tied, that was the excuse, I believe, to the unwind of the yen carry trade. But what you want to look for from a technical perspective is either a negative divergence in the RSI. You can't say that it's happened today, because if we continue to move higher in the coming days and we establish a new RSI, that will negate the negative divergence. So just keep it on your watch list. The other thing that I might look for is some type of those reversal patterns on the charts. Get your candlestick charts out. You can look for something like a shooting star, a dark cloud cover, a gravestone doji, a bearish engulfing candle, or you could also look for the stock market selling off on good news, which right now we're in this good news is good news, bad news is good news, any trade deal is clarity. Look for that sentiment or that price action. Look for the price action to tell you that potentially we might have a shift, because seasonality is about to not be our friend here in the coming weeks. We'll see if earnings will be enough to kind of keep this momentum going up into August.
And Nate, staying with you for a moment, I know we were slightly overbought coming into this week. Are we seeing consolidation, and are we trending bullish or bearish?
Yeah, we got some consolidation at the beginning of the week. We did get
we did.
Digestion. Now, look, you can consolidate by going down or you can consolidate by going sideways. But right now, for example, the RSI, the relative strength index on the S&P 500 is 71. If you look at the S&P 500 over the past 5 years, it doesn't spend a lot of time over 70. Generally, when you get to this area, you tend to get some kind of consolidation or pullback to digest some of those gains, take some of those profits. If you look over the last 5 years in terms of what are the extremes, we just hit 76 last week. Well, we've been at 82, 81, and 82 3 times over the past 5 years, one being last summer in July. It feels a little bit similar to that. And then the other two going back to 2023 December, and then back to September of 2020. So just keep in mind, are we overbought? Yes. Does momentum persist? Yes. Are you going to get a bell where everybody tells you, okay, it's time to mean revert? No. So it's up to the individual trader to keep an eye on the charts, on the price action, on that negative divergence in the RSI.
Thanks, Nate. And Kevin, coming back to you, we did get some, it's pretty sparse in terms of data right now, but we did get initial claims. Was a decent report. They came in under estimates, pretty significantly under estimates. But I would love to get your overall thoughts on the labor market right now.
Yeah, I mean, the split in claims between initial and continuing is really what the big story is. I mean, has been for pretty much the entire year. I mean, initial claims, even in the times that they've risen earlier this year, that's been mostly reflective of a seasonal pattern that you tend to see heading into the summer. Now we're at the sort of back end of that, where you tend to see that pressure ease a little bit, where initial claims roll over. The weaker spot has been in continuing claims. So the people who just can't find another job and have to stay on that unemployment insurance. Continuing claims hit a news cycle high, this past week. So there is still a lot more stress exacerbated by that low hiring, low firing environment, where if you have been in the unfortunate position of losing your job, it's just a much harder and much more difficult environment to get another job. But that's not necessarily consistent with the broader economy or broader labor market, falling apart all at once, which is what you tend to see, when you're going into a recession. So that split is really important to highlight, because there's really only so long that you can last with continuing claims drifting higher and making a news cycle high while initial claims stay relatively low. But we also know that post-COVID has been a relatively unique set of circumstances for the broader economy, but also for the labor market. So I think the pressure point and the weakness for continuing claims is notable, but it's not alone probably enough to drive us into a full-blown labor cycle and then into a recession. So I think that differential, at least for claims data, is going to be really important moving forward.
Well, thank you, Kevin. A unique set of circumstances is a phrase I think we could apply to a lot of things right now as we discuss markets and finance. But I want to thank you both for your time, Kevin Gordon, Charles Schwab, and Nathan Peterson from the Schwab Center
You're not
for
no
Financial
Caroline.
Research. And coming up, the bells are about to ring on today's session. We'll bring in our closers panel to break it down. Market on Close. We'll be right back.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Accelerate your market knowledge and shift your perspective.
Really a fun day today. I'm trying to get this. I've really not noticed this lately, but I have here lately, that I'm being a little bit more patient and I'm not working as hard. So I'm being a little bit more patient. I think, my average trade per day are down about 2 to 3 trades a day. But today was a real good day. I went against the wind one time and held my call puts and was able to get out of it. And then we had the reversal to the upside. But I was kind of worried about them. Then I just went ahead and pulled it out. But I hardly ever use stops anymore. Something was asked in here, and it's nothing that you'd want to give anybody advice for. But I've just got into trading like the billionaires and the millionaires, where they just add on. They think they're in a good place and just add on. That's all they do. You ever hear them selling at a loss? Hardly ever. That's how the billionaires trade and how the millionaires trade. But you got to be patient. So I'm going to get out of here and watch some YouTube, and I feel a lot better. I don't know what was going on with my personal body there, but so I think think that's about it. And we'll catch y'all later, YouTubers. Time to watch my YouTube, and let me enjoy my sleep. I have real good dreams at night, so I've been listening to the Bible channel. I haven't turned anything on but that Bible channel for the last 5 months. Sometimes it gets a little annoying because the way they preach, I don't like to be preached to like that sometimes when they but I want to learn a little bit about the Bible. I don't know enough about it. This morning I was thinking, was this guy nuts? Was God actually a nut? Because there's so many out there right now. I mean, we've had cults and stuff like that before. But we'll find out. And there's only 85 degrees outside, and it felt like it was 110. I have a feeling, it's going to be one of them kind of summers, or it's been a late one. I mean, we could have a couple real hot summers, hot months, a couple real hot ones, hotter than usual, just like the rain we've had. So, I don't think I'm going to get anything to eat. I got to lose about 3 pounds. If I'm going to go see the doctor, she's going to play with my belly. I want to get rid of a couple of them lumps down there. I never had a doctor play with my belly like that before. That's kind of strange. I wish I don't know. I would have almost winked at her if I'd thought about it. Are you trying to hint? Is this a hint? Okay. Bye-bye.